Hello, my dear CA final students appearing for November 24 exam. So, the most awaited MIGHTY50 video discussion. So, many students ask me, so MIGHTY50 you have posted PDF but you have not yet updated the videos. But actually, boss, it is already there in Rocket Revision. So, if you see my Rocket Revision videos of November 24, so in that you can identify the questions of MIGHTY50 which is already discussed along with the concept, because only theory discussion will be boring. So due to that reason I have incorporated the problems and solutions in respective places. So approximately 30 plus questions were already covered and remaining questions I gave for practice. Nevertheless, as per the students request, I'm just updating so those questions also into my discussion, and I am giving you a separate video. So whatever is there already in Rocket Revision I have taken from there, and I will be incorporating in this video, plus other questions I'll be covering up in the discussion. Okay, so without further delay, quickly let's proceed to the MIGHTY50 Q&A. And disclaimer, so this MIGHTY50 question and answers may be important for exam but does not mean that this will only be sufficient for exam. What I have done is that all critical concepts which were not tested in May 24 exam, so that could be tested in November 24 exam, I have included. So you can see the index related to this. So this is the MIGHTY50 index. So covering all the areas, it's not just on one exemptions in GST or valuation under customs alone. So I have given almost all areas. Actually, these are the areas which were not tested in May 24 exam. So there is a chance of asking questions for the forthcoming exam, that is November 24 exam. But this video is exclusively for CA final students only. CMA final students cannot make use of this video because so the exam pattern and the type of questions that is asked in CMA final is completely different from CA final due to that reason. And where to get this PDF? So don't worry, you can check the description to this video. Also, it is there in the downloads in my website. So in my website tharunraj.com, under the downloads you can find this MIGHTY50 questions. Also it is there in the description. And so this question number 1. So first 10 questions I have given on customs and FTP, and then the remaining questions is on GST. So question number 1. So this question is related to computation of value on which custom duty is payable. So in this, quickly I am reading the question. Product Z was imported by Mr. X by air. So whenever you see that the product is imported by air, automatically you need to keep in mind one point, that is air freight will be actuals or 20% of FOB, whichever is lower. The details of the import transaction are as follows. Price of Z at exporter's factory. So here they have given the factory information. So factory gate means, remember there is one important adjustment related to this, and freight from factory of the exporter to the load airport, that is in the exporter's country. Loading and handling charges at the load airport $250. Freight from load airport to the airport of importation in India 4,500. Insurance charges 2,000. So now first we need to arrive at the FOB. So what is the X factory price? So the X factory price, if you see, that will be $8,500. To this X factory price, we need to add, transportation up to load airport. Okay, transport up to load airport. What is the transport up to load airport? So that will be coming to $250 plus loading charges, so that loading charges comes to $250. So this will be called as FOB price. So FOB price is actually X factory price plus loading charges plus cost of freight up to the port or airport of the exporter. So in this case the FOB price is $9,000. Okay, and to this FOB price we need to do the adjustments as per rule 10 sub rule 1. So then we will get the FOB price as per customs. Here in the given question, we don't have any expenses like that which is incurred by the exporter recovered from the importer like that. So therefore we don't have any adjustment. So this itself is the FOB price as per customs. When it is FOB price as per customs, so we need to add to this freight and insurance. First we will take air freight. So how much will be taken as air freight? Air freight will be actuals. So how much you will take as actuals? Be careful. The actuals, when you are comparing with 20% of FOB, we need to take from the factory gate of the exporter. So what is the factory gate of the exporter means? So 250 plus 4,500, everything should come. Okay, this 250 and 4,500, everything should come here. So therefore actuals will be $5,000. Okay, how $5,000? Simple, 4,500 plus 250 plus 250. So $5,000 is taken. B. But sir, in this 250, 250 already there in FOB, na? Yes, of course. So first we will do the computation and then we will deduct that $500. Then 20% of FOB. So what is that 20% of FOB? So 9,000 into 20%. So that is $1,800. So whichever is lower. Okay. So whichever is lower. So which is lower in this case? That is 1,800. But already we considered 250 and 250 into FOB. So we need to reduce that. Minus already considered in FOB. Already considered in FOB. How much is that already considered in FOB? That will be $500. If you reduce it, so $1,300 will be taken. Is there a possibility that, sir, it can be negative? Yes, there is a possibility that this can be negative. So what will happen? Whichever is lower, minus already considered in FOB, if you reduce, na, it may become negative also. There is a possibility like that. Okay. So, but usually it will not happen, but rarely it will happen. But that possibility cannot be weeded out. It is there. Okay. And then insurance to be taken. How much is insurance? Actuals is ascertainable. So therefore, as actuals is ascertainable, so we will be taking actuals. So actual insurance. So what is that insurance? So that will be $2,000. And when you add this, so we don't have anything else. Okay. So when you add this, you will be getting the CIF price. This CIF price, also known as assessable value. How much is that? So 9,000 already we got FOB plus 1,300 plus 2,000. So that will come to $12,300. So $12,300 is the CIF price. Now we need to. So actually what we can do in exam, parallelly we can prepare two columns. One is for foreign currency, another is for Indian rupees. Like that parallelly two columns we can prepare, and in that itself we can incorporate. Okay. So therefore 12,300 convert into Indian rupees. For that we need the exchange rate. We need to take the exchange rate prevailing on the bill of entry. So what is the bill of entry date? The bill of entry date is 28/2021. On the 28/2021, the exchange rate notified CBIC only should be taken. That is 60 rupees. So into 60, that will be, so 12,300 into 60 rupees, that will come to 7,38,000. So therefore, what is the assessable value in Indian rupees? 7,38,000 is the assessable value in Indian rupees. That should be taken as the answer. So you can see here 7,38,000. And thereafter customs duty computation, it is simple. First, for purpose of customs duty computation, we need to take, so basic customs duty rate. Which is a basic customs duty rate? So date of presentation of bill of entry or arrival of the aircraft, whichever is later. Which is later? 22/8 is later. As on 22/8, what is the basic customs duty? 10% that should be taken, and IGST is 12% that should be taken. So now the next one is computation of customs duty. We got this. So basic customs duty will be 10%, 73,800, and social welfare surcharge, whether it is given in the question or not, we should always take 7,380. So when you add this, you will be getting the subtotal for IGST. So 7,38,000 plus 73,800 plus 7,380 into 12% IGST. So this is the total customs duty that will be payable. Okay. Accordingly, we need to give the notes also in this. So this is one area which can be tested. So already I gave the reference also. So solved workbook question number 6, it is in which page number of your solved workbook. So if you are already solving these equations in the solved workbook, you can even mark it from there itself, so that it will be useful for you. Okay. Also one more thing, at the end of this page, okay, like at the end of this PDF, I have given important theory questions or concepts. You can just go through this for, like theory questions or application based questions. You can see this. So these are some areas, like some 10 areas for customs and FTP and 20 areas for GST I have given. Okay. Mr. X imported certain goods from a related person, Mr. Q of US, and transaction value has been rejected. So it is import. Import, transaction value rejected. Rule 4 and 5 of the imported valuation rules are found inapplicable. So identical goods also failed, similar goods also failed, as no similar or identical goods are imported into India. Mr. X furnishes cost related data of imports and requests customs authorities to determine value accordingly as per Rule 8. The relevant data are: cost of materials incurred by Mr. Q is 2,000. So we need to take the computed value. In computed value, we need to start with the material cost. and add everything, but ensure that post importation expenses you are not taking. Got it? So whether it is pre-import or post-import, cost of material incurred by Mr. Q is pre-import or post-import? Pre-import, before import. So we need to take that 2000 we will take. Next, fabrication charges incurred by Mr. Q, pre or post? Pre. So therefore we need to add this 1000. And other chargeable expenses incurred by Mr. Q, pre or post? Pre. So therefore 400. Q is exporter here. Q is exporter. Other indirect costs incurred by Mr. Q, 250 pre-import. And freight from Q's factory to US port. Yes or no? Should it be taken in FOB? Yes. So plus 250 plus loading charges at US port. Is it also his cost? Yes. So plus 100. Now what we got? 4000. Is 4000 FOB? No. Still we have not added profit. Still we have not added profit. 4000 is his cost. Whose cost? Q's cost. Q's cost. Now we need to add the profit. Sir, what about air freight and insurance? This is afterwards. Afterwards we will get the air freight insurance after ascertaining the FOB, correct or not? So therefore we should not take it now. So we need to take the profit. So how much is the profit? 20% of FOB. But what we got is cost. So after you add profit only you get the FOB. So if 20% is on sales, FOB is selling price. If 20% profit is on sales, then how much will be on cost? 25% on cost. Let sales be 100, profit is 20 on 100. So but cost on cost means 20 by 80. 20 by 80 is what? 25%. So therefore what is the cost that we have got so far? $4,000. For this $4,000, add 25%, that will be $5,000 is taken as the FOB price. Are you understanding this? So $5,000 is the FOB as per customs. To this, we need to add freight and insurance because everything should be taken up to the importation place, correct? So what is the insurance? What is the insurance? Ascertainable or not ascertainable? Ascertainable. So we will take 50. So far we have got in this $5,000 as the FOB, correct? FOB price we got as $5,000 and insurance we need to take. What is the insurance? $50. And air freight also we need to take. What is air freight? Don't take fully. We have to compare actuals. What is actuals? What is actuals? How many times should I tell you? X factory price is given here. X factory price is given. We have calculated from the factory gate. So we need to take actuals as freight from factory gate of the exporter, that is 250 plus 100 plus 1500. 250 plus 100 plus 1500. How much it will be? $1,850 or B 20% of FOB. What is 20% of FOB? $1,000. Whichever is lower, which is lower? Whichever is lower, that is $1,000. And to this 1000 minus already in FOB. What is already in FOB? 350. This 250 and 100, 350. Then how much will be taken as air freight? $650 will be taken. Now what is the CIF price? Because we don't have any other cost. In the question we don't have any other cost. So therefore how much will be taken? 5,700 into what is the exchange rate given in the question? 70 per dollar. So into 70, that will be 5,700 into 70, 3,99,000 is taken as the assessable value as per deductive value method. But see the point below. The customs authorities are of the opinion that since a value as per rule 7 can be determined at 4 lakhs, that is deductive value can be determined at 4 lakhs, there is no need to apply rule 8. True or false? False. So even if the deductive value is applicable, it is up to the importer to choose either computed value or deductive value. But in this case, as the computed value is less than the deductive value, 3,99,000 only will be taken as the assessable value for payment of customs duty. Is that clear? So see the answer for this. Question number 22. Clear? 3,99,000 is taken as the answer. Understood? And that paragraph we need to write. What is that paragraph? So as per rule 6, the importer can choose either deductive value or computed value. Okay. Gregory Pegg of foreign origin has come on travel visa to tour in India. He carries with him as a part of baggage the following. Travel souvenir 85,000. What is your answer? Exempted. Exempted. Travel souvenir is exempted. Other articles carried on in person. Dutiable. How much? 1,50,000. Dutiable. Thereafter we will get the allowance. Okay. But dutiable. Okay. Then 120 sticks. But for this 1,50,000 can they claim general free allowance? Yes. No issue. 120 sticks of cigarettes of rupees 100 each. 12,000. We need to divide into 2. 100 will be eligible for GFA, 38.5%. Remaining 20 not eligible for GFA, 110%. So firearm with 100 cartridges, value includes the value of cartridges at 500 rupees per cartridge. So 100 into 500 is how much? 50,000. 100 into 500, 50,000. But the value given is 1 lakh. So in that 1 lakh, if 50,000 is cartridges, what is remaining 50,000? Firearm. So firearm 50,000. Cartridges 100, but in that 50 eligible for GFA, remaining 50 not eligible for GFA. Determine customs duty payable if the effective rate of customs duty is 38.5% inclusive of social welfare surcharge with short explanations where required. Ignore agriculture infrastructure development cess. Whether we need to pay any IGST? No. Just the 38.5% only. On the top of that, we don't have to pay any IGST. Now tell me, by reading this question, what is the general free allowance that is applicable in this case? What is the general free allowance? 50 or 15? He is coming from Nepal, Bhutan, Myanmar or other? Other. But he is a tourist of foreign origin. As he is a tourist of foreign origin, the applicable amount of general free allowance will be up to 15,000. So now, how to present this in exam? First, we need to prepare a table, particulars, then eligible for GFA, eligible for general free allowance, not eligible for general free allowance, not eligible for general free allowance. In this eligible for general free allowance, what is the rate? Always 38.5%. Not eligible for general free allowance divided into 2. Rate will be 38.5%, some articles are there, and 110% also some articles are there. Okay. Now, what is the first article that we have? Travel souvenirs. Travel souvenirs is exempted. So we don't have to bother about this. And other articles 1,50,000, but it is eligible for GFA. You put it under eligible for GFA. And next, what we have is cigarettes. Cigarettes 12,120 sticks. So cigarettes 100 sticks will come here. 100 sticks into what is the price? 100. That will be 10,000 eligible for GFA. Correct? And remaining 26, where it will come? 110 or 38.5? 110. So 20 into 100, that equals to 2000. Understood, pa? Next, what is the next one? Firearm. Already we know the firearm value will be 50,000. Where it will come? Not eligible for GFA, 110%. Cartridges of firearm. Cartridges of firearm, 50 cartridges into, so 500, that will be 25,000 eligible for GFA. Remaining 50 cartridges not eligible for GFA, 25,000. Now, anything that is left in this question? That's it. So now we need to do the total of these 3 columns. First case 1,50,000 plus 10 plus 25,000, that is 1,85,000. Here 0. Whereas here 50, 25, 75 plus 2, 77,000 minus general free allowance. What is the general free allowance? Only 15,000. But here we don't have any general free allowance. And is there any other allowance possible? Jewelry allowance is possible. Jewelry allowance is possible in this case. No, jewelry allowance is only for the Indian passenger. And whether transfer of residence is applicable in this case? No, because that is also for the Indian passenger. So both are not applicable. So therefore this is the allowance that we have. So what is the dutiable value? Come on here, 1,70,000 and here it will be 77,000. And what is the baggage duty? What is the baggage duty? 38.5%. 1,70,000 into 38.5%, 65,450, and 77,000 into 110%, that is 84,700. You understood? Don't total it, just show this separately. So don't total it in exam, show separately. Baggage duty at 38.5% is 65,450, at 110% is 84,700, because if you see the question, specifically they asked, so what is the custom duty payable if the effective rate of custom duty is 38.5%. So means they are asking only that 38.5% component, that is 65,450. So because if you see the answer for this 27th question, they would have given 65,450. You understood? That 110% they did not give, but they gave it as a note. What we will do, we will total this and we will write, because of which unnecessarily we will lose the marks. For doing perfectly also sometimes they will reduce the marks. Okay, so that's why better not to do that, because the question is asking only about 38.5% rate, so that only we will do. Is it clear? Then another question we will see, one more question on baggage. Now we are moving on to the fourth question. Fourth question is related to baggage. Mr. X, an Indian resident, returns to India on 10/4/2021 after visiting France for 3 months. So Indian resident, so keep that in mind so that it will be useful for general free allowance. Visiting France for 3 months, on his return to India, he brings with him the following articles. Used personal effects like clothes, etc., valued at 1,75,000. So this 1,75,000 will be completely exempted. So because used personal effects will be exempted. Music system valued at 1,20,000, so it will be dutiable. Okay, and but of course general free allowance can be claimed. So how much is the general free allowance? He is an Indian resident. Indian resident, which means, and he is coming from France. So other than Nepal, Bhutan, Myanmar, so the general free allowance will be up to 50,000 rupees will be the general free allowance. And jewelry allowance is not applicable to him because he is coming after 3 months. So 3 months means jewelry allowance will not be applicable. So therefore entire 1,30,000 will be dutiable. There is no jewelry allowance in this case. Laptop, yes, that laptop can be claimed as exempted. One laptop for a person aged more than 18 years is eligible for this laptop exemption. So definitely, so his age will be more than 18 years. So they have given that Mr. X, an Indian resident, like that. So due to that reason, so wine 1 liter worth 6,000, so it will be dutiable. And mobile phone worth 50,000. Now you will get a question. So won't the mobile phone come under used personal effects? Actually mobile phone is a used personal effect. But if the mobile phone is a used personal effect, it would have been already included in this 1,75,000. Why they are giving separately? If they are giving separately, which means that, so definitely it will be a new mobile phone. So due to that reason, it will be dutiable. Keep that in mind in exam also. So yes, mobile phone is a used personal effect. But if it is a used personal effect, it would be already covered in 1,75,000. If it is given separately, means it's a new one. So that will be dutiable. So what are the dutiable items? So 1,20,000 plus next one we have this 1,30,000 jewelry, and 6,000 will be wine, then 50,000. So total 3,06,000. So 3,06,000, you can see here 3,06,000 and less general free allowance of 50,000. So 2,56,000 and 38.5% is the baggage duty and 98,560. In this regard, the noteworthy point is that in case of 3 articles, what are those 3 articles? Firearms, cartridges of firearms exceeding 50, and cigarettes exceeding 100, tobacco exceeding cigars exceeding 25, and tobacco exceeding 125 grams, it will be 110%, and general relevance not applicable in that case, but up to the limit. For example, cartridges up to 50, yes, the rate is 38.5%, we can claim general relevance. Cigarettes up to 100, cigars up to 25, and tobacco up to 125 grams, we can definitely claim general relevance, and the rate will be 38.5%. Only when it exceeds. For example, we have imported 200 cigarettes. 100 cigarettes will be 38.5 and remaining 100 will be 110%. Just keep that in mind. Maybe that point also could be tested. This is standard question. Very important question. Not tested in new syllabus. So definitely there is a chance of asking this question. Vipul imported certain goods in May. An into-bond bill of entry was presented on 14th May and the goods were cleared from the port for warehousing. Assessable value on that date was $1 lakh. So a person has imported the goods and they filed a into-bond bill of entry, and what is the assessable value on that particular date? $1 lakh. The order permitting the deposit of goods in the warehouses for 4 months is issued on 21st May. What is 21st May? Warehousing order. Warehousing order is 21st May. What is the period that is permitted? 4 months. But usually what is the period that we have for deposit of goods in a warehouse? 1 year. So, but I told you, in case of perishable goods, considering the nature of the goods, they may reduce the period to less than 1 year also. So, in this question, they have reduced it for 4 months. Then, Vipul deposited the goods in the warehouse on the same day, but did not clear the imported goods even after the warehousing period got over. When the goods are, that is to be cleared from the warehouse? 21st September. How 21st September? What is the warehousing order? 21st May, 4 months. So, June, July, August, September. By 21st September, they should have cleared the goods, but they have not cleared it by 21st September. So, means warehousing period is expired. Now, what does the Kesoram Rayan case says? On expiry of warehousing period, the goods are said to be improperly cleared. And a notice was issued under section 72 of the Customs Act demanding duty and interest. But they have not cleared now, deemed to be cleared. They have not actually cleared, but the goods are deemed to be cleared. That's why they got a notice. Vipul cleared the goods on 14th October. What is the date on which they are actually clearing? 14th October. Compute the amount of duty and interest payable by Vipul while removing the goods on the basis of the following information. So, on 14th May, 21st September, 14th October, we have different exchange rates, different rate of basic customs duty, and integrated tax is exempt. So, we don't have integrated tax, that is the IGST we don't have. Ignore agriculture infrastructure development cess. Now, can we do this question? So, kindly take your book. First, I need assessable value. What is the assessable value? $1 lakh, but that should be converted into Indian rupees. So, what is the relevant exchange rate? 65.2 or 65.4 or 65.5. What is the relevant exchange rate in case of warehoused goods? Into bond bill of entry. What is the date on which into bond bill of entry is presented? 14th May. As on 14th May, what is the exchange rate? 65.2. So, that should be taken. Write down. Relevant exchange rate. Relevant exchange rate hyphen. Relevant exchange rate hyphen into bond bill of entry, that is relevant exchange rate hyphen into bond bill of entry, that is 65.20 per dollar. 65.20 per dollar. Are you understanding this? Then second, what is the relevant date for rate of duty? Next line, relevant date for rate of duty. Relevant date for rate of duty. Usually what is the relevant date? At the time of clearance from warehouse. But because of Kesoram Rayan case, we should take 21st September. Write down. Relevant date for rate of duty 21st September hyphen 21st September, that is 10%. 10%. In brackets, Kesoram Rayan case. Usually we will take 12% at the time of actual clearance. But because of Kesoram Rayan case, we are taking 21st September. Kesoram Rayan case. Now, what is the assessable value in Indian rupees? Assessable value equals to 1 lakh into 65.2. 1 lakh into 65.2. 65 lakh 20,000. and compute the customs duty payable. Basic customs duty 65,20,000 into 10%, 6,52,000. Next line, social welfare surcharge 65,200, and IGST we don't have. So total customs duty payable 6,52,000 into 11%, that is 71,000. 7,17,200, correct? Now 7,17,200 is the total customs duty payable. Now we need to compute the interest. Now what is the period for which we need to compute the interest? After 90 days. So first you compute from the date of warehousing order to the date of actual clearance. So write down next line, number of days from the warehousing order, till actual clearance, because we need to pay interest till the date we actually pay the customs duty. When are we actually paying the customs duty? 14th October. So till 14th October, number of days from warehousing order till actual clearance, that is 21st May to 14th October. 21st May to 14th October. 21st May to 14th October. How much? 21st May to 14th October. So in the month of May, 31 minus 21, you count from 22, 10 days in May, correct? And in June 30 days, July 31 days, August 31 days, September 30 days, October 14 days, that will be 146 days, right? 146 days. 146 days minus interest-free period. What is the interest-free period? 90 days. Balance days for which interest is payable. 56 days. Therefore, interest payable equals to, interest is payable on what? Customs duty. Interest payable equals to that 7,17,200 into, what is the rate of interest? Remember, 15%, don't get confused. Usually you will take 18% because of GST impact, but in customs the rate of interest will be 15% into 15% into 56 divided by 365. How much? 16,505. See the answer in the screen. So first we have computed 7,17,200. And you need to definitely write this Kesoram Rayan case. Okay? Kesoram Rayan case you need to apply. You have to write a note related to that. And thereafter, you need to do the interest computation. Interest computation is for 56 days. And the interest payable will be 16,505 rounded off to nearest to 1 rupee. Is it clear? So that is about this warehousing question. So look into the question number 6. Examine the validity of the following statement. A beneficial owner of imported goods is a person on whose behalf the goods are being imported. So basically this is on the definition of importer. So importer means the one who is importing the goods, or the person on whose behalf the goods are being imported. The beneficial owner will also be treated as importer, and the person who is holding himself to be the importer is also called as importer. Generally in case of merchant imports, that is, we will not be able to have the import because of license requirement under FTP. So we will authorize some other person to import because that person will be having the license. So in that case, we are the beneficial owner and they are holding themselves to be importers. So we both will be called as importer. Yes, the statement is valid. So beneficial owner means any person on whose behalf the goods are being imported or exported and who exercise effective control over the goods being imported or exported. So will be called as beneficial owner, and that beneficial owner will also be treated as importer. Okay. Then customs area does not include a warehouse, not valid. So warehouse is also called as customs area, even though warehouse is not owned by the customs department but licensed by the customs department. But customs warehouse is also area, customs area, and that's where in case of goods imported and kept in the warehouse, we are not required to pay the customs duty. Only when we are clearing the goods from the customs warehouse, we are required to pay the customs duty, because when the goods are deposited in the warehouse, it is still under the customs control. Okay, so therefore this statement is not valid. The definition of customs area includes even customs warehouse also. So customs area is defined to mean area of customs or a warehouse and includes any area in which import goods and export goods are ordinarily kept. So even the custodian place where the goods are kept, imported and kept, is also coming under the customs area only. And then customs station includes international courier terminal. Yes, so there will be in airport one particular terminal, like one particular gate will be dedicatedly given for courier imports and exports. So that will be called as international courier terminal. Yes, it is also coming under the customs station. So all the custom formalities will be done in that place. International courier terminal and foreign post office are included within the scope of customs station. And a customs station means customs port, customs airport, international courier terminal, foreign post office. If you are importing by land route, then the area will be called as land customs station. Have a look into this question. Concon Corp. Question number 9. It's an RTP May 20 question, and thereafter they have not asked this. Concon Corp has imported a machine from USA for rupees 365 lakhs on payment of appropriate customs duty in February. However, in July, the machine has to be sent back to the supplier for repair. This is the notification which we have just now seen. Notification 45/2017. That is, first we have imported the goods. After importing the goods are exported for the purpose of repairs. And again we are re-importing the goods. Then what is the customs duty that we need to pay? So from the factory of Concon Corp, the machine was repaired and thereafter re-imported by Concon Corp in the November next year. What is the time limit within which the exported goods should be re-imported? 3 years, and it can be extended for a further period of 2 years. So 3 years plus 2 years. Is the time limit fulfilled? Yes. Then the supplier has agreed to provide discount of 60% of the fair cost of repairs, resulting in Concon Corp paying US dollars 12,000. Following further particulars are available: bill of entry, arrival of aircraft. You tell me how much should be taken as the fair value of repairs? Can 12,000 be taken as the fair value of repairs? No. 12,000 cannot be taken as the fair value of repairs because 12,000 is after a discount of 60%. So we need to take the fair value of repairs. So means this 12,000 is actually 40%. So 12,000 divided by 0.4. So therefore fair value of repairs will be $30,000. Following further particulars are available. So particulars: bill of entry, arrival of the aircraft. So which should be taken as relevant date for determination of rate of duty? Bill of entry date or arrival of the aircraft, whichever is later. Which is later here? 26th February is the later date. On that date, whatever rate is there, that should be taken. And exchange rate should be taken on the date of bill of entry, that is 62 rupees per dollar should be taken, and IGST will be 12%. And they have given freight and insurance outward as well as inward. So first we need to take fair value of repairs. What is the fair value of repairs? $30,000. So 12,000 divided by 0.4, 12,000 divided by 0.4, that is $30,000, multiply with 62. So 30,000 into 62, that will come to 18,60,000 plus freight and insurance both ways, add these two. So 18,60,000 plus 23,000 plus 93,500 plus 27,000 plus 21,10,000, that will be taken as the value, on which in the IGST we need to take 12%. So assessable value 21,10,000 plus 3,16,500 plus 31,650, 24,58,150 into 12%, that is 2,94,978. If you total this, that is the total customs duty payable. Plus we need to write the conditions. What are the conditions? The time limit for re-importation is 3 years, and the exported goods and imported goods must be same, and ownership of the goods should not have been changed. So that is about this. You can see here, it's a December 21 exam question. For 5 marks they have asked. Supreme car decars imported car music systems and GPS devices from Germany. The importer submits the following issues for your consideration. 7 music systems were pilfered before unloading, and before the proper officer has made an order for clearance for home consumption. Actually, pilferage should have happened after unloading and before order for clearance. But before unloading itself, if the pilferage has happened, actually there is no levy for payment of customs duty because of that Mangalore refineries case. Is it clear? But in that suggested answer, what they are telling is that pilferage can be claimed like that they have mentioned. But this is actually the answer as per suggested. But reality, suppose if the same question you get now. What you need to write? First you need to write for this, if the pilferage has occurred before unloading, there is no levy of customs duty under section 12 as held by Supreme Court in Mangalore refinery's case. Accordingly, customs duty not payable. However, if the customs department insists on filing bill of entry for all the goods, then in that case we can claim the pilferage under section 13. Like that you need to write. Don't write directly pilferage. Mention about that Mangalore refinery's case, and thereafter if the customs department insists on filing bill of entry for all the goods, then we can claim the pilferage under section 13. Then 10 GPS devices were pilfered after unloading and before the proper officer has made an order for clearance for home consumption. So can we claim pilferage? Yes. Here we don't have to write about Mangalore refinery's case because after unloading, before order for clearance. And 30 music systems were damaged. See the wording? Damaged. So after unloading and examination for assessment by the customs authorities, but before actual clearance. In this case, can we claim pilferage? No. In case of damage, we need to claim abatement. So therefore, we need to write about the provisions of abatement. So like that, depending upon the situation, you need to apply the relevant section. Okay. Maurice Lal has imported goods from Germany and is finally reassessed under section 18. Means what? Provisional assessment. Section 17 is self-assessment. Section 18 is provisional assessment. Section 18 of the Customs Act, for two such consignments, particulars are as follows. Date of provisional assessment is 12th December. Date of final reassessment is 2nd February. Duty demand for first consignment 1,80,000, refund for second consignment 4,20,000. Date of refund made by the department 28th April. Date of payment of duty demanded 5th February. So now determine the interest payable and receivable. For the first consignment we will see. For the first consignment, what is the differential amount payable? 1,80,000. And we need to compute interest from which date to which date? What is the date of provisional assessment? 12 December. But we need to compute interest from 1st December till the date of payment of the duty, that is 5th February. So from 1st December, December 31 days and January 31 days and February 5 days. So we need to compute interest for 67 days. That is 1,80,000 into 15% into 67 divided by 365, 4,956. Whereas in case of refund, what is the time limit within which they need to grant the refund? So 3 months from the date of final assessment. So what is the date of final assessment? 2nd February. From 2nd February, you count 3 months. 2nd March, 2nd April, 2nd May. And when are they giving the refund? 28th April. Is it within 3 months? Yes. So whether they need to give us any interest or not required to give interest? Not required to give interest. Got it? So mainly like this, on this provisional assessment, etc., we will get questions like this. Mr. X, a chemical manufacturer, imports a machine from Germany on 12th January 2019 for rupees 20 lakhs. Mr. X is eligible for concessional rate of customs duty on capital goods imported by him, subject to the condition that he follows the customs import of goods at concessional rate of duty rules 2022. So what is the date on which he has imported? 12th January 2019. What is the value at which he imported? 20 lakhs. And what is the date on which machinery is put to use? Machinery is put to use from 1st February. For depreciation computation, we need to calculate from 1st February. On 5th April 2022, Mr. X wants to clear the machine for home consumption after having used the machine for the specified purposes for which it is imported. So they imported and they used it and they are selling it on which date? 5th April 2022. And Mr. X want to clear the machine for home consumption. Mr. X requires your help in calculating the customs duty he will be liable to pay for such clearances as per Rule 7 of Customs Import of Goods at Concessional Rate of Duty Rules 2022. Concessional rate of basic customs duty is 5%, normal rate of basic customs duty is 20%. Calculate the basic customs duty payable by Mr. X on clearance of such goods for home consumption on 5th April 2022. Ignore interest computation. They are not asking us to calculate interest. First, we need to compute the depreciated value of the capital goods. What is the date from which we need to count the depreciation? 1st February 2019. So what is the first year? What is the first year? 2019. Then 2020, 21, 22 and 2023. 22 only, na? Yes. So 2019 means they are using it for 4 quarters in 2019, and 2020 also 4 quarters, 21 also 4 quarters, but in 2022 5th April, that means 2 quarters. So for every every quarter or part thereof in the first year, it will be 4%. For every quarter or part thereof in the second year and third year, it will be 3%. For every quarter or part thereof in the fourth year and fifth year will be 2.5%. So 4 into 4, 16%. 4 into 3, 12%. 4 into 3, 12%. And 2 into 2.5, 5%. So you see how much is the total? 16 plus 12 plus 12 plus 5, that is 45%. So we need to take 45% and we need to reduce it from the value at which it is imported. What is the value of import? 20 lakhs. So 20 lakhs minus 45%. So 20 lakhs minus 45% is the depreciated value. So what is that depreciated value? 11 lakhs. On this 11 lakhs, how much is the customs duty that we need to pay? What is the customs duty? No, not 5%, 20%. Concessional rate is 5%, but the normal rate is 20%. So therefore, we need to pay 20% on this. 11 lakhs into 20%, 2,20,000 minus what is the customs duty already paid at the time of import? What is the original import price? 20 lakhs. 20 lakhs into at that time how much you would have paid? 5%. So 20 lakhs into 5% will be 1 lakh. So 2,20,000 minus 1 lakh, that is 1,20,000 is the customs duty that we need to pay. Is it clear? 1,20,000. Suppose if they are asking us to compute the interest, we will compute interest from which date? In the question you see and tell me from which date we will start computing the interest. 1st February or 12th January? 12th January, because the date of import only we will take. So from the date of import till the actual date of payment of custom duty, that date is not given. When are they actually paying this customs duty of 1,20,000? Differential duty they have not given. If that is also given, then we will do the interest computation. From 12th January till the actual date of payment, we will see number of days. For that number of days, we will compute the interest that is payable on 1,20,000. Correct? 1,20,000 is the differential duty on that 1,20,000 into 15% into number of days divided by 365, like that we will compute the interest. So this interest computation not tested in the previous exam, so maybe interest computation could be tested in the current forthcoming exams, possible, okay. But this is how you will get a question on import of goods at concessional rate of duty rules. Yes, see this question they have given in RTP November 22, thereafter they have not tested this question. Super Liver Limited is engaged in manufacture of taxable electronic goods. Its 2 manufacturing units are located in Mumbai and Nagpur, and both the units are registered under GST in the state of Maharashtra. The company has another manufacturing unit in Bengaluru, registered under GST in the state of Karnataka, and a retail showroom located in Ahmedabad, registered under GST in the state of Gujarat. Now, the company has provided the following details of the activities or transactions undertaken in a tax period. So, they have given Mumbai unit and Nagpur unit certain transactions. With the help of above information, you are required to determine the value of exempted supply under GST law as provided by Nagpur unit and Mumbai unit. Will your answer be different if the value of exempted supply provided by Nagpur unit and Mumbai unit is to be determined for the purpose of apportionment of ITC under section 17 subsection 3? They are asking us to determine whether what is exempted turnover for payment of GST and for computation of ITC. We have 2 definitions of exempted supply in GST. One for payment of GST. For payment of GST, what is the meaning of exempted? Just the 3 points. Notified as exempted, nil rated, non-taxable. But for the purpose of ITC, we have 8 points for the meaning of exempted. Notified as exempted, nil rated, non-taxable, supply covered under RCM, sale of land, sale of building, sale of securities, and supply of warehouse goods under customs. So that's what they are asking us to check. First, we will see meaning of exempted for the purpose of payment of GST. Okay. So out of this, what is the meaning? Like, what is the exempted turnover? So you take Mumbai unit, sale of taxable goods. It will not come under exempted, correct or not? Then interest on fixed deposits. Interest on fixed deposit, is it exempted for payment of GST? Yes. So Nagpur unit 1,08,000 is treated as exempted. Then sale of securities, not a supply. We will not treat it as exempt. Right now we are discussing what? Meaning of exempted under payment of GST. They have asked 2 questions. See, basically you need to read the question paper, you need to know the requirement. That is a place where we are all making mistake. We don't know what is the question they have asked. So you will focus in this place. You will focus in this place. Actually, this is not the place you need to focus. You need to focus in this place. Okay, requirement. What is the requirement in the question? You should read this first, not this. Okay, but we all make the mistake of reading this beginning to end and we are confusing ourselves. What should we do is what we need to read first. Then only you will know what is the purpose of our learning. Okay, so what is the requirement? Read the requirement carefully. With the help of our information, you are required to determine the value of exempted supply under GST. Okay, so what is the meaning of exempted under GST? Notified as exempted, nil rated, non-taxable. So therefore, this is taxable. It will not come under exempted. But interest on FD will be exempted. And sale of securities is not a supply. It will not come under exempted. Sale of agricultural land, not a supply. It will not come under exempted. Sale of old factory building, it will not come under exempted. And transfer of actionable claims, so other than specified actionable claims, not a supply, so it will not be covered under exempted. So for the purpose of GST, what is the meaning of exempted? Just 1,08,000. Understood? This is the first table. Second table, what is the meaning of exempted for the purpose of ITC? So first one, taxable goods will not come under exempted. Interest on fixed deposits, interest on loans, advances, deposits is actually exempted, but for ITC purpose it will be treated as taxable. So it will not come under exempted. Are you understanding? Then sale of securities, even though sale of securities is not a supply, but for ITC purpose it will be treated as exempted. How much will be taken? 1% of sale value of securities. So 4,50,000 into 1%. How much? 4,500 will be taken. Okay. Don't see the purchase price, just the sale price you need to take. Sale of agricultural land in the vicinity of the manufacturing plant. Actually, sale of land is not a supply, but for ITC it will be treated as exempted. What should be taken as the value of sale of land? So stamp duty value. So 1 crore 85 lakhs is the stamp duty value. So that will come under exempted. Then sale of building. For sale of building, so is it supply or not a supply? Not a supply. But for ITC purpose, it should be treated as exempted. How much should be taken? Stamp duty value. So what is the stamp duty value? 75 lakhs should be taken. Then transfer of actionable claims other than specified actionable claims is not a supply. It is excluded from supply. But is it covered under exempted supply? No. So don't take this. So what is the meaning of exempted as per ITC? 4,500 and 75 lakhs. 75 lakh 4,500. You can see here. 75 lakh 4,500. Then what is the meaning of exempted for ITC purpose? It's with respect to Nagpur unit only one, that is 1 crore 85 lakhs. 1 crore 85 lakhs. Is it clear here? So literally application of section 17 subsection 3 this question is. Okay. So they can ask a question like this because this is already asked in RTP, but in the main exam they have not yet tested. So you can expect a question like this. Okay. So have a look into this question. This was an RTP May 21 question, but not asked in exam so far. Sunshine Private Limited manufactures taxable goods. The company is registered under GST in the state of West Bengal. The company has provided following information in relation to inward supplies received by it in the month of October. Raw material X 2 lakhs, rent of the factory building, like that they have given some inward supplies. And what we need to understand here is that balance in GSTR to be as on 28th October. This is for which month? October month. For October month, we need to see to be as on which date? For October month, we need to see to be as on which date? 14th of November. So that is 13th November midnight or 14th November morning. So therefore, this 28th October, whatever to be is generated, this is not first of all to be, something else. Correct or not? Because to be will not be generated on 28th October. So that is a trap. We will not take this. And even to be as on 20th November, that is also bullshit. We will not take, because to be will be generated on which date? 13. So therefore, what is the 2B ITC? 6 lakhs. But what are the invoices which are there in 2B? 1, 2, 3 and 4. Go back to the question. 1, 2, 3, 4. So these 4 invoices reflected in 2B. Even though reflected in 2B, but remember, if it is blocked credit, non-business purpose or exempted supplies, we cannot take ITC. Read the first transaction. What is the first transaction? Raw material X. Is it anywhere in the blocked credit? No. So can we take ITC? Yes. Rent of factory building. So rent of factory building, not residential building, etc. So can we take ITC? Yes. No restriction. Raw material Y, same. No restriction we can take. But car purchase for use by the director. Car is a blocked credit. So we should not take ITC with respect to the car. But it comes in 2B. Can we take the ITC? No. So take your calculator. 6 lakhs is the ITC as per 2B. Correct or not? So from that 6 lakhs, you take out the car related ITC. What is a car related ITC? 1,20,000. Even though it came in 2B, but we cannot take ITC. So take out 1,20,000. Now see the remaining invoices. Whether these remaining invoices reflected in 2B or not reflected in 2B. Not reflected in 2B. Even though not reflected in 2B, in 3 cases we can take ITC. What is that? GST paid under RCM. Check the question. In this, anywhere we have GST paid under RCM? Yes. Import of services on which GST paid under RCM. So add 50,000. Not reflected in 2B, but we can take. Add 50,000. And then re-availment of ITC reversed earlier. Anywhere it is there? No. And ITC pertaining to earlier tax period not availed at that time and now availed. Like that, is there anything? No. So therefore, what is the number that you have got in your calculator? So 5,30,000 is the ITC availed in GSTR 3B. Is it clear? What is the excess ITC that you have taken even though not coming in 2B? Even though not coming in 2B, what is the excess ITC you have taken? 50,000. Correct. Because of which what will happen? You will get a notice. What is that notice? Rule 88D. What is that notice? Form GST DRC 1C. And we need to give a reply. What is that reply? That GST paid under RCM only we have availed as ITC. And what is the time limit within which you need to give the reply? 7 days. So that this will be validated and we can enjoy that ITC. You got it? So because that is also asked as a question. Whether there is any notice issued for the purpose of excess availment of ITC beyond matched ITC? Yes, a notice will come and accordingly we need to give a reply within 7 days. And ITC with respect to GST paid under RCM based on reply furnished, tax officer will review and validate the claim of ITC. Done. So related to that section 41, they can coin a question like this. So something which comes in 2B but not eligible, something which is not coming in 2B but eligible. So based on that, we need to take how much is the ITC. Then or even in MCQ also they can test this. So this is also one good question. Related to the meaning of exempted, they can ask this. Mr. Rajesh Surana has a proprietorship firm in the name of Surana and Sons in Jaipur. The firm registered under GST in the state of Rajasthan manufactures 3 taxable products, product M, product N and product O. Tax on N is payable under reverse charge. The firm also provides taxable consultancy services. The firm provided the following details for a tax period. Whenever you get a question like this, you need to prepare one working note. So in that working note, you need to analyze each and every transaction. For payment of GST, what it is, for availment of ITC, what it is, and then we need to do the computation. Okay. So they have given lot of turnovers, but all these turnovers we need to put it in one table. So particulars, value, for payment of GST, for computation of ITC. Thereafter, step 2, you need to know for ITC purpose, how much is taxable turnover, how much is exempted turnover, how much is total turnover. Then step 3, you will know how much is the ITC availed and ITC reversed and the net ITC eligible for utilization. And the last step will be computation of net GST payable. Okay. So this question, they are asking us to compute net GST payable only. So subject to the information given above, assume that all other conditions necessary for availing ITC have been fulfilled. Turnover of Surana and Sons was 85 lakhs in the previous financial year. Now come on, do the computation. See, actually, MIGHTY50 questions I am not discussing separately, I am inbuilting into the discussion itself. So mostly I am discussing here itself. Okay. So because along with the flow of the subject itself, we can cover all important questions. That's what if you see in customs also, not every question I discussed in customs, but some important core areas and all I have discussed, like that even here, okay. So therefore, please, we will do this question together. Done? Take your notebook. Take your notebook. First you need to do the particulars, but you need to be quick, pa. You need to be quick. So first we will make a working note. In that working note, we will see particulars, value for payment of GST, for computation of ITC. Particulars, value, particulars, value for payment of GST, for computation of ITC. For payment of GST, for computation of ITC. Now, see the first transaction, turnover of M. Turnover of M excluding export sales 14 lakhs. So, is M a product covered under RCM or FCM? See the first paragraph, FCM. Which product is covered under RCM? Product N is only covered under RCM. So, therefore, turnover of M. What is the value? 14 lakhs. Write down. Turnover of M, value 14 lakhs. For payment of GST, what it is? Taxable. So taxable, you write taxable. For payment of GST, taxable, hyphen. How much is the GST? 14 lakhs into, is M goods or services? Goods. What is the rate of GST applicable for goods? See the below paragraph. What is the rate of GST applicable for goods? 12%. So into 12%, how much? 1,68,000. Write down in that column 1,68,000. As it is taxable, remember, if it is taxable for payment of GST, no doubt it will be taxable for ITC also. Got it? If it is taxable for payment of GST, no doubt it will become taxable for ITC. So for ITC purpose also you need to put it under taxable. Then second transaction, turnover of N. Turnover of N. What is the value? 6 lakhs. Turnover of N, 6 lakhs. And N is a product covered under RCM. Related to this, we studied one point. For payment of GST, do we have any impact? So for payment of GST, it will not come in our liability. It will come in the recipient liability. So just put a dash. For payment of GST, you put a dash, because it will not be chargeable to GST in the hands of the supplier. It will be chargeable to GST in the hands of the recipient. But for ITC purpose, where it will be coming? Taxable or exempted? Exempted. So supply covered under RCM is treated as exempted supply. So write down exempted in last column. Then next one, turnover of O. Turnover of O. Turnover of O, what is the value that should be taken? 10 lakhs. And for payment of GST, it will be taxable. And what is the taxable value? 10 lakhs into 12%, that is 1,20,000. And for, as it is taxable for payment of GST, no doubt it will become taxable for ITC also. And next one, export of M. Which option they are going for? With payment of GST or without payment of GST? With payment of IGST. Not eligible to avail benefit of merchant export under notification 41/2017. Suppose if they are eligible for merchant export scheme, so there is a concept of merchant export, that is, I am an exporter, I am purchasing from you. When I am purchasing from you, you will be charging me 0.1%. Please carefully listen. I am a merchant exporter. What a merchant exporter will do? He will purchase the goods from other person and he will be exporting. So you are the supplier. I am the merchant exporter. Now when you are selling to me, as I am a merchant exporter, at what rate you will sell to me? 0.1%. So as you are selling to me at 0.1%, I pay this 0.1% now, and I have to export without payment of GST. If I export without payment of GST, this 0.1% I will get as a refund. What about you? What about you? As your outward supply is 0.1% and your inward supply will be at a higher rate, this will become inverted tax structure. As it becomes inverted tax structure, you will get the refund of ITC under inverted tax structure. Are you understanding this? Sir, you are a supplier, sir. You are making export to me. You are making sale to me, and I am the exporter. So in this case, if I am a merchant exporter, at what rate you will charge to me? 0.1%. So as your outward supply is 0.1%, but your inward supply will definitely more than 0.1%, which means it will become inverted tax structure. So can you enjoy the ITC? Yes, and you will get the refund of ITC also under inverted tax structure. Now I paid 0.1% to you now. that 0.1% I will take ITC, but I will export without payment of GST and I will get the refund of ITC. So in this case, this exporter is not going for merchant export benefit, means he will export upon payment of IGST and then he will get the refund of gross IGST paid. So therefore, for payment of GST, we need to put it under taxable and we need to compute and pay the GST. So write that export of M. Export of M 2,50,000. For payment of GST, what it is? 0 rated. For payment of GST, 0 rated. But is there a liability? Yes. Even though it is 0 rated, there is a liability. What is the value? 2,50,000. Rate of GST 12%. That is 30,000. 30,000. And for ITC purpose, 0 rated. For ITC purpose, where it will come? Taxable. It will come under taxable. Then next, export of O. Export of O, under which option they are going? Letter of undertaking, which means are they paying GST or not paying GST? Not paying GST. So just mention as 0 rated. You don't have to take the liability. Just mention as 0 rated for payment of GST. For ITC purpose, where it will come? Taxable. No need to put any liability because they are going for without payment of GST option. Then consultancy services. Consultancy services. Read the wording. Consultancy services provided to unrelated clients located in the foreign countries. In all the cases, consideration has been received in convertible foreign exchange. What are the 5 conditions that should be satisfied in order to call a transaction as export of services? Come on, where the supplier should be? In India. Export of service kumuttai. Where outside India? Export of service means supplier in India. Supplier in India. Where the recipient will be? Outside India. And where the place of supply should be? Outside India. How the consideration should be? Convertible foreign exchange. Wherever permitted by RBI, it can be in Indian rupees. And supplier and recipient are not two establishments of the same person. All the conditions are satisfied or not? Supplier Rajesh Surana is in India and the recipient is outside India. Consideration is in convertible foreign exchange. Naturally, place of supply is the location of recipient, so which is also outside India. And is supplier and recipient are two establishments of the same person? No, clearly it is given as unrelated parties, which means that it is an export of service. Again, for export of service, we have 2 options: pay IGST or export without payment of IGST. But they did not specify which option we need to go for. So now in this case, you can follow any option, either pay GST or don't pay GST. So therefore, we will go for without payment of GST so that we don't have liability. Got it? So therefore, you write that consultancy services exported. What is the value of consultancy services exported? 20 lakhs. Sir, in this case, can I also take the option of payment of GST? Yes, you can take any option. And my suggestion is that in question, when you have LUT or bond, then go for without payment of GST. Otherwise, go for with payment of GST. You understood? Actually, in this question, in exam, my advice will be with payment of GST. Okay, because is it given as LUT or bond? Only export of services or export of goods under LUT or bond is without payment of GST. They did not give LUT or bond, which means actually it should be with payment of GST. That is the assumption you follow in exam. But here, for this question, as this question, ICAI took the assumption that it is without payment of GST. Just to have the uniformity in the answer of suggested answer, like our study material answer, we are doing this. Okay. So, but in exam, you can write any note and you can follow that. So, here we will be taking without payment of GST. So, just mention it as 0 rated and don't put any liability. But for ITC purpose, where it will be coming? Taxable. Next, sale of building. Sale of building. Read this wording. Sale of building excluding stamp duty of 2,50,000 being 2% of the value. Entire consideration is received post issuance of completion certificate. Building was occupied thereafter, which means sale of building is not a supply. But how much should be taken? Stamp duty value should be taken. Don't take 1 crore 20 lakhs. Take the stamp duty value. What is the stamp duty value? 2,50,000 is not stamp duty value. That is the stamp duty. So stamp duty. So that is 2% of the value. So which means 2,50,000. How yaar? 1 crore 20 lakhs is where? 2,50,000 is where? That minimum thought you will not get. So 2,50,000 divided by 0.02. How much? 1 crore 25 lakhs is the stamp duty value. So please take 1 crore 25 lakhs is the value. And then for payment of GST, what it is? Not a supply. but for ITC purpose it will be coming under exempt supply. Even though it is not a supply, but for ITC it is treated as exempted supply. Come on, next one. Interest on FD. Interest on FD. For payment of GST, what it is? 4 lakhs. Exempted. But for ITC purpose, where we need to put it? Under taxable. So even though it is exempted for payment of GST, but we have to put it under taxable for ITC purpose. Okay. Don't put any liability for that. The next, sale of shares. Sale of shares. How much should be taken as the sale value of shares? 1% of sale value. What is the sale value? 2 crore 50 lakhs. 2 crore 50 lakhs into 1%. It is 2,50,000. Right there. Sale of shares. Sale of shares value 2,50,000. Value 2,50,000. Is it supply or not a supply? Not a supply. But for ITC purpose, it should be treated as exempted supply. Then legal service received from an advocate in relation to product M. It is inward supply, not outward supply. We are discussing about outward supplies. That is inward supply. Correct. But why we need to put it here? We are computing the exempted turnover, total turnover. We don't have to bother about the inward supply. In turnover, turnover means what? Outward supply. So I know that you are sleeping, but this much, too much it is. So turnover means outward supply. Why inward supply will come in turnover? Okay. And even common inputs and input service, that is inward supply, it will not come in turnover. Right now we are doing the turnover computation. So over, and we need to do the total of this. So next one, below this you write down, for ITC purpose, taxable turnover equals to exempted turnover equals to total turnover equals to. Do the computation. Don't see for payment of GST column. See last column. For ITC purpose you have written na, based on that you take. Where and all you have written taxable, you take those numbers and do the total in the calculator. Calculator you can do na. So just you have to search where and all taxable is there. That number you have to press in the calculator. Plus like that you have to do, equal to, you will get one number that you tell. Yes, how much? Taxable turnover 26,50,000 taxable turnover. Last column, wherever you have written taxable, that numbers alone you do the total. 60,50,000. Exempted turnover 1,33,50,000. Correct? Then taxable turnover is correct. 1,33,50,000 will be exempted turnover. 60,50,000 is taxable turnover, and total turnover will be 1,94 lakhs. Correct? 1,94 lakhs. And then nothing many times I have taught this question. That's why number and all known. Okay. So next. Thereafter, ITC availed, ITC reversed. So we need to see this. First you need to take ITC availed. Write down ITC availed. ITC availed. What is the ITC availed? First one, legal services. Legal services. So even GST paid under RCM can be taken as ITC na? Yes. So legal services from an advocate. So they have to pay GST under RCM. But sir, legal services received by a person whose turnover during the previous year does not exceed threshold limit is exempted. So what if their turnover during the previous year does not exceed threshold limit? Then this legal service will be exempted. That's why they have given the last line. Turnover of Surana Industries for the previous year is 85 lakhs. Exceed threshold limit or does not exceed threshold limit? Exceed threshold limit. Therefore, these legal services will be covered under taxable and RCM. So therefore, we can take ITC. So legal service, what is the value? 3,50,000. 3,50,000 into what is the rate of GST? 18%. So 3,50,000 into 18%, that will be 63,000. And as it is used exclusively for product M. Product M is what? You read the table. You have written na. Product M is what for ITC purpose? Taxable. Which means can we enjoy this ITC? Yes. So we don't have to consider it as common ITC. Okay. Next line. Common inputs. Common inputs. Sorry for pressuring you to make it fast because I don't have time. This is not a fast track batch. Okay. So common inputs. How much is a common inputs? 35 lakhs. 35 lakhs into what is the rate of GST? 12%. 35 lakhs into 12%. Do the calculation. 35 lakhs into 12%. That will be 4,20,000. And common input services. Next line. Common input services 15 lakhs into 18%, that is 2,70,000 common input services. So legal services, common input services. Now you do the total of these three called as ITC availed. What is the total of these three? 2,70,000 plus 63 plus that. How much is the ITC availed? 7,15,000. 53,000. 7,53,000. Next, minus ITC reversed. As per rule 42, what you should do? ITC availed into exempted turnover divided by total turnover. So now tell me, first tell me what you will do. How much you will take as ITC reversed? Number you tell me, number you tell me. You are going to do some computation, that you tell me what you are going to do. 7,53,000 into exempted turnover, how much? 1,33,50,000 divided by total turnover, how much? 1,94 lakhs. Correct? No. Legal service is exclusively used for product M. Don't do the reversal with respect to legal service. Remaining two only you need to do. What is that remaining two? Inputs and input services. What is the inputs ka credit? 6 lakhs? 6,90,000. Correct? So that is related to inputs and input services. So 6,90,000 into, do that. 6,90,000 into 1 crore, exempted turnover is how much? 1,33,50,000 divided by 1,94 lakhs. Actually, calculator will show error when you multiply. But, so therefore, divide it first. First you divide it. So 6,90,000 divided by 1,94 lakhs into 1,33,50,000. That will be 4,74,820. 819.5, 820 will be ITC reversed. ITC availed 7,53,000 minus ITC reverse 4,74,820, and balance is the net eligible ITC for set off. What is that? 2,78,180. 2,78,180 is the net eligible ITC for set off. Understood? Now last step, computation of net GST payable. Remember, so whenever you compute the net GST payable, first we need to take gross GST payable under FCM. Thereafter you need to reduce ITC. Then add RCM liability. Don't add RCM liability beginning itself, because we cannot use input tax credit balance for payment of GST under RCM. So first do the calculation. Gross GST payable under FCM. Gross GST payable under FCM. Now go to the working note. In the working note, you have written for payment of GST, what are all the taxable amounts, correct? So those amounts under you take. How much is the GST liability? In working note, you have written already. 3,18,000. 3,18,000. 3,18,000 minus ITC utilized. Minus ITC utilized 2,78,180. Should we check rule 86B in this case? No. Why we don't have to check rule 86B in this case? Because we don't have ITC more than our liability. That's why 86B we don't have to check in this case. And 3,18,000 minus 2,78,180. Now add RCM liability. Add RCM liability plus RCM liability. How much is RCM liability? 63,000. 63,000. Now you will get one answer. That is the net GST payable. 1 lakh. Okay. 1,02,820 is the net GST payable. Understood here? But this is the way in which you need to present in the exam so that you will not go wrong. Say this. Mr. Nakul, a manufacturer of pesticides registered under GST law, provides to you the following information pertaining to GST paid by him in the month of January 2021. GST on machinery purchased and sent directly to job worker. So actually they have not received it. but they have sent to the job worker. Can they take ITC? Yes. We discussed one concept, deemed delivery concept. On our instruction, if the goods are delivered to a third person, the date on which the third person has received the goods, it is deemed that we have received the goods and we can take ITC with respect to this. GST on car purchase exclusively used for business purpose. Can we take ITC? No. Why? Because car is a motor vehicle that does not exceed 13 passengers capacity, capacity, and it is not covered under the exceptions. Is it covered under further supply? No. And it is not used in the business of transportation of passengers, not for imparting driving skills. So therefore, on this car, ITC cannot be taken. GST on raw materials purchased. Goods are received in lots or installments, and 25% of these materials will be received in February 2021. Right now we are talking about January 2021. Can we take ITC in Jan 2021? No. GST on medical insurance premium paid for employees working in the factory, and providing this is optional, and Mr. Nakul has taken out this measure to improve the relationship with the laborers. Is it under statutory obligation? No. So on this medical insurance premium, can we take ITC? No. Insurance, both health insurance and life insurance is a blocked credit. We cannot take ITC. GST on goods procured for distribution to flood affected areas as a part of CSR obligation. CSR obligation is a blocked credit. So ITC cannot be taken. So which means we can take ITC only with respect to 1,20,000. Okay. Then one question we will see on capital goods related points. So take, yes, say this. Obra Industries is a manufacturing company registered under GST. It manufactures two taxable products X and Y and one exempted product Z. The turnover of X, Y and Z in the month of April 2021 was 2 lakhs, 10 lakhs and 12 lakhs. Obra Industries is in possession of certain machineries and purchases more of them. Useful life of these machineries is considered as 5 years. Now, why they gave the turnover data? Just to compute the exempted turnover to total turnover. So, what is the exempted turnover divided by total turnover? So, E by F. Exempted turnover is how much? Which product is exempted? Z is exempted. So, Z turnover is how much? 12 lakhs. So, 12 divided by 2 plus 10 plus 12, that will be 24. So, 12 by 24 is the exempted turnover to total turnover. Now, from the following particulars furnished by it, compute the amount to be credited to electronic credit ledger and the amount of common credit attributable towards exempted supplies. Machine A, right now we are talking about which month? April month. April month we have purchased and used exclusively for non-business purpose. Can we avail the ITC or we cannot avail ITC? No, we cannot avail ITC. And will it come under common ITC? No. First of all, when we are not availing ITC, why will it come under common ITC? Then machine B, purchased on 1/4/2021 for being exclusively used in manufacturing zero rated supplies. Can we take ITC? Yes, 38,400. And will it come under common? No. And machine C, purchased on 1/4 for being used in manufacturing all the three products X, Y and Z. Can we take ITC? Yes. And also it will come under common ITC. Machine D, purchased on April 1, which is 2 years before 1/4/2021 for being exclusively used in manufacturing product Z. Product Z is what? Exempted. And now we are using it for manufacture of all the three products. So 2 years back we purchased and we used it for exempted. Whether we would have availed ITC at that time? No. So should we take ITC now? Yes. So we should take ITC now, 1,92,000. Also, will it come under common ITC? Yes, it will come under common ITC. Now, what are the two treatments related to this? We need to do the reversal for the past period. Last 2 years we are using for exempted na 5% into 2 years means what? 8 quarters we need to reverse, plus future period also we need to do the reversal. And then machine E, purchased on April 1, which is 3 years before 1/4/2021 for being exclusively used in manufacturing product X and product Y, means initially purchased and used it for taxable, means we would have already availed ITC at that time. Now we don't have to avail the ITC. So don't avail the ITC. From 1/4/2021, such machine will be used for manufacturing product Z also, means now you just consider it as common ITC, 2,88,000. Now tell me, what is the ITC availed? What is the ITC availed for this month? 38,400. Are you understanding here? I'll give break here. I'll give break. So listen. So 38,400 plus 96,000 plus 1,92,000. How much? 3,26,400 is the ITC availed. And what is the ITC to be reversed? What is the ITC to be reversed? First, past reversal we will do. What is the past reversal? Machine D, 1,92,000 into 5% into how many quarters? 8 quarters. That will be 76,800 ITC reversed for the past period. Now, what is the ITC to be reversed for the current month? Future reversal. What is a common ITC? What is a common ITC? 96,000 plus 1,92,000 plus 2,88,000, that is 5,76,000 is the common ITC. Never do it machine wise. Never do it machine wise. You have to do it in the same formula, that is total common credit divided by, what is the monthly, divided by how many months? 60 into, what is the exempted turnover of this month? 12 divided by, what is the total turnover? 24. That is 4,800. Now you will get the net eligible ITC. That is 3,26,400 minus 76,800 minus 4,800. How much? 44,800. So 2,44,800. You understood here how? But you know what is the mistake that we will do? We will do it asset wise. And we will think the asset wise turnover we need to take for apportionment. No. We need to do it total. Total common credit. But sir, 2,88,000 we have already availed. Nah? Yes. But now we will consider it as common. So total common credit divided by 60 into exempted turnover of that month by total turnover of that month. What is this? 76,800. This is pertaining to the past period. Last 2 years we are using it for exempted. Okay. So actually this is like many years I am waiting for this question, because it came long back when, as soon as they launched the syllabus GST May 18, at that time they asked. Thereafter they did not touch this kind of question at all. So therefore maybe chance is there here. Okay, fine. See this question. This question came in November 2020 for 4 marks. Messrs. Joinder Drills of Australia exports rough rocketing diamonds to Messrs. Ankit Enterprises of India, a registered supplier in the state of Haryana. So where Ankit Enterprise is located? Haryana. And where their recipient is located? Joinder Drills, Australia. Here supplier is Ankit Enterprises, recipient is Joinder Drills. What Joinder Drills Australia is doing? They are sending some rough rocketing diamonds. And what Ankit Enterprises should do? See the next point. Ankit Enterprises is expected to process them into tools and export the same to the supplier in Australia. So is it performance based service in relation to goods? Correct or not? Performance based service in relation to goods. Should we refer 12 or 13? 13. Why we need to refer to 13? Because one in India, other outside India. So we need to refer to section 13. As per section 13, performance based services, we have 2 points. Physical presence of the goods required, physical presence of the goods not required. You tell me, physical presence required or not required? Required. That's why they are sending it here. You understood? So usually what should be taken as a place of supply? Location of performance. Okay, continue. The process does not involve any sophisticated process other than cutting, polishing and finishing. Messrs. Ankit Enterprises request Joinder Drills for use of such tools for his business in India for 3 months, which is agreed to do by the supplier. He then exports it to Australian supplier. Now tell me whether exception number 1 is applicable or not. Are they importing the goods? Yes. For carrying out repairs or process? Yes. After repairs or process it is exported? Yes. Without put to use? No. They are exporting it after use of 3 months, which means that first exception will not be applicable. So what will be the place of supply? Location of performance. Where is it performed? That is where? India only where? Haryana. Where is he located? Haryana. Place of supply also Haryana. Intrastate or interstate? Interstate. Deemed interstate. Once you determine the place of supply under section 13, it will be deemed interstate. So it will come under IGST, chargeable to GST. Okay. So he then exports it to Australian supply, invoicing for 12 lakhs for processing into required tool. Ankit Enterprises is of the assumption that it is an export transaction. Is it an export of service? No. Why it is not an export of service? What is the location of supplier? India. What is the location of recipient? Outside India. What is the place of supply? India. It will never become export of service. In order to become export of service, where the place of supply should be? Outside India. So it is not an export of service. So therefore it will be chargeable to GST. And whether it is CGST, SGST or IGST? IGST. So that is what we need to write. IGST will be applicable. Got it? See this question. It is July 2021 for 4 marks. XYZ Limited has obtained a loan from a foreign bank. The company does not have an account with the foreign bank from whom it has taken the loan. Whether RCM liability under GST law should be discharged in this regard for import of services received in relation to the loan. Provide relevant legal provisions in support of your answer. First, what services? What services? Banking services. Where is the supplier located? Bank, foreign bank, outside India. Where is the recipient located? In India. So 12 or 13? 13. And do we have any specific provision for banking services? Yes. Now tell me, is it location of supplier or general provisions? Why general provisions? Account is not there. Suppose if they are providing service to account holders, then only location of supplier. They are not providing service to account holders. So therefore general provisions. As per general provisions, what will be taken as a place of supply? Location of recipient. Where is location of recipient? In India. Now second part of this question. Will it qualify for import of services? Yes. Where is the supplier located? Outside India. Where is the recipient located? In India. Place of supply also India. It will become import of services. In case of import of service, will it come under RCM? Yes. It will come under RCM because it is not OIDR service other than OIDR services imported by other than non-taxable recipient. Therefore, it will be coming under RCM. You understood? See this. This is a Jan 21 question. They gave it for 9 marks. 9 different situations they gave. In these situations, you need to tell me what is the place of supply. Number 1. Determine the place of supply along with the reasons in the following cases. Number 1, architect. X is an architect in Kolkata, provides interior decorator services to Mr. Y of New York, USA in relation to his immobile property located in New Delhi. 12 or 13? First you need to know what is the service. Second you need to know whether it is 12 or 13. Then accordingly you need to determine the place of supply. Is it, what is the service? Property related service. 12 or 13? 13. What is the place of supply? Location of property. What is the location of property? New Delhi. Is it clear? Then next, second. Mr. A, chartered accountant, registered in Kolkata, supplies service to his client in Bhubaneswar, registered in Bhubaneswar. Do we have any specific provision? So, general provision. 12 or 13? 12. So, 12, what should be taken as a place of supply? Location of recipient. B to B, location of recipient. What is the location of recipient? Bhubaneswar, Orissa will be taken as a place of supply. Then ABC of Patna imported certain goods from XYZ Incorporation of USA. The goods were imported through vessel and the delivery of goods was taken at Kolkata, whereafter the movement terminates and the goods are stored. What is it? Import of goods. Import of goods. For import of goods, section 10 or section 11? Section 11. What will be taken as a place of supply in case of import of goods? Location of importer. Very simple. Import of goods, location of importer. Export of goods, location outside India. Okay. So in case of import of goods, it is location of importer, not location where it is imported. So read that again. What is the location of importer? Patna. That will be taken even though they are importing goods to Kolkata. Then next, number 4. Mr. X, registered in Guwahati, has availed landline services from BSNL. The telephone is installed in residential premise in Kolkata and billing address is office of Mr. X in Guwahati. What service? Telecommunication service. Section 12. So is it fixed line or mobile? Fixed line. What will be taken? Location of installation. Where is it installed? Kolkata. That will be taken as place of supply. Next one. Mr. X residing in Chennai, traveling with an Indian airline aircraft and is provided with movie on demand service for 100 rupees as onboard entertainment during Delhi-Chennai leg of Bangkok-Delhi-Chennai flight. What is the service? Service on board a conveyance. 12 or 13? 12. Let it be 12 or 13, same provision. What will be taken as a place of supply? Starting point of the conveyance. What is the starting point of the conveyance? Bangkok. Even though he received the services during Delhi-Chennai, but it will be starting point of the conveyance that will be taken. Then sixth one, Mr. X of Kolkata purchased online tickets for Aquatica water park in Mumbai. That is event related, correct? Admission to an event. What will be taken as place of supply? Location of event or location of place. What is that? Mumbai. Then 7, Mr. Z, an unregistered person of Kolkata, sends courier from New Delhi to his friend in Chennai, Tamil Nadu while he was on a trip to New Delhi. What will be taken as place of supply? Service, transportation of goods. Service is transportation of goods. 12 or 13? 12. For 12 we need to transportation of goods, we need to check B2B, B2C. Is it B2B or B2C? B2C. So starting point of goods. What is the starting point of goods? New Delhi, that will be taken. Mr. X, a registered person in Ranchi, Jharkhand, buys shares from a broker in Patna on NSE Mumbai. Determine the place of supply of brokerage service. What service? Intermediary services. 12 or 13? 12. We don't have any specific provision. General provision. Location of? What is the location of recipient? Mr. X, registered person in Ranchi, Jharkhand. Then next, XYZ Limited, New Delhi, entered into contract with an Indian airline for supply of biscuit packets for further supply by airline to passengers in Kolkata Guwahati route. The biscuits were loaded on board in Lucknow. So what is a transaction? Supply of goods on board a conveyance or supply involving movement of goods? Supply involving movement of goods, because it is not airline's point of view, XYZ point of view. For XYZ point of view, supply involves movement of goods. Ending point. What is the ending point? Lucknow. Suppose if they are asking from airlines selling to passengers, what will be taken as place of supply? Then goods sold on board a conveyance, then starting point of the goods, that is also Lucknow. Because whatever is ending point for the supplier, for airlines it is the starting point. PQ, a statutory body, deals with all the advertisement and publicity of the government. It has issued a release order to Moon Plus Channel. So here, who is the supplier? Moon Plus Channel, and they are providing services, advertisement service to government. Advertisement service to government can be to central government, state government, local authority, or even a statutory body. So in this case, so that advertisement, they have to put it in 5 states. A, B, C, D and E, and the total value of the service contract entered into between them is 10 lakhs. So this 10 lakhs we need to apportion between 5 states. So how we will apportion? This is apportionment in case of television. So how it will be apportioned? First we need to divide it between the channels. They have 3 channels, and for these 3 channels we got the viewership data. So this is for which period? This is for September. So we need to take the previous quarter. What is the previous quarter? April to June. April to June, last quarter, last week data should be taken. So April to June, last quarter, last week data is, so 1:2:1. So in this ratio, first we need to divide 10 lakhs between these 3 channels. That is 10 lakhs into 1/4, 2,50,000. Then 2/4, 5 lakhs. And then 1/4, 2,50,000. Afterwards, this channel number 1 is only in state A. So entire 2,50,000 will be in state A. And then channel number 2 is in state B and C. So that is B and C. Again you need to divide in what ratio? So 9:1. So that is 5 lakhs into 9/10, 4,50,000 and 50,000. Then channel number 3 is D and E, 2,50,000. that you divide in 4:1 ratio. So 4 by 5, what is that? 4 by 5, 2,50,000 into 4 by 5, 2,50,000. So we got 2,50,000. So that 2,50,000 will be state A. Where is the supplier Moon Plus channel located? State A. So first one will be intrastate. Second, third, fourth, fifth will be interstate. Should they raise single invoice or multiple invoice? As they have different place of supplies for different values, for each value we should raise separate invoice. Means 5 invoices needs to be raised by Moon Plus channel to government, that is statutory body. Okay. So like that basis of apportionment, if you know, you may get a question like this and we need to divide accordingly. See this, it's an RTP November 22 question. Super Liver Limited is engaged in manufacture of, again it did not come in exam, RTP November 22, 24, so much related, okay. Listen, Super Liver Limited is engaged in manufacture of taxable electronic goods. Its 2 manufacturing units are located in Mumbai and Nagpur, and both the units are registered under GST in the state of Maharashtra. The company has another manufacturing unit in Bengaluru registered under GST in the state of Karnataka, and a retail showroom located in Ahmedabad registered in the state of Gujarat. So that is, they are having business in multiple states. Compute the value of supply most beneficial made by Bengaluru unit as well as the value of supply made by Ahmedabad retail showroom with respect to transfer of goods by these units to measures Equilibrium Sales, Pradi Sales and Dhara Enterprises if Super Liver Limited furnishes the following additional information for the month of October. Fine. So we are seeing the transaction now. Number 1, Bangalore unit has appointed Equilibrium Sales as its sole selling agent. So rule 28 or rule 29? Rule 28. Measures Equilibrium Sales sells the electronic goods of Bengaluru unit under the invoice issued in its own name. Irrelevant actually. Okay. And the Bangalore unit transferred the goods costing 7,25,000 to measures Equilibrium Sales on 20th October, which were sold by Equilibrium Sales on 31st October at 7,65,000. On 20th October, another electronic goods manufacturer supplied the goods of like kind and quality to measures Equilibrium Sales as the one supplied by the Bengaluru unit at a price of 7,75,000. So what should be taken as the value in this case? So rule 28. As per rule 28, first we need to determine the open market value. Do we know that recipient is eligible for full ITC? See the note below. See the note below. Measures Equilibrium Sales, measures Pradi Sales and Dhara Enterprises are not eligible for full ITC. Further, open market value of the goods is not available in any of the above cases. So due to that reason, we will not be taking open market value as transaction value because the recipient is not eligible for full ITC. Okay, but open market value available, that is also clearly given that open market value is not available. As per rule 28, if that fails, so can we go for 90% of the resale price point? 90% of the resale price point? Yes. But for that, we need to know what is the price at which Equilibrium Sales subsequently sells to an unrelated buyer. Do we have the data? Where? Huh? No. It is another electronic goods manufacturer supplied the goods of like kind and quality to Equilibrium Sales. Sir, Equilibrium Sales is our recipient, sir, sole selling agent. We are making sale to Equilibrium. Another person is also making sale to Equilibrium. Is it clear or not? Are you understanding? So, we are also making sale. We in the sense, Super Liver Limited. Okay. What, you did not read the question? You are getting sleep, huh? 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 Read it. No, read it again. Bengaluru unit has appointed Equilibrium Sales as its sole selling agent, and measures Equilibrium Sales sells the electronic goods of Bengaluru unit under the invoice issued in its own name. Okay, but do we know what is the price at which it is selling? No. The Bengaluru unit transferred goods costing 7,25,000 to equilibrium sales on 20th October. They say sold. Who sold Bengaluru unit to equilibrium sales on 20th October costing 7,25,000? But we cannot take 7,25,000 as the value, because if recipient is eligible for full ITC, read that summary. If the recipient is eligible for full ITC, open market value deemed to be transaction value, but recipient is given as not eligible for full ITC. Okay, then we need to go for open market value, but that open market value also not available. The next question I ask, can we take the price at which equilibrium subsequently sells to an unrelated buyer into 90%? No, we cannot take, because on 20th October, another electronic goods manufacturer supplied the goods of like kind and quality to Messrs Equilibrium Sales as the one supplied by the Bengaluru unit at a price of 7,75,000. Okay, due to that reason, it is not 90% of resale price. This is not the price at which equilibrium subsequently sells to unrelated buyer. That price we don't have. So it is, we are also selling to equilibrium, another idiot also selling to equilibrium. Okay, so that is the information given. So what you should do? Open market value fails. So like kind and quality. What is it? Like kind and quality? 7,75,000. 7,75,000 will be taken. 7,65,000 which were sold by equilibrium sales on 31st October at 7,65,000. So why can't this 7,75,000 be taken? Because first, the 7,75,000 will be coming in the alternative open market value, if not like kind and quality, if not cost plus 10%. If you remove this, then only we will be getting 90% of the resale price as an alternative. So, but here we know that this equilibrium sales is making that sale on 7,65,000, but today they are not selling, na? Today they are not selling. On 20th October they are not selling. We made sale to them on 20th October and they are subsequently selling to an unrelated buyer on 31st of October. Can we take that? Yes, we can take that. There is no issue, because see the wording here. 90% of the price at which recipient supplies like kind and quality to unrelated buyer. When we use the word like kind and quality, that need not be on the same day. Due to that reason, in this case, we can definitely take this 7,65,000 even though it is sold on 31st October. So 7,65,000 into 90%. 7,65,000 into 90%, that is 6,88,500. Okay, you understood 6,88,500. So what is the important point here? Not necessary that on 20th October they need to sell it to the another person. Even at a different date also they can sell. Then see the second part. The retail showroom of Ahmedabad transfers goods costing 85,000 to its agent. To its agent means Rule 29. Rule 29. Not a sole selling agent, just an agent. Messrs Pradi Sales on 12th October. Messrs Pradi Sales sell such goods on 18th October at rupees 5 lakhs under the invoice issued in the name of retail showroom at Ahmedabad. So what is the price at which they are subsequently selling? 5 lakhs. Then on 17th October, Pradi Sales has sold the goods of like and quality as the one supplied by the retail showroom at Ahmedabad to an unrelated customer at rupees 4,70,000. The retail showroom at Ahmedabad also transfers goods costing 95,000 to its agent Dhara Enterprise. That is another transaction. Now, up to this transaction, we will see. Retail showroom at Ahmedabad is making sale to Pradi Sales. Correct? What is the price at which it is sold? 85,000. But we don't have the open market value. As we don't have open market value, what is the rule 29 says? Open market value or 90% of the resale price. What is the resale price? 5 lakhs is also there. 4,70,000 is also there. Which one you will take as the resale price? 4,70,000 we will take. At the option of the supplier, we can choose. So whichever is beneficial only we will take. So 4,70,000 into 90%. How much? 4,23,000 will be taken. Okay. Next one you see, the retail showroom at Ahmedabad also transfers, one second, invoice is issued in whose name? Invoice is issued in whose name? The invoice issued in the name of retail showroom at Ahmedabad. Sorry pa, it is not a supply. Why it is not a supply? Principal agent transaction will become supply if the agent is acting on behalf of principal. When the agent will be acting on behalf of principal, if the invoice is raised by the agent in their name, then the agent is acting on behalf of principal. In this case, the invoice is raised by agent in their name. Who is the agent? Pradi Sales. Is Pradi Sales raising invoice in their name? No. Pradi Sales is raising invoice in the name of retail showroom at Ahmedabad. Both cases. So due to that reason, in this case we will not be treating it as supply because the agent is not acting on behalf of principal. Then next, the retail showroom at Ahmedabad also transfers goods costing 95,000 to its agent Dhara Enterprises on 15th October. Dhara Enterprises sell such goods on 20th October at 1 lakh under the invoice issued in its own name. Then it will become supply under section 71C, principal agent transaction. Now can we apply rule 29? Yes, rule 29 can be applied. And what is the price at which they are subsequently selling to an unrelated buyer? 1 lakh or 98, which we will take? 98,000 we will take. So 98,000 into 90%, that is 88,200 will be taken as the value. Okay. 90% of 98,000, 88,200. Understood here? So actually this is a very good question because sole selling agent point is tested. So we have to apply rule 28 and different date also we can take, and also not a supply is also checked, and rule 29 is also applied. Okay. So this one question covers both rule 28 and rule 29. G1 Life Insurance Company Limited has collected premium from policy subscribers. It does not intimate the amount allocated for investment to the subscribers of the policy. It does not intimate the amount allocated for investment. So to the subscribers of the policy means it will not be a reinvestment policy. It will be treated like a normal policies. Normal policies means first year premium into 25%, subsequent year premium into 12.5%. The company has provided the following details in relation to its receipts. Premium only for risk cover. Only risk cover means entire value will be, entire premium collected will be taken as the value. And if it is new policy subscribers, what we will do? Into 25%. If it is renewal premium, renewal means already they have taken. So into 12.5%. Single premium annuity, in case of single premium annuity into 10%. That should be taken as the value. Understood? Next. This question is actually related to the discount point. So this is also a very good question, not tested in exam, but it was given in the study material. Binaka Electronics Limited is engaged in manufacturing television. It is registered in the state of Haryana. It appointed distributors across the country who sell the television manufactured by it. the maximum retail price printed on the package of the television is 12,000, but 12,000 is not the value, that is only the MRP, so don't take that as a value. The applicable rate of GST on television is 18%. They dispatch the stock of television to its distributors ordered by them on a quarterly basis. So they are distributing it to they are selling it to their distributors. In order to promote its sales, the sales head of BEL has formulated a sales promotion scheme. Under this scheme, they offer a discount of 10%. How much discount they will be giving? 10%. On television supplied to the distributor, if the distributor sells 500 television in a quarter, means it is a post-supply discount or a pre-supply discount? Post-supply discount. But are the terms agreed before at the time of supply? Yes. They are giving this scheme now itself, and the discount will be given in future depending upon how much sales the distributor is going to make. The discount is offered on the price at which televisions are sold to the distributors, excluding all charges and taxes. It appoints Shah Electronics, an unrelated person, as its distributor in Haryana. Now, on 1st April, what they are doing, they are dispatching 750 televisions. So, more than 500 televisions. Will they give discount? Not like that. So, this is the dispatched quantity. The discount depends upon the sold quantity. Okay. On 8th April, as stock for the quarter April to June. So, BEL has sold the television to distributor Shah Electronics at 8,400 per television. So, 12,000 should not be taken as a value, 8,400 should be taken as a value. So, now take your calculator, 750 televisions into 8,400 per television. How much will be taken? 63 lakhs will be taken. Shah Electronics has requested BEL for a special packing of the television delivered to it, for which BEL has charged 1,200 per television. So, whether this packing charges to be included or not in the value? Yes. So, packing charges will be coming under expenditure incurred by the supplier and charged to the recipient before at the time of supply of goods. Therefore, it should be included in the value. In the given price, is it already included? No. So, therefore, we need to add. So, how much? 750 into 1,200. 9 lakhs. So, 63 lakhs already you have taken na, and add 9 lakhs to that is 72 lakhs. Shah Electronics places a purchase order of 1,000 television with BEL for the quarter July to September. So, so far what you have done is for the quarter April to June. Now, July to September also there is a sale that is made. The distributor reports sales of 700 television for the quarter April to June. Now, whether we should give the discount or not? Yes. How much quantity? 700 is the sales. 700 sales means more than 500. They are eligible for the discount. Correct or not? But what happened here is that, see this, while Shah Electronics reverses the input tax credit for the July-September, it has failed to reverse the input tax credit for the quarter April to June. Even though they are eligible for the discount, but they are not reversing the ITC. When they are not reversing the ITC, can we issue a credit note and reduce it? No. So, what should be taken as a value? 72 lakhs on which GST payable. Discount is not allowed as deduction. Why discount is not allowed as deduction? Even though it is a post-supply discount and the terms are agreed before the time of supply, but the recipient has not reversed the ITC. That is a crucial point. Due to that reason, we will not be allowing it as deduction. So, 72 lakhs into GST. So, that is the value of supply. Is it clear? Whereas, for the next quarter you see, that is July to September, how many televisions are dispatched? Dispatch. 1,000. So, 1,000 into 8,400, 84 lakhs plus 1,200 extra packing cost into 1,000, that will be 12 lakhs, that is 96 lakhs. Are they reversing the ITC for July to September? Yes. While Shah Electronics reverses the input tax credit for the quarter July to September, means they are reversing. So, we need to give the discount, and post supply discount terms are agreed before the time of supply, and we are giving this discount and recipient is reversing the ITC. So, but the discount is on what? 10% on television supplied to the distributors, and this is not on the packing cost. See, this discount is not on the packing cost. This discount is on the sale price. So, 8,400 into 10%, that is 840. 840 into 1,000 televisions. How much 840 into 1,000 televisions? 8 lakh 40 minus 8 lakh 40, that will be 87 lakh 60,000. Are you understanding this? And here, are they eligible for the discount? Of course, because see, for the second quarter how much they are selling? 850, which is more than 500. Okay. So this question is purely related to post-supply discount, whether recipient reverses the ITC or not reverses the ITC. See this. So this is one question. Actually, it is there in the study material, not tested in exam so far. Mr. Kanjilal Adani is an oil exploration and production contractor and is registered under GST in the state of Gujarat. He entered into a production sharing contract with government of Gujarat, wherein he gets a license to explore, exploit and sell the petroleum crude and or natural gas from the government in Aliabet oil field in lieu of royalty and share in profit petroleum. So basically he is a leaseholder, and this leaseholder enters into contract with the government, of Gujarat, with government to explore the petroleum crude or natural gas. And what is that? He will be required to pay royalty and share in profit petroleum. In the month of June, he explored the petroleum reserves and he got a portion of petroleum slate worth 3 lakhs as part of compensation. Means what? Basically this 3 lakhs whatever he is receiving as compensation means, what is the name of it? Cost petroleum. The petroleum silt is a part of cost petroleum. So what is the treatment of this 3 lakhs received by him? Cost petroleum exempted. He is not required to pay any GST because it is mere recovery of expenses. Examine the taxability of petroleum silt received by Adani under the GST law. It is exempted because it comes under cost petroleum. What is the treatment of profit petroleum received by the government? Exempted. What is the treatment of royalty received by the government? That will be taxable, because royalty is always taxable. Only the profit petroleum and the cost petroleum will be exempted. But actually in the circular, they have given it as not taxable under GST. Not taxable means what? It is exempted only. Because what is the meaning of exempted? Notified as exempted, nil rated or non-taxable. So you can even write it as exempted. That is correct answer only. Okay. Chanakya Academy is registered under GST in the state of Uttar Pradesh. The academy runs the following educational institution: Keshav Institute of Technology, a private engineering college. No doubt it will be coming under category 2 education institution. Little Millennium, a preschool in Lucknow, that will come under category 1 education institution. Bright Minds, a coaching institute in Kanpur, that will be coming under not an education institution. Spring Model, a higher secondary school, will come under category 1 education institution. The academy provides the following details relating to expenses incurred. Means these are all their inward supply details. Whether we need to see services provided by education institution or service provided to education institution. Service provided to education institution. In that, the first one is, so category 1, KIT is category 2 and Little Millennium is category 1. Bright Minds is not an education institution. Spring Model is category 1. Printing services for printing the question paper. So where it will come? So we have an exemption. So transportation, catering, security and housekeeping within the premises, category 1 is only exempted. Supply of online educational journals and periodicals, category 2 is only exempted. Admission to or conduct of examination of all 3 category institutions is exempted. So this printing services for printing the question paper will come under conduct of examination. So therefore it will be exempted in case of all category institutions. But as Bright Minds is not coming under education institution, it will be taxable. Then paper procured. Paper procured is not service, it is goods. So I told you, unless in the question it is given as exemption, for all goods the answer will be taxable. So therefore it will be taxable, because nowhere it is given in the question that the paper is exempted. Due to that reason it will be taxable. So for goods alone you will keep this point in mind. In question if it is clearly given as exempted, then only you will take as exempted, otherwise it will be taxable for goods. But for services we need to apply whatever exemptions that we have learned. Honorarium to paper setters and examiners, definitely it is service in relation to conduct of examination. So all category institutions it will be exempted. Rent of exam centers, all category institutions it will be exempted because it is conduct of examination, but in case of Bright Minds it will be taxable. Subscription of online education journals, for which category institution it will be exempted? Category 2. So but in all other cases it will be taxable. Then higher charges for buses used to transport students and faculty. So transportation services, which category exempted? Category 1. So therefore category 1 is exempted and remaining cases it will be taxable. Then catering services. Catering service also exempted for which case? Category 1 is exempted. but in other cases it will be taxable. But catering services can be provided within the premises or outside the premises. It's okay. For example, a school is conducting an annual day function somewhere in an outside place. For that they received catering service. Can they take the exemption? Yes. But for security and housekeeping alone, it should be within the premises. Catering can be outside the premises, even transportation can be outside the premises. Then next, security and housekeeping services for the institution, and it is exempted only in case of category 1. That too, it should be within the premises. Read that. Security and housekeeping service for spring model include a sum of 80,000 payable for security and housekeeping at the student event organized in a banquet hall outside the campus. So this 4,65,000 is divided into 80,000 and remaining 465 minus 80, 385,000. So therefore this 80 will be taxable and this 385 will be exempted, because whatever is outside the premises, that will be taxable, and even bright minds always taxable, and little millennium exempted, and KIT will be taxable. Like this we need to analyze and we need to answer. Okay. So this is also an area which I expect can be tested in exam. This is one question on healthcare services. See this. This is also given in RTP but not tested. Swasthya Nursing Home, a clinical establishment, offers the following services. Rooms provided to inpatients where the room charges per day are 6,500. Taxable or exempted? Taxable. Why taxable? More than 5,000 per day. Therefore, it will be taxable. What if it is given that it is ICU charges? Fully exempted. Plastic surgery conducted to repair cleft lip of a newborn baby. Exempted under congenital defects. Under, see, exempted taxable, even a school child also will write. Really. But you need to write reason. You need to write the reason under which grounds it is exempted. Okay. So why it is exempted? So to restore the anatomy of body parts affected due to congenital defects. Air ambulance service to transport critically ill patients from distant location to the nursing home. Exempted. Any ambulance service provided for transportation of patient. What if ambulance service, say an ambulance driver dropped the patient and returning, they have to return empty. So therefore they boarded 4 passengers and collected 500 rupees each. Whether it will be taxable or exempted? Taxable. Because they are not transporting the patients. And suppose ambulance driver, while taking the patient, so he is a patient, while returning he is a dead body. Okay. Now in that case, whether it will be taxable or exempted? Not a supply. Because transportation of deceased will come under death related, funeral, burial, crematorium, mortuary, including transportation of deceased. So you need to write it as not a supply. Then next, supply of food to inpatients as per the advice of the doctor or nutritionist from the restaurant located in the basement. So they are making sale of food to the inpatients. Therefore it will be exempted. So because any service provided by a hospital to the patients who are admitted for healthcare services is part of healthcare service and it will be exempted. Homeopathic medical treatment exempted because it is a recognized system of medicine. They operate a cord blood bank which provides service in relation to preservation of stem cells. This is not covered under healthcare services. Due to that reason, it will be coming under taxable. So like that, reasons important part. That is like taxable, exempted, like that if you write, you cannot expect full marks. Okay. Then see this. In this one important point, already it is tested in exam, but I wanted to give you this point. ABC Limited, a registered bank, recovered check discounting charges of 5,250 from a customer C and Co. So this discount, any consideration represented by way of interest or discount on loans, advances, deposits will be exempted. Under that logic, check discounting, this 5,250 should be exempted. But actually, check discounting is exempted, but the discounting charges will be taxable. Got it? So generally, interest is exempted, but the processing fee or documentation charges or other charges involved is taxable. Don't see the discounting, see the word charges. Due to that reason, it will be taxable. So that is what I have given. ICA assumed that these charges are service charges over and above discount and chargeable to GST. Clear? Then another point, T Limited, a dealer in air conditioner, supplier each unit at a list price of 30,000 per unit. He also has a EMI scheme. He also has a EMI scheme where the customer can take delivery of air conditioner on a monthly EMI of 10,500 payable in 3 installments. Here, who is giving the EMI facility? Supplier. Means it's a hire purchase transaction or hire purchase financing. Hire purchase transaction. And they charged 600 rupees extra for any delay in payment of monthly installments. So what about this? Interest, penal interest for delay in receipt of consideration. So will it be taxable or not? Yes, it will be included in the value. Remember, interest will be included in the value. And what is the rate of GST applicable to interest? The rate applicable to the original supply. See, every interest on account of delay in receipt of consideration is with respect to an invoice. In the invoice, whatever rate of GST is there, that rate of GST will be applicable to interest. What if in invoice there are two rates of GST, 12% and 18%? Then this interest you apportion between those two products and you take 12% and 18% accordingly. In two places, we need to take this constant assumption, that is interest and that lottery tickets. In these two places, if the question is silent, it should be assumed as inclusive of GST. Interest, always we need to take the assumption that it is inclusive of GST in the absence of information given, and even that lottery tickets also by default we need to take it as inclusive of GST. In other places, depending upon the question, you can take accordingly. If it is inclusive or exclusive, whatever is given in the question. Okay. Super engineering works. A registered supplier in Haryana. Again, this question came only in RTP and MTP, but not came in the main exam. Super engineering works. A registered supplier in Haryana is engaged in supply of taxable goods within the state. Given below are the details of the turnover and applicable GST rates of the final products manufactured by super engineering works, as also the input tax credit availed on inputs used in manufacture of each of the final products and GST rates applicable on the same during a tax period. So they have three products. Product A, output rate is 5%, input rate is 18%. Is it inverted or non-inverted? Inverted. Product B, output 5%, input 18%. Inverted or non-inverted? Inverted. Product C, output 18%, input also 18%. Inverted or non-inverted? Non-inverted. Now determine the maximum amount of refund of unutilized ITC that super engineering works is eligible to claim, provided that product B is notified as a product in respect of which no refund of ITC will be allowed. So actually product B, even though inverted, but it is notified that they will not be eligible for refund. So in that case, we will get refund only with respect to product A. How much will be the refund of unutilized ITC? Come on, calculate. What is the net ITC? What is the net ITC? 54,000. 54,000 into inverted turnover. What is the inverted turnover? 5 lakhs divided by what is the adjusted total turnover? 9,50,000. Like this you do 1 mark also you will not get. Okay. Total ITC should be taken. Total ITC should be taken. Sir, even though one product is only inverted, but you need to take the total ITC. So 54,000 plus 54,000 plus 10,000, that will be 1,18,000. Remember, even if one case only inverted also, while taking net ITC, you need to take all inputs received during the relevant period. So therefore, 1,18,000 should be taken. 1,18,000 into what is the inverted turnover? 5 lakhs divided by what is the adjusted total turnover? 9,50,000 minus 1,18,000 into what is the tax payable on inverted turnover? Tax payable on inverted turnover, 5 lakhs into 5%, 25,000 divided by, do we have any inputs and input services? No, only inputs. So therefore denominator will be same. So then what will be the resultant? 1,18,000 into 5 divided by 9.5 minus 25,000, that will be 37,105 will be taken as the refund. Is it clear here? So important point, all the inputs we should take. All the inputs we should take net ITC. Okay. See this. This is one question which they have already tested in exam related to penalty. question 29, which is in page 408. If you have solved workbook, you can see. Messrs. Fly by night traders, a taxable person, issued an invoice on 15th April 2021 involving input tax credit of 25 lakhs to Messrs. Runway traders, who utilized the same. So what happened? A taxable person issued an invoice involving a ITC of 25 lakhs and to the recipient, and the recipient has utilized the same. No supply of goods was involved in this transaction. So what is it? Invoice without supply. Between the two traders, fly-by-night traders conducted this transaction at the instance of its tax consultant, who was not a qualified professional. Explain the relevant provision in brief and determine the amount of penalty leviable under CGST Act, if any, on the persons involved in respect of the above referred transaction. Now here if you see, first of all, on the supplier, who is the supplier? Fly-by-night traders. On fly-by-night traders, there will be penalty under 122 subsection 1. For what default? Invoice default. Because they gave an invoice without supply of goods, so there will be penalty under 122 subsection 1. Why not 122 subsection 2? Because is there a tax amount involved in the offence or not? There is no tax involved in the offence. Why no tax involved in the offence? I have not at all supplied, but I raised invoice. Where I have liability? I don't have liability at all. I just gave an invoice. Just because giving invoice, there will be liability on me. No, there should be supply. What is a taxable event under GST? Supply. If the supply itself is not there, why the hell I need to pay GST? So therefore, on fly-by-night, there is no tax liability. When there is no tax liability, there is no non-payment of tax, short payment of tax, etc. How the recovery can be made? So due to that reason, 73-74 will not be applicable on the supplier. As 73-74 not applicable on supplier, there will be only penalty under 122 subsection 1. Now you understood. So therefore, penalty will be only under 122 subsection 1, which is 100% of the amount involved in the offence. What is the amount involved in the offence? 25 lakhs or 10,000, whichever is higher. So they need to pay a penalty of 25 lakhs. Is it clear in the hands of fly-by-night traders? Now go to the recipient. Who is the recipient? Runaway traders. Runaway traders availed the ITC and utilized the same. So they have taken the ITC and they have utilized the same, which means that it's a fake ITC, correct or not? So they should not have taken ITC. And if you have to write an exam, see in that attempt, in December 21 attempt, this circular was not there. That's the reason why I have not given. But now what you need to write is that if demand and recovery is initiated under section 73 or 74, then the penalty will be payable by these runaway traders under section 122 subsection 2. Okay, and if that too, because see actually if you are not writing that also, the answer is correct, but we are just showing the knowledge. See, I know, my dear examiner, I know the subject, like that you have to show off, you understood, so that you have to tell. But even if you are not writing this, the answer is still correct. Reason being, they have not given in the question that they are invoking 73 or 74. What I told you, only when 73 or 74 is invoked, the penalty will be coming under 122 subsection 2. But on a safer side, we are writing this point. Okay, what is that? If the recovery is initiated under 73 or 74, then the penalty will be levied under section 122 subsection 2, which will be 10% of tax or 10,000 whichever is higher, or 100% of tax or 10,000 whichever is higher. However, if the recovery is not initiated under 73 or 74, then the penalty will be levied under section 122 subsection 1, which will be under ITC default, which is also 25 lakhs, correct? Then next. Here, fly-by-night traders conducted this transaction at the instance of this tax consultant who was not a qualified professional. Now, in this case, actually we need to take one assumption and we need to write. What is that assumption? So, as the offence is committed, which offence it is? ITC default. As the offence is committed at the instance of the person and assuming that he retains the benefit out of that offence, the penalty will be levied under section 122 subsection 1 capital A, that is 25 lakhs. How much ever is the tax passed on or ITC passed on, the 25 lakhs will be taken as penalty. However, this point also you write on safer side in the answer. However, if that person has not retained any benefit, but he is just a party to the offence, then in that case a penalty will be levied under 122 subsection 3, which is up to 25,000. But you know why we are taking this assumption? Because out of the two conditions, one condition is specifically given, because at his instance the offence is committed. Actually, what are the two conditions for 122 1A? At the instance of that person, the offence should be committed and there should be the beneficiary of that offence. Okay, as one condition is given, that's why other condition we are taking as the assumption. Okay, so in all these three people there will be penalty 25 lakhs, correct? Yes or no? Then here, assuming that he retains the benefit, okay, we are taking this as the assumption. Even ICA also took the same assumption for the suggested answer, that's why I am telling you this. Okay, next, understood now this question? And here you can also apply section 73, 74 if invoked, then penalty under section 122 subsection 2. Yes, see this question. This is a question already they have tested related to imprisonment, cognizance, bailable, etc. They have given this question. Examine whether the offences committed in each of the following independent cases are bailable. Further, determine the quantum of punishment on prosecution under CGST Act in each of these cases. Number 1, Homi Gaba collected 240 lakhs as tax from its clients and deposited 150 lakh with the central government. So 240 lakhs is collected as tax and paid. So 150 lakhs, balance amount of tax is not paid to the central government. It is found that he has falsified financial records and has not maintained proper records to evade the tax. What are the two offences that he has committed to attract imprisonment? Books of accounts default and collected an amount as tax not paid within 3 months. First, for books of accounts default, should we see any amount? No, always it will be up to 6 months or fine or both. And what will be your answer if they have already committed this offence? Up to 5 years plus fine and minimum imprisonment of 6 months. Then what about the second offence? That second offence is collected an amount as tax not paid within 3 months. And should we check the amount? Of course, yes. What should be the amount involved? Greater than 1 or greater than 2? Greater than 2. Greater than 1 is only in one case. What is that? Invoice without supply. So greater than 2 should be involved. So is it the amount involved more than 2 crores? No, because 240 minus 150, how much? So it does not exceed 200, that is 2 crores. It does not exceed 200 lakhs, that is 2 crores. So due to that reason, will there be any imprisonment on this person? No, there won't be any imprisonment on this person under that offence. But on account of books of accounts default, there will be imprisonment. Then look into second. So for subsequent offence also we should check the amount. Yes, amount we should always check. First time offence or subsequent offence, amount we need to check. But the imprisonment term will change if it is first time offence or subsequent offence. Then second, Datukeshwar Dutt collects 630 lakhs as tax from its clients, but deposits only 120 lakhs with the central government. Again here it is amount collected as tax and balance amount of tax is not paid to central government. What would be the implications in above case if Homi Gaba and Datukeshwar repeat the offences? First, so only one offence, amount collected as tax but not paid within 3 months. What is the amount involved in the offence? 630 minus 120, that is, so more than 5 crores. More than 5 crores, what will be the imprisonment? Up to 5 years plus fine, and there is a minimum imprisonment of 6 months, and this answer will be same even if they are a subsequent offence. Okay, even if it is a subsequent offence, you understood? Then this is about imprisonment you have written, but you have to write about the arrest also. In the first case, is there arrest? No, arrest is not applicable. Why arrest is not applicable? because it is not IIC. Only for IIC arrest is applicable. And in the second case, whether arrest is applicable? Yes, because it is collected amount as tax not paid within 3 months and the amount exceeds 2 crores. So arrest is applicable. In the first case, what is the type of offence? We have to write as non-bailable and like non-bailable or bailable? Bailable, non-cognizable plus bailable, okay. And but sir, arrest is not there, sir. That's what I told you. Stupid point we have to write, even though there is no arrest. And second one, in the second case, what is this offence? Cognizable plus non-bailable. Why? Amount exceeds 5 crores. So we need to write it as cognizable plus non-bailable offence. These are the 3 aspects we need to write in every question. So this attempt, I don't know, somewhere my intuition is telling it will come. So imprisonment related provision with arrest and with this cognizable and bailable, okay. So you have to learn this, and these 3 points you have to apply in the question and you need to write the answer, okay. Yes, see this question. This question number 35. So one student is asking, sir, can you give all the amendments applicable for November 24 in one PDF? Actually, November 24 we don't have any amendments. Okay, whatever amendment for May 24, the same will be applicable for November 24 also. Okay, so you don't have to read anything else except for 1 or 2 simple points which I said, that is actually negligible. Okay, then conduct MCQ videos also. I'll try, definitely. I said that in my batches I will definitely do, but first revision we need to do and then only MCQ, because we cannot learn through MCQs. Okay, MCQ is for testing. Okay, so definitely I will do that. Sir, I remembered almost all section numbers, but I am scared while writing act which is related to that section. Better IGST Act section numbers you leave. IGST Act section numbers you leave. Only CGST Act section numbers you remember, so that every section number that you are writing in GST will be CGST Act only, no confusion. Okay, if you are having confusion between CGST Act or IGST Act sections, forget, leave it, throw it, and only CGST Act section numbers you remember. So by default, if you are writing a section number in the answer sheet, it will be of CGST Act only, and GST custom, that difference you will be knowing now. That difference you will be knowing, that is enough. See this question number 35. Messrs. Houseful Convention Hall is in the business of letting out its hall for functions. It provides you with the following information for determining the amount of refund out of advance received based on the time of supply for one of its clients. Now this is the data. Advance paid at the time of booking the hall for function from 1st to 3rd November 16/7/2020, additional deposit paid 18/8, and function is held as scheduled from 1st November to 3rd November. Invoice is issued, taxable value 2511 for 2,50,000. Consider that there is a change in rate of tax from 15th October 2020 from CGST 2.5, SGST 2.5 to CGST SGST 9%, 9%. What would be the amount of refund payable to the client? First, actually this question is related to change in rate, because there is a change in rate. For this change in rate, we need to determine what is the time of supply for this transaction. To determine the time of supply for this transaction, what is the first aspect I asked you to check? Check whether this is before change in rate, completion is before change in rate, or the completion is after change in rate. Function is held on 3rd November, but there is a change in rate with effect from 3rd November, but there is a change in rate with effect from 15th October. So therefore the supply is after change in rate. Okay, now we need to see what is the date of invoice. What is the date of invoice? 25/11, before change in rate or after change in rate? After change in rate. And what is the date on which payment is received? The payment is received before change in rate. On 2 dates the payment is received, that is on 16/7 and 18/8, that is before change in rate. I told you, in case supply is after change in rate, if both invoice and payment before change in rate, whichever is earlier, if one before, one after, whichever is later. Which is later? 25/11 is later. So therefore, what is the time of supply in this case? 25/11/2020. As on 25/11/2020, what is the rate that is prevailing? Old rate or new rate? New rate. So therefore, what is the rate of GST? 9%, 9%, that is 18%. What is the taxable value? What is the taxable value? 2,50,000. So 2,50,000 into 18%. So how much it will come to? 2,50,000 into 18%, that will be 45,000. So which means, what is the total amount? 2,95,000, but already we collected 3 lakhs from that person in total, correct? So therefore already 3 lakhs collected, but we have to collect only 2,95,000. So what is the excess amount collected? 5,000. That 5,000 will be the refund. You understood? And suppose if they make a question like this, what would be the differential amount, if any, payable or receivable from the government if GST already paid on advance? If GST already paid on advance, what is the differential amount payable or receivable from the government? So what is the advance already collected? 3 lakhs. And at the time when we collect the advance, what was the rate of GST? 5%. So 3 lakhs into 5 divided by 105, that will be 14,286. 286 we would have already paid. But what is the liability? 45,000. So minus 45,000, which means that 30,714 rupees, 30,714 rupees still we have to pay. Even though on advance we have paid, still we have to pay, because the effective tax will be 45,000. Maybe like that also they can modify a question. Okay. Then one more question we will see related to change in rate, because mostly change in rate will only be tested in exam, because if at all they are asking a question on time of supply, section 12 and 13 was intermediate portion. So on that they will not ask a standalone question, but that information will be useful for doing the 14 marks question. But a standalone question, if you are getting on time of supply, that will be on section 14. Okay, see this. Already one type of question we saw, this is another type of question. Mr. Mahendra Sharma, an interior decorator registered at Ahmedabad, Gujarat, provided services to one of his clients, XYZ Company Limited, registered at Pune, Maharashtra. The provision of service was completed on 10/8 and the payment received was entered in the books of Mahendra Sharma on 11/8. With effect from 16/8, applicable GST rate was increased from 5% to 12%. So they have changed the rate, that is increased. Rate has been increased from 5% to 12%. What is the effective date from which it has changed? 16/8. However, the payment for the service received was credited in the bank account on 17/8 and the invoice for the same was also raised on 23/8. So first, what is the effective rate, change in rate? Change in rate with effect from 16/8, and what is the date of invoice and date of completion and date of payment? We need these 3 datas. Date of invoice is what? 23/8. 23/8 is the date of invoice. Date of completion, when the service got completed? 10/8. The service got completed on 10/8. And what is the date of payment? See, whether the payment got credited within 4 working days or not, we need to see. When the payment got credited in his bank account? 17/8. Is it within 4 working days from 16/8? Yes. So within 4 working days from 16/8, the payment got credited. So what should be taken as the date of payment? Entry date or credit date, whichever is earlier. What is the entry date? So the books was entered in the books on 11/8. So 11/8 or credit date 17/8, whichever is earlier. So which is earlier? 11/8. Okay, 11/8. And that is the data. Now you need to determine what is the time of supply. Whether the completion is before change in rate or after change in rate. Completion is before change in rate. Whenever the completion is before change in rate, always it will be invoice or payment, whichever is earlier. Correct or not? So completion, see there, completion is before change in rate here. Completion is before change in rate. So always we need to take invoice or payment, whichever is earlier. Which is earlier? 11/8/2000 will be the earlier date. As on that date, what rate is there? old rate, so 5% will be applicable. Is it clear? So the time of supply will be 11.8 and the rate will be 5%. Now see the another part in this question. Would your answer undergo any change in the above case if the payment was credited to the bank account on 14.8 instead of 17.8? So payment credited 14.8 means even it is before the change in rate itself, then also the answer will be same. There is no change in the answer. Suppose, what if the payment got credited in the bank account, okay, on somewhere like 31/8/2000, then 31/8/2000, then what will happen? Payment got credited on 31/8 as a payment not credited within 4 working days. So we need to take the date of payment as the date of credit. Now in this case, what will be taken as the time of supply? Invoice or payment, whichever is earlier. Still the same time of supply. Still the same time of supply provision, because the completion is before change in rate. Invoice or payment, whichever is earlier. So invoice or payment, whichever is earlier, is what? 23/8. 23/8, what is the rate that is prevailing? New rate. So therefore we need to take 12%. Like this also they can coin a question related to change in rate. Understood? Starcart Limited owns and operates a web portal in the name of Starcart and is registered with the jurisdictional GST authorities in Delhi as an e-commerce operator and liable to collect TCS under section 52 of CGST Act. So basically they are an e-commerce operator. They provide listing service to various sellers for selling the goods to ultimate consumers. Besides this, they also sell their own products through the same web portal. So therefore, they are also making their own products through the web portal on which TCS is not applicable, and they are supplying the goods belonging to others through their portal on which TCS is applicable. Correct? If the seller and e-commerce operator is same, TCS not applicable. If the seller is different from the e-commerce operator, definitely TCS will be applicable. Then, for the listing services provided to the sellers, Starcart charges a listing fee at the rate of 10% on the turnover of goods sold by the seller in a particular month. Usually in case of supply of goods through e-commerce operator, who is liable to pay GST on the goods? On the goods, who is liable to pay GST? E-commerce operator or the supplier? Supplier. Only in case of supply of notified services through e-commerce operator, liability to pay GST is on e-commerce operator. But in case of supply of goods through e-commerce operator, the liability to pay GST is on the supplier. But what is the liability on the e-commerce operator? Supplier will pay GST on sales power, but e-commerce operator will pay GST on what? Commission plus TCS. Understood? So they are collecting a listing fee, commission. What is that listing fee? 10% of the turnover of goods sold by the seller in a particular month. Such listing fee is recovered from the seller irrespective of any return of goods sold through Starcart. The customer can choose from wide range of goods listed on the web portal and place an online order for the goods. The payment is made by the customer through the payment gateway in online mode only. At the time of monthly settlement, Starcart makes the payment to sellers after adjusting the tax collection at source. Means TCS is applicable. And why are they talking about these points? Because one of the conditions says that so payment should be collected by the e-commerce operator. So in this case, Starcart is only collecting the payment from the buyer and they are deducting the TCS commission, etc. and then they are remitting it to the supplier. Then the invoice for the goods sold on Starcart is issued by the seller. So the liability to pay GST is on the seller in the name of the customer, and the tax is charged on the basis of location of seller and the customer. The goods are shipped directly by the seller to the customer, and there is no responsibility of shipping the goods on Starcart for third party sellers. Okay, there is no responsibility on the Starcart. Okay, so which means in case of return of goods by the customer, the shipping is arranged by Starcart and it charges a fee of 20%. So when they sell the product, so 10% they get, and when they return the product, when a customer return the product, they get 20%. Super, na? So if someone sells the product through their platform, they get a listing fees of 10%, Starcart, and if the product is returned, Starcart will get a fee of 20% of the value of goods returned as cancellation charges and refunds the balance amount to customer. Further, 10% of the value of goods returned is collected from the seller by Starcart as handling charges, means 30%. Whenever there is a return, they will get 30%, 20% from the customer and 10% from the seller. In the month of January, Pulkit, so up to this is the knowledge of the business, and from here only the question starts. In the month of January, Pulkit, a resident of Rajasthan, purchased the following goods from Starcart. Laptop having a value of 50,000. Now carefully listen. So from Starcart, laptop having a value of 50,000 and printer having a value of 10,000. Both the products are sold by Infocom Limited, a seller listed on Starcart and registered under GST in the state of Uttar Pradesh. So who is the supplier? Infocom. Are you listening, pa? Can you all stand and sit once? I could not see your eyes and all. Your eyes are fully like, for last 50 days, if you are consuming weed, how it will be? Like that your eyes are. Sit here. I am also getting up early in the morning. I am also taking class. I am also putting effort. I am not getting sleep. How you will get sleep here? Say this. I am having fear. You know what is the fear I am having? What if, this is the last batch for me. So next batch, if I am not having any students, what should I do? Like that I have a fear. Really. So therefore, always I will give my 100%. And therefore, so the fear will always be there. What if the students rate me so badly? Because this is a competitive industry and any good faculty may come any day they may come and it will be exit for me. So therefore, every day is like a challenge. So that fear is there. So I will not get sleep. But you don't have the fear. You don't have the exam fear. Okay. So keep that exam fear in your heart. You will not get sleep. Night and all, exactly 3 o'clock you will get up and sit and read. It will come. If the fear is there, scientific reason, people who get up at 3 o'clock will have some kind of fear or stress, they only will get up. It's okay. After you go for job, you don't have stress. But until now, you should have the stress. Okay. You should definitely have the stress. Okay. Then only you will not sleep. Listen. So, see this question. Who is the supplier? Infocom Private Limited is the supplier. And who is the e-commerce operator? Starcart. Who is the recipient? Pulkit. Where the Infocom is located? Uttar Pradesh. Where Pulkit is located? Rajasthan. Which means it is supply of goods. Normal supply of goods. What is the place of supply? Ending point of the goods. Supply involves movement of goods. Correct or not? So therefore, ending point of the goods will be taken. What is the ending point of the goods? Rajasthan. Location of supplier Uttar Pradesh. Place of supply Rajasthan. Two different states only na. Therefore, interstate supply chargeable to IGST. Now in this case, on 50,000 and 10,000, who will pay GST? Infocom will pay GST. Then what Starcart will get? Out of that 50,000 and 10,000, they get 10% as the listing fees, plus they are also required to deduct TCS. Then second transaction, mobile phone having a value of 30,000, sold by Starcart in its own capacity. In this case, who will pay GST on 10,000? Sorry, 30,000. Starcart. TCS applicable or not applicable? Not applicable, because it is their own sales. So they have only the GST liability. Correct. So where is Starcart located? Delhi. Starcart is located in Delhi. And where is Pulkit located? So ending point is Rajasthan. So therefore it will be also interstate supply. Then C, CCTV camera system having a value of 1 lakh, sold by Secure World, listed on Starcart and registered under GST in the state of Gujarat. Who is the supplier? Secure World. Where is that located? Gujarat. And who is the recipient? Pulkit of Rajasthan. Ending point Rajasthan. Again it is interstate supply, and therefore who will pay GST on 1 lakh? Secure World. Then what is that? This Starcart will pay GST on listing fees, plus even TCS also will be applicable to them. Is it clear? Now all the amounts given above are exclusive of GST wherever applicable. The opening balance of input tax credit for the relevant tax period for Starcart, Infocom Limited and Secure World is nil. Further, there is no inward and outward supply transaction for Starcart, Infocom Limited and Secure World in January apart from the aforementioned transaction. Subject to the information given above, assume that all other conditions necessary for availing ITC have been fulfilled. And GST applicable, they have given the rates, but no CGST, SGST is irrelevant, only IGST will be applicable. Now based on the facts of the case scenario given above, choose the most appropriate answer to the question number 2.1 to 2.4. So 2.1, 25.1. The net tax liability, including amount payable as TCS and after set off of credit if any of Starcart Limited for the month of January. Now we need to compute the liability of Starcart. Now first transaction. In the first transaction, what is the liability on Starcart? 60,000 into 10% into 18%, correct? So do that. 60,000 into 10% into 18%, that is 1080. Second transaction. First we will compute liability or GST liability, okay? And thereafter we will see TCS. First GST liability. Second case 30,000 into 18%, that will be 5,400. Third case, CCTV camera. In that case, what is that they will get? 1 lakh into 10% into 18%, that is 1,800. This is their liability, correct? Do they have any ITC? No, there is no information. If there is anything in question, you need to check for ITC and you need to adjust, because the question is about net liability. Plus, what is the TCS? What is the TCS? First case TCS applicable or not? Yes. What is the value? 60,000. 60,000 into 1%. How much? 600. Second case, secure world. Second case, no TCS. Third case, 1 lakh. 1 lakh into 1%. That is 1,000 will be TCS. They are asking total, including the amount of TCS. So 1,080 plus 5,400 plus 1,800 plus 600 plus 1,000. That will be 9,880. Option D is the answer. Understood? Then second question. The net liability after set off of credits if any of Infocom Limited and Secure World for the month of January. So net liability of Infocom and Secure World they are asking. Go to Infocom. Infocom gross liability is how much? Boss, 60,000 into 18%, correct? So what is the gross liability of Infocom? 10,800 minus, they will get ITC. What ITC? Sir, whatever commission GST paid, they will get the ITC. So this 1,080 they can take as ITC. Are you understanding? So they will get a ITC of 1,080. How 1,080 we got? That is the recipient, that is e-commerce operator will be deducting a listing fees. On that listing fees there is some GST that can be taken as ITC by us. Plus even TCS also can be deducted. What is the TCS? 600. So 600 also will be deducted. So what is the net liability? 10,800 minus 1,080 minus 600. That will be 9,120. Okay. Then for Secure World, what is the gross liability? 1 lakh. 1 lakh into 18%, that is 18,000. Then that person will be collecting commission. On that commission, what is the GST? 1,800. So 1,800 we can take as, that is Secure World can take ITC plus TCS. What is the TCS? 1,000. So if 1,000 is deducted, then what is the net liability? 18,000 minus 1,800 minus 1,000. That will be 15,200. So option C. Then next, third question. In case it is assumed that Secure World's turnover does not exceed the threshold limit for obtaining registration under applicable GST law, Secure World. So third case, third transaction, Secure World is third transaction. They have not exceeded the threshold limit means, are they compulsorily required to get registered? No. No. Why they are compulsorily required to get registered? Good. They are making interstate supplies. Actually, they are not compulsorily required to get registered if they are making intrastate supplies. That's why we discussed where is Pulkit located, where is Secure World located, and it is an interstate supply. If they are making interstate supply, definitely they need to register compulsorily. So, Secure World will discharge tax only on sales made through Starcart. Secure World is not required to obtain registration. Starcart will be liable to discharge tax. Secure World is required to obtain registration and shall be liable to pay tax on all taxable supplies made through Starcart on its own. Option D is the correct answer. Suppose if they are making only intrastate supplies, then they are not compulsorily required to get registered. Then fourth one, assuming that Pulkit returns the printer. So printer purchased from Infocom Limited in the month of January. As per the return policy, StarCard charges 20% of the value of the printer as cancellation charges from Pulkit and 10% of the value of printer as handling charges from Infocom Limited. The net tax liability, including amount payable as tax collected at source and after set off of credits if any of StarCard in such scenario for the month of January would be. So first our regular liability is there na for StarCard. What is the regular liability of StarCard with respect to the first transaction? They get a commission na for the first transaction. What is the commission that they get for the first transaction? 10%, 1080. No change here. These three things will be same. These three things will be same first. Okay, 1080, 5400 and 1800. 1080, 5400, 1800. Now extra they get 30%. So what is the value of the printer returned? What is the value of printer returned? 10,000. So 10,000 into 30% into 18%, that is 540. You understood how we got 540 extra? That is printer return. On that printer, 20% they get from Infocom, 20% they get from the customer and 10% they get from the Infocom supplier, which means that they are getting 30% of 10,000, that is 3,000 on that 18% GST, 540. Understood up to this? Now, then TCS you compute. What is the TCS? First case, what is the TCS? First case, what is the value? Not 600, wrong answer. Return, sales returns we need to reduce while computing the TCS. Okay. So what is the sales value? First case, what is the sales value? 60,000 minus sales returns 10,000. So 60,000 minus 10,000, 50,000. 50,000 into 1%, that will be 500. You understood? So sales returns needs to be reduced. Okay. Next, last 1 lakh, that will be same. 1 lakh into 1%, that will be 1000. So you do the total of this, 1080 plus 5400, 1800, 540 plus 500 plus 1000, that is 10,320. You understood how we got 10,320? Only this 500 and this 540 are the adjustment extra points. Remaining and all will be same. Okay. So purely this question is on TCS and e-commerce operator. Again, this question also chance is there. Okay. Really, trust me, because it was given in study material. Long back it was in case scenario MCQ, either as a case scenario MCQ or as a practical question, they may be asking this. Okay. ABC Petroleum Limited is engaged in the business of refining and marketing of petroleum products. It has one refinery, each in the state of Tamil Nadu, West Bengal and Maharashtra, and numerous administrative and marketing offices spread across the country. Let it be. So this is the knowledge of their business. Now, whenever you get a integrated case scenario like this, so don't read the paragraph fully, just few lines in the beginning and then go to the end MCQs you see. Because what will happen is that if you read this paragraph, again you have to read this paragraph because you don't know what is the requirement. So see the requirement first. So skip this, go to the first question. The value of company's supply in the Union Territory of Puducherry is 32,34,000. Group A products. In the state of Goa is 18,38,000. Group A and Group B products for the current financial year. GST registration. So there is a question on GST registration. Then the eligible ITC attributable to taxable supply. Eligible ITC. Eligible ITC means what? ITC availed minus ITC reverse. That is known as eligible ITC. Attributable to taxable supply available at the marketing cum administration of January is. Then the eligible ITC attributable to taxable supply in respect of capital goods procured in the state of Tamil Nadu for the month of January. Actually, these two questions are related to eligible ITC. And next, lubricant value 10,000 has been stock transferred from the blending plant located in the state of Tamil Nadu to the refinery located in the same state in the month of January, and the GST payable on such transaction is. So for stock transfer, they are asking how much is the GST payable. So there is a question on valuation, stock transfer, etc. Then, due to sudden fire in the storeroom of the refinery located in Maharashtra, the entire quantity has been destroyed. So blocked credit related. So purchased goods are destroyed. Can we take ITC or not related to that? So these are the 5 MCQs. Now we will read the question. So they are having business in multiple places. The company has separate marketing cum administrative office for every major state and common administrative cum operate offices, etc. Actually, that is not at all required for MCQs, correct? So this paragraph, mainly in IBS, it will help you. So in IBS, if you see every case study, pages and pages will be there for introduction. That and all you don't have to read, okay? So sitting in the exam, that is not your objective. See the MCQ and the MCQ related paragraph you see, that itself will give you the answer for the MCQ, so that 4 hours you don't have to really waste reading some nonsense, okay? Actually this is nonsense only, let them have any business here, I also have a lot of business to do, okay? So that is not required for us. As a policy, all the places of business in a state are registered under GST under one registration, okay, let them do. This is important. Imported crude is used as input in refinery and following major products are extracted. They have 2 products, 2 groups. Group A product, Group A products are chargeable to GST. Group B products are not chargeable to GST, okay. But what are those products? Least bothered, we don't have to. Base oils are further sent to blending plants where they are blended with additives to produce lubricants. The company provides the following particulars for the state of Tamil Nadu, Maharashtra and Kerala for the month of January. So actually Kerala, one more column is there. I only removed it because none of the MCQ is related to Kerala, okay. Really, space and all I can save, that's why I removed it. So actually all the MCQs are related to Tamil Nadu and Maharashtra. So Tamil Nadu and Maharashtra data only we need, because the MCQs are related to that. And they gave value of supply inclusive of all taxes and duties, Group B products, then Group A products value, tax paid, etc. is there. Assume that all of the Group A products are chargeable to GST at 18%. And the opening balance of ITC so is nil, subject to information given above. All the other conditions necessary for availing ITC have been fulfilled. Further, there is no other inward and outward supply. Now actually, do they have only taxable supply or they have both taxable and exempted supplies? Both taxable and exempted supplies, means full credit they will not be able to take, only proportionate credit they will be able to take, correct or not? That's why they gave those 2 MCQs related to the eligible ITC. Now, let's move on to the first question. The value of company supply in the Union Territory of Puducherry is 32,34,000. Group A products. Group A products are what? Taxable or exempted? Taxable. So they are making taxable supplies in Puducherry. And in the state of Goa, 18,38,000, both taxable and exempted for the current financial year. What is the applicable threshold limit if you are doing business in Puducherry and Goa? Only goods. They are engaged only in supply of goods. Whether 40 lakhs limit is applicable or not applicable. Okay. So remember this. When you are doing business in multiple states, just 3 points you need to remember. When you are doing business in multiple states, if one of the state is in MMTN, Manipur, Mizoram, Tripura, Nagaland, the applicable limit will be 10 lakhs. 10 lakhs. Check that. Are they doing business in Manipur, Mizoram, Tripura, Nagaland? Any one state is there? No. So 10 lakhs limit will not be applicable. Super. None of the states should be in MMTN use stamp, and they should be exclusively engaged in supply of goods, then 40 lakhs limit will be applicable. None of the state is in MMTN use stamp and they are exclusively engaged in supply of goods. They are exclusively engaged in supply of goods, because group A items also goods, group B items also goods. They are exclusively engaged in supply of goods, but they should not be doing business. They should not be doing business in MMTN U stamp. What is MMTN? Manipur, Mizoram, Tripura, Nagaland. U stamp. U for Uttarakhand, S for Sikkim, T for Telangana, A for Arunachal Pradesh, M for Meghalaya, and P for Puducherry. They are doing business in Puducherry. That's why 40 lakhs limit is not applicable. You understood? So balancing figure. What is the balancing figure? 20 lakhs. So what is the applicable threshold limit in this case? Come on, yeah. 20 lakhs. So the applicable threshold limit, the applicable threshold limit is 20 lakhs. And what is their aggregate turnover? 32 lakh 34,000 plus 18 lakh 38,000, because in aggregate turnover we will take taxable supplies as well as exempted supplies. So see what is their aggregate turnover, come on. 32 lakh 34,000 plus 18 lakh 38,000, which is 50 lakh 72,000, 50.72 lakhs. Whether aggregate turnover exceeds applicable threshold limit or does not exceed applicable threshold limit? Exceeds. So whether they are required to register or not required to register? Required to get registered. Now tell me, where are they required to get registered? Both Puducherry and Goa, or only in Puducherry? Both Puducherry and Goa. Why? Both in Puducherry as well as in Goa, they are making taxable supply. See, once a person is liable to get registered, they need to register in each state from where they are making taxable supplies. So therefore, they need to get registered in both Puducherry and Goa. So the answer is C. Required to get registered in both Puducherry and Goa. Understood? Then second question. The eligible ITC, actually first question, no, we did not read paragraph at all. That is the advantage. Some questions, because ICI, no, not that intelligent and all, okay. They feel like they are intelligent, no, not at all, not that intelligent. They will give some MCQs which is no way connected to the paragraph at all. Many questions will be like this. So therefore, you don't have to read the paragraph always, because last attempt, na, those students who went for IBS, they said, sir, we were not having time to refer the book and all and then write, etc. We were finding it difficult. So that's why I am telling you this. So please ensure that you are reading the MCQs first. And then, because if you spend too much time on reading the paragraph, see one paragraph will be like what? So one question, case study 1 which itself was like 3 pages. So 3 pages where you will read. That too, you don't have the habit of reading now. So you will swap shots, reels, photos, correct or not? And that too, color means you will read, and no color means black and white we will not be able to read, correct or not? So due to that reason, so don't read that. MCQs directly we will go and we will search. For MCQ itself we will make a search. So first, for IBS exam, you should have a very good book. You have to create the weapon ready, and then only you should go for war. And if you go to the war and think whatever available I will do with that, the enemy will kill you. Remember, you are fighting ICI. You understood? ICI is your enemy. Be careful. And your enemy will always be in an attacking mode only. Sometimes you should attack, sometimes you should defend. You understood? So weapon should be there. So proper book you need to select before itself and create everything and make the proper indexing also, which page, what concept is there, etc. and all, and go for the exam. Okay. Next, see this second question. The eligible ITC attributable to taxable supply available at the Marketing cum Administrative Office in the state of Maharashtra. Go to that, state of Maharashtra. State of Maharashtra. What is the division here? What is the division? Marketing cum Administrative Office. So Marketing cum Administrative Office, Maharashtra. What is the amount? So all these are rupees in thousands. Rupees in thousands. So how much is the ITC? Inputs and input services 3000. Can we take fully? No, because this is common for both taxable and exempted. So what is the ITC availed? What is the ITC availed, boss? 3000 minus what is the ITC reversed? 3000 into exempted turnover divided by total turnover. Which group is exempted? Group B. See group B value. Which state you need to see? Maharashtra. Maharashtra, what is the group B state exempted turnover? 3000. But this 3400 is inclusive of all taxes and duties. Excise duty leviable on group B products. Should it be coming in the turnover or not? No, it should not come in the turnover. VAT on supply of group B products. Should it be coming in the turnover? No. So take out 600. Tax paid on inputs and input service, etc. So what will be taken as the exempted turnover for this? Come on. Exempted turnover is 3400 minus 1000 minus 600, that will be 1800. And what is the total turnover? E by F. Exempted turnover to total turnover. Exempted turnover 1800. See the taxable turnover. What is the taxable turnover? That is group A products. 200 before all taxes. So therefore you don't have to exclude anything. Before taxes only. So take this 200. So therefore what is the total turnover? 2000. So 3000 into what by what? 1800 divided by 2000. So therefore 3000 into 1800 divided by 2000, that is 2700. If you reduce, what is the net eligible ITC? 300. So option B is the answer. Is it clear here? Actually, what point is tested here? While doing the turnover, whether old indirect tax should be included or excluded. You tell me. Excluded. It should be excluded. Then next, third MCQ. The eligible ITC attributable to taxable supply in respect of capital goods procured in the state of Tamil Nadu for the month of January. Go to state of Tamil Nadu. What is a capital asset procured? Refinery 12, correct? 12,000. Now what is the ITC availed? Come on. ITC availed will be 12,000. Now for capital goods, how will you reverse? Monthly, not 5%, yaar. Monthly. How you will do that? Divided by 60 into exempted turnover divided by total turnover. So for this also I need exempted turnover and total turnover. What is the exempted turnover? Group B products. Tamil Nadu, 1650 minus excise duty 500 minus VAT 250. Therefore 1650 minus 500 minus 250, that will be 900. So exempted turnover is 900. And what is the total turnover? Total turnover will be 1000. How 1000 will be the total turnover? That is 100. Already 900 we have, taxable turnover 100. So total turnover will be 1000. So ITC reversed. How to compute ITC reverse for capital goods? That will be ITC availed divided by 60 months into exempted turnover divided by total turnover. That is 12,000 divided by 60, 200 into 900 divided by 1000, that will be 180. So what is the net eligible ITC? 12,000 minus 180, that will be 11,820. So option D. Got it? Next, fourth. Lubricant worth 10,000 has been stock transferred from the blending plant located in the state of Tamil Nadu to the refinery located in the same state. Are they going for separate registration or not? We need to check. So this paragraph you see here. As a policy, read this. As a policy, all place of business of the company in a state are registered under GST in one registration. Means within the state they don't have multiple registrations. So therefore, is it a transaction between distinct persons? No. As it is not a transaction between distinct persons, the answer will be A, nil, as the transaction is not a supply. Then fifth MCQ, due to sudden fire in the storeroom of the refinery located in Maharashtra on 28 January, the entire quantity of the spares procured in the month of January gets destroyed. What action is required from ABC Petroleum Limited? So can they take ITC or they cannot take ITC? They cannot take ITC. Same month it is destroyed now. Suppose this month it is purchased and next month it is destroyed. This month we will take ITC, next month we will reverse. But in the same month it is destroyed. No action is required. False. ABC Petroleum should report to jurisdictional GST department. False. ABC Petroleum should not avail the ITC of tax paid on spares. Option C is the answer. Understood? Okay, now we are moving on to question number 34. So in this question number 34, this is actually a 14 marks question type. So what they have done is that they have given the receipts and payments. So receipts means it will be outward supply, payments means it will be inward supply. And for each and every receipt and payment, they have given some detailed information, and we need to analyze this and we need to prepare the net GST payable computation. Actually it is. So you can see the end, you can find compute the total ITC available for the given tax period and net GST payable. Okay. So what we need to do in this case is that first we need to prepare 4 statements. Already you would have seen so my video explanation about how to present 14 marks question. So we need to prepare it in 4 statements. So the first statement will be, so computation of gross GST under FCM. So gross GST on outward supplies. Gross GST on outward supplies will be statement 1. Gross GST on outward supplies. And the next statement that we need to prepare is, so inward supplies. GST on inward supplies under RCM. GST on inward supplies under RCM. That is the second statement. And the third statement is related to input tax credit availed and utilized. What is the input tax credit availed and utilized or reversed? So anyway you can do that. So input tax credit availed and reversed, so that we will be getting the net available ITC for utilization. And finally the fourth statement. The fourth statement will be computation of net GST payable in this. Okay. So net GST payable, computation of net GST liability, net GST liability. So these are the 4 statements that we need to do the computation. So in this particular question, okay. So gross GST on outward supplies and GST on inward supplies under RCM, ITC availed and reversed, computation of net GST payable. Okay. And whenever we read this, so properly we need to put it. So in the first cases, that is this sales, car rental income, income from services provided to government of Gujarat, definitely these details and all will come in statement 1 only. It will not come anywhere else. Okay. So related to the sales, they have given some data, so that we need to proceed. So the total sales will be 30 lakhs. For this sales, they have given some data. You can see here, sales in Gujarat. So where is this person located? This person is Motor Power Private Limited, registered under GST, is engaged in manufacture of 5-seater luxury cars at its factories located in Rajasthan, Uttar Pradesh and Gujarat. Now they have given the details of the factory located in Gujarat. Okay. And they have obtained separate registration in each of the states. It also enters into contract for providing these cars on rent to corporate clients, which means they have both goods and services transaction, wherein the cost of fuel is included in the value of supply. Usually when cost of fuel is included in the value of supply, the rate of GST will be 5%. Okay. So therefore we need to check that, and RCM also will be applicable in this case. Okay. We need to keep that in mind. So now Gujarat factory details I have given, sales. So for that sales which is in Gujarat, 14 lakhs, which means it is a intra-state supply. chargeable to CGST SGST. And then sales in states other than Gujarat will be 6 lakhs. So that 6 lakhs will be coming under inter, so which means it is a IGST liability. Exports under letter of undertaking LUT 10 lakhs, there is no GST because it is export under bond or LUT, but this will not be considered as exempted turnover for ITC purpose. Okay, so that breakup we need to write it in the first statement. So what is that? Gross GST payable. Okay, so but the answer is not prepared like that. You do the statement in that way in exam. So intrastate sales in Gujarat, value 14 lakhs, CGST SGST. Interstate sales, that is 6 lakhs, IGST. Exports, you take it in the value column, but don't take it in the tax column because we don't have to pay GST because it is under LUT. Okay, so this is the details about sales. And the total also you need to check sometimes. 14 plus 6 plus 10, so that will be 30, and here also it is given as 30. Then car rental income. What is a car rental income? 0.5 lakhs. For that car rental income, actually it is a services. Related to car rental income, they have given one note. See this. Car rental income pertains to renting of cars to Zame's Travels Limited. So basically, who is a supplier? Supplier is a body corporate, Motor Power Private Limited. So supplier body corporate means definitely it will not come under RCM, because for RCM, renting of motor vehicles, 3 conditions should be satisfied. Supplier should be other than body corporate, the recipient should be body corporate, and the rate of GST should be 5%. Here the supplier is other than body corporate and the recipient is body corporate. Yes, recipient is body corporate because the recipient is Zame's Travels Limited. Recipient is body corporate and the rate of GST is 5%, but it will not be coming under RCM. Why? Because the supplier is body corporate, due to that reason. Okay, then next, registered in Gujarat, so intrastate. Cost of fuel is included in the value of said supply, let it be, so which means 5% will be the rate of GST. Further, consumables procured from registered supplier located in Gujarat include diesel worth 0.75 lakh used for running of the car, so rented out to Zame's Travels. Assume that except diesel, no other inputs or input service is used in providing car rental service. That's actually for inward supply. First, for outward supply, we will see outward supply, it is not coming under RCM, but the rate of GST is 5% and it is intrastate. Why intrastate? For car rental, we don't have any specific provision in place of supply, so general provision. Location of recipient will be taken as a place of supply. Recipient is in Gujarat, so it is intrastate. So this is the next transaction, car rental income. So 0.5 lakhs, that is 50,000, and CGST SGST 2.5% and 2.5%. Okay, then next one, third one, if you see third outward supply, income from services provided to Gujarat Government Administration. So this is services provided to government, 2.5 lakhs. But we need to understand what service, because with respect to service provided to government, so we have certain exemptions due to that reason. So see the point number 11, service provided to Gujarat Government Administration or under a health training program, 51% of the total expenditure for the said program is borne by the government. So definitely we don't have any exemption. So we have one exemption which says that services provided to government, so wherein in relation to a training program for which 75%, greater than 75% of the expenditure is borne by the government, then it will be exempted. So but here if you see, so what is the expenditure borne by the government? Just 50%. So which means the exemption is not available and it is to Gujarat government. So intrastate supply 2,50,000. So 22,500, 22,500. Here you try to give the notes in the table itself. I have given here note 10, 11, 12 like that separately. So first one, export of goods related point 0 rated. Second one related to that rate of GST for cost of fuel is included. Services provided to government, so only it should be greater than or equals to 75%, but here it is less than 75%. So due to that reason we will not get the exemption. So these notes in brief you try to give it in the table itself. Okay, so now we got the gross GST payable over, outward supply details over. So what is a gross GST payable? So CGST, SGST and IGST. So that will be 22,500, sorry, 1,49,000. So 750, 1,49,750 and 1,49,750 and 1,08,000. So this is our CGST, SGST and IGST gross GST on outward supply. We don't have any other details because all these points are related to these receipts and payments only. So these are the 3 receipts related to that we have seen. Then when it comes to inward supply, so these are payment means inward supplies. For these inward supplies we need to analyze whether we have anything covered under RCM. Okay, so raw material, So inward supplies will come in two places, that is statement 2 also it will come, also it will come in statement 3. So both in 2 and 3 also it will come. If it is RCM liability, it will come in statement 2. If it is RCM liability on which ITC is available, it will come in statement 3. Sometimes it is FCM liability but ITC is available, it will come in statement 3. First, raw material 4.5 lakhs. Related to this raw material 4.5 lakhs, they have given some part. See this below. Raw material worth 0.5 lakhs purchased from a registered supplier located in Gujarat were destroyed due to fire in the factory and thus could not be used in manufacturing process. Remaining raw material has been procured from various vendors located in Maharashtra. So out of this 4.5 lakhs, 0.5 lakhs we cannot take ITC. Why we cannot take ITC? Because we have a block credit 17 subsection 5 which says that if inward supplies are used for outward supplies, then we can take ITC. But if inward supplies are lost, destroyed, etc., then we cannot take ITC because it's a block credit. So accordingly 0.5 lakhs is gone. Remaining 4 lakhs purchased from Maharashtra, which means it is interstate IGST. So see the ITC statement. In this ITC statement, raw material 4 lakh 50 minus 50,000, only 4 lakh, IGST 72,000. Okay, so that we got. Next one, related to rent paid 1 lakh, that is an inward supply. So this case, first case, it is not RCM, it will come only in statement 3, it will not come in statement 2, it will come only in statement 3. Then rent paid again. So rent, we don't have anything on our RCM. Yes, we have renting of residential property for to a registered person is RCM, but otherwise it will be FCM. Related to rent, they have given 1 point. Rent has been paid for factory building located in Gujarat to its owner registered in Gujarat. So it's a intrastate supply. So FCM liability only because the supplier is registered and it's not a residential property. So due to that reason, just it will come in statement 3. ITC is available. We don't have any restriction for the rent with respect to property. So we can take ITC. So on this 1 lakh, CGST SGST. So it will come in the ITC, CGST SGST 9,000 and 9,000. And thereafter, the next one, consumables. Related to consumables, 1.5 lakhs. So for consumables, whether they have given any point here, yes. So 1.5 lakhs consumables they gave here. So consumables in the car rental point, consumables procured from the registered supplier located in Gujarat include diesel, so excise and VAT paid worth 0.75 lakhs used for running the cars, so rented out to Zamesh Travels, which means definitely on 0.75 lakhs there is no ITC. So because on which excise and VAT is paid, excise VAT is paid means GST will not be there. So on remaining 0.75 lakhs only, so we will be able to take ITC here. Okay, but what happens here is that so the rate of GST except on renting of cars, wherein so on renting of cars, the rate of GST is 2.5%, 2.5%. It is important to note that the credit of input tax charged on goods and services used in supplying the service of transportation of passengers by any motor vehicle designed to carry passenger, where cost of fuel is included in the consideration charged from the recipient, is not available. So ITC is not available except the credit of input service in the same line of business. If you see here 0.75 lakhs, we will not be able to take, and no other inputs or input service is used in providing car renting service, means remaining 0.75 lakhs is not for car renting. So remaining 0.75 lakhs is for manufacture of cars. So definitely we can take ITC with respect to the consumables. Okay, so 0.75 lakhs we can take consumables because total 1.5. And where is that consumables, remaining consumables purchased? So consumables procured from registered suppliers located in Gujarat include, means everything is purchased within Gujarat. So CGST SGST, you can see here consumables procured from suppliers in Gujarat 1 lakh 50 minus 75,000, remaining 75,000 CGST SGST. Are you understanding this? So that is an important point, so please keep in mind. So very good question it is, lot of information is there. So just the ITC part it will be coming. So in statement 3, then security services, security agency services we have under RCM. So therefore we need to check that from whom we have received 0.7 lakhs. So payment for security services, service provided by supply of security personnel for the tax period has been made by Safe and Secure Solutions Private Limited. In case of security agency services, supplier should be other than body corporate, but here the supplier is body corporate. So due to that reason, it will not come under RCM. Again, it is FCM liability only, and from a company located in Gujarat, means CGST SGST, and not registered, let it be. So and not registered under GST. So Safe and Secure Solutions Private Limited, supplier is other than body corporate, then only RCM, but supplier is body corporate, a company located in Gujarat and not registered under GST. So it is taxable under FCM, and first of all GST is not paid. So on 0.7 lakhs, 0.7 lakhs, that is 70,000 nil. So why nil? So because first of all GST should be paid, now it is taxable under FCM, but GST is not paid. That's why it will not come anywhere. But we need to write just the note related to this in the statement. Okay. Then general insurance of cars manufactured. So generally repairs and maintenance insurance and all is block credit, but not for the cars manufactured. We can definitely take ITC. But related to that, general insurance service have been availed from Dividend Insurance Company Limited registered in Gujarat. So CGST, SGST, definitely we can take ITC with respect to this. But this insurance for car manufacturer, there is no restriction. So 2.5 lakhs into CGST, SGST. So that is 22,500, 22,500 into 9%, 9%. Then next one, so there is one more point. Yes, that much only. Works contract service 1.6 lakhs, but related to works contract service we have a blocked credit. Okay, so keep that in mind. So you see that works contract service availed from Chitra Builders, Gujarat, have been used by the company for construction of a foundation on which the machinery to be used in production process is to be mounted permanently. Actually it is an exception. So generally construction expenditure, works contract, etc., we cannot take ITC, but if it is received for the purpose of construction of a plant and machinery, definitely we can take ITC with respect to this. So and it is received from Chitra Builders, Gujarat. So location of supplier Gujarat, location place of supply will be location of immovable property, that is also Gujarat. So CGST, SGST paid, and we can take ITC, and we don't have any RCM related to this. So 1.6 lakhs, 1.6 lakhs CGST, SGST liability. Then next one, audit fee. Audit fee 50,000. For audit fee, they gave 1 point. Audit fee is paid to a firm of chartered accountants, Messrs. Pandya and Associates, registered in West Bengal with an aggregate turnover of 30 crores in the preceding financial year for conducting the statutory audit of the company. We don't have any restriction we can take. In the preceding financial year, the firm raises an e-invoice without IRN, means it's not a valid invoice. Actually, 30 crores means they are required to give e-invoice. If 5 crores they exceed itself turnover, they have to give e-invoice. But they have not given a proper e-invoice, which means ITC cannot be availed. So that is one restriction. Even though there is no other restriction in input tax credit, but because of the e-invoice not issued, so ITC cannot be availed on the audit fee in this case. So with respect to this 50,000, ITC cannot be availed. Then next one, bank charges 10,000. For that bank charges are towards various service availed by the company during a month with regard to its current account maintained with the money bank registered in Gujarat. So bank is in Gujarat, so it's an intrastate. The bank issued a consolidated tax invoice for all such service at the end of the month. Yes, they can do that monthly, containing the details of tax charge, description of service, total value, GSTIN of the recipient. So yes, that is sufficient to take the ITC. We don't have any restriction. So definitely ITC is available. So it will come only in statement 3, no RCM liability in this regard. And 10,000 CGST, SGST liability, you can see 900 and 900. Then another inward supply, membership of automobile association, generally membership of a club association, etc., it's a blocked credit. So automobile association is registered in the state of Gujarat, but we cannot take ITC because membership of a club, health and fitness center is blocked credit. But basically, is it a club? No. Automobile association, health and fitness center, no. Membership of a club, health and fitness center is only block credit, but automobile association is not a club, health and fitness center. So on the CGST, SGST paid can be taken as ITC. So 900 and 900. So is there any other inward supplies? That much only. And all the points are covered. Yes, all the points are covered here. And we don't have anything. Opening balance. This is the opening balance we need to take. So opening balance 50,000, 26,000 and 35,000 we are taking, and that's it. So we got the total ITC. So we don't have anything in statement 2, just in statement 3 we have CGST, SGST and IGST. So what is that? CGST, SGST, IGST comes to 1,04,450 and 80,450 and 1,07,000. Now important point, we need to check the applicability of Rule 86B. For that, the taxable turnover should be more than 50 lakhs. Yes, the taxable turnover should be more than 50 lakhs. Here if you see the value of taxable turnover means wherever GST is there, that alone you take. So value of supply, first case it is 14 lakhs and next 6 lakhs, that is 20 lakhs, and next 50,000 wherever GST is there, that only you take, plus 2,50,000, so that will come to 23 lakhs. So definitely the taxable turnover is not more than 50 lakhs. Only when taxable turnover more than 50 lakhs we need to apply rule 86B. Here we cannot apply. Second condition is what? They should have ITC more than their liability or equal to their liability, but here also that point is not there. Okay, so normally we will do the net GST payable, so gross GST and minus ITC, so we will have the net GST. So if you see 1,08,000 is the liability, 1,07,000 IGST, all credits are less than the liability, so the net GST payable is there. Okay, so only thing, lot of points are there, but much complication is not involved. If you know the provisions, you will be able to arrive at the answer for this. So this is about question number 34. Okay, now we are moving on to question number 35. MS Limited is a GST registered company. During the month of October 2020, the company has undertaken the following transactions and want you to work out the GST output liability, admissible ITC, and amount that will be paid in cash by the company. So which means we need to compute the net GST payable. Where is this company located? So this company is a registered company. They have not given any other details apart from that. And then the rate of GST is 18%, 9%, 9% on all goods and service except GTA services. For GTA service it will be 2.5, 2.5 and 5%, and all the amounts indicated herein is excluding the GST. So which means that the given amounts are exclusive of tax. The company has indicated that to you that the GST liability for October 2020. So right now we are required to do the computation for October 2020, and for October 2020 for their main product alone is 54 lakhs of CGST SGST and 72 lakhs of IGST, and the eligible credit on inputs and input service is 1.45 crores of IGST and 20 lakhs each of CGST SGST. Apart from this, they have given the other details. Okay, the company has provided you other details which is not part of the above. So but these things straight away can be taken for calculations. So here what will happen in our first statement? So what is our first statement? Computation of gross GST payable on outward supplies. So in that gross GST on outward, so already we have some liability, CGST, SGST and IGST. So what is that gross liability? 54 lakhs of CGST liability and 54 lakhs of SGST liability and 72 lakhs of IGST liability. Again, somewhere in second statement that is related to RCM liability, and the third statement that will be related to ITC. Okay, so in that ITC, so there is again some balance which is already given. Okay, so what is that? CGST, SGST and IGST. So what is that? Balances of CGST, SGST, IGST which is already there. You can see somewhere like 54 lakhs, 20 lakhs of CGST, 20 lakhs of SGST and 1 crore 45 lakhs of IGST. Okay, so this is the ITC that they are having, and based on this we need to do the computation. So see that. So first transaction, the company has provided you the other details which is not part of the above as under. During the month of October 2020, the company offered a special discount of 25% on a product. So there is a discount of 25% on a product, the sale of which it intended to discontinue from 1st December 2020 onwards, and issued credit note to the dealers. The product was lying in the stock with the dealers, and the discount offered to the customers was borne by the company by issuing the credit note. The amount reimbursed to the dealers for the discount given to the customers in the month of October 2020 was 36 lakhs in the course of interstate. So is this credit note allowed as a reduction? No. So first of all, credit note should not be issued because it's a post supply discount. So because the company offered a discount on a product the sale of which is intended to be discontinued from 1st December and issued a credit note to the dealers, means already the goods have been sold. So it's a post supply discount and this is not allowed as a reduction. Okay, so post supply discount, and which is not allowed as deduction, and it will be ignored. Okay, you can see here after sales discount nil. Okay, then next one, second point, the company sold a van used for personal transport by auction. The van has been purchased at 3,20,000, the depreciated value at the time of sale was 1,40,000, no credit was taken. So generally when there is a sale of motor vehicles, used motor vehicles, we have one notification 8 of 2017 which says that they can go for the depreciable value of the asset. So the value will be sale price minus depreciable value. But remember, this will be applicable only to vehicles, certain motor vehicles, and that too these motor vehicles are sold after usage and they have not taken ITC. So then the sale price minus depreciable value. So what is the sale price? 1,50,000. 1,50,000 minus 1,40,000, 10,000 will be taken as the depreciable value on which GST payable, and it is given as intrastate. Okay, so you can see here that reference. So notifications 8 of 2018, sorry I said 8 of 2017, it is 8 of 2018. Sale of one used for personal transportation, GST payable on sale price minus depreciable value. Therefore, the GST payable on 1,50,000 minus 1,40,000, 10,000. So on the 10,000, CGST SGST will be 9% and 9% that will be taken. Okay, and next one. Third, the company has a policy of raising invoices separately towards transportation cost of their products on their dealers at the time of invoicing for the product sold to them. The company is collecting GST at the rate of 5% on all the transactions, and the amount is collected as a percentage of value of the goods supplied irrespective of the distance involved. The amount collected during the month of October towards transportation in intrastate is 6 lakhs and interstate is 4 lakhs. Generally, when the transportation cost is incurred by them and it is recovered, okay, and they are collecting GST at the rate of 5% on all transactions. And what is the rate of GST that is applicable, that we need to understand here. So generally the rate of GST is 9%, and service except for transportation the rate of GST will be 5%. Now if you see here, what is happening is that they are taking 9%. Why they are taking 9%? Because they are selling goods and they are also providing transportation. Remember, they are also providing transportation services, correct? The company has a policy of raising invoices separately towards transportation cost of their products, let it be, but they are also doing transportation. So supply of goods plus transportation, these two are two separate supplies, all are taxable, naturally bundled in the ordinary course of business because they are only doing the transportation. What is the principal supply? Sale of goods. Sale of goods is taxable at what rate? 9%. So due to that reason, this transportation also will be taxable at 9%. So for intrastate 6 lakhs and for interstate 4 lakhs into 18%. Okay, so that is about the composite supply application for this. Then the security establishment of the company caught an employee who had stolen bearings of value 2.5 lakhs during the month of October. Bearings could not be recovered, but the company has successfully recovered the cost from the employee, and IGST credit of 45,000 has been taken by the company on these bearings. So can they take ITC with respect to this? No. So because if the purchased goods are lost, destroyed, written off, or stolen, here they are recovering the money from the employee, but it is irrelevant. When they are recovering the money from the employee, that is irrelevant for the purpose of ITC. So in ITC, this 45,000 will not be coming into any effect. Okay, so you can see here in ITC, so this ITC computation is below eligible ITC. There is some already eligible ITC. So of 20 lakhs, 20 lakhs and 1 crore 45 lakhs. Here you can see 20, 20, 1 crore 45. From that, ball bearing stolen has been reduced. Okay, and as this is reduced, ITC is reversed. So don't bring it under disposal of business asset on which ITC is availed. No. And even employer-employee, they are not supplying the bearings. So therefore, it is not coming under that employer-employee transaction also. So consequently, it will not be covered here. Okay. So you can see that into this computation. So ball bearings which is stolen, so 0.45 lakhs. And next one, we have the security establishment. The company supplied food and beverages to the employees on all the items are priced at 10% of the actual cost to the company. During the month of October 2020, the company has charged 50,000 to the employee. So this is a related party transaction. As it is a related party transaction, we need to determine the value under Rule 28. So as per Rule 28, we need to take open market value. 50,000 is 10%. So then 100% is how much? 100% will be 5 lakhs. So that will be taken as a value under Rule 28, open market value. So 5 lakhs, and it is what food and beverages to the employees, so it's a intrastate. Assume that it is a intrastate, so CGST SGST so will be applicable. So 9% or 9%. Why are we not taking 5%? Usually for food and beverages 5% is the rate, but as the question says all goods and services will be 9%, 9%. So that's why we are taking 9%, 9% instead of 2.5% and 2.5%. And next one, during the month of October 2020, the company purchased 10 mobile phones in its name and distributed to employees to enable them to perform their duties more efficiently for the company. The total price of the phones was 1,20,000. At the end of the month, the company sold these mobiles to employees. The company recovered only 20,000 from the employees. Again, it's a related party transaction, and the value will be determined as per Rule 28. Okay, value under Rule 28. Now, if you see, the total price of the mobiles was 1,20,000. 1,20,000 divided by 10, so that will be 12,000. So it does not exceed 50,000. Why should we pay GST in this case? Are they giving it as gift? No, they are selling for 20,000. Means it is not for gift. So if it is a gift, it will not be a supply value up to 50,000 rupees. But here they are selling, so which means that, so definitely it will become supply under 7(1)(a), and the value will be as per 28. So therefore on 1,20,000 into 9% and 9%, and it is clearly given that you take it as intrastate transaction. That's why we are doing that way. Then the company registered office is located in a building which belongs to the local municipality. The monthly rent is 1.5 lakhs. So this is an inward supply, correct? So on this inward supply 1,50,000, they need to pay GST under RCM. Why they need to pay GST under RCM? So because municipality means government service to a business entity, so it will be inward, and inward supply under RCM, and even we can take ITC with respect to this. There is no restriction. ITC can also be taken. So first it should come in second statement. So see this RCM liability. In that RCM liability, so rent paid to municipality, and municipality definitely rent will be intrastate because municipality is in the same state. There also the property is also in the same state. So intrastate 1.5 lakhs into 9% and 9%. Also it will come in ITC. Okay, rent paid to municipality will come in ITC. So two places it will come. Okay. Then next one, the whole-time director of the company was paid a salary of 5 lakh during the month. He was also paid. So salary 5 lakhs is not a supply, employee to employee in the course of employment. But he was also paid 20,000 towards sitting fees for his participation in the meeting. Again, it will be coming under inward supply, and sitting fees paid to the director will be coming under RCM, and it is a business expenditure, so ITC can be taken. Again, this 5 lakhs whole-time director, so it will definitely be coming under intrastate because the director services. Okay, so you can see here first RCM liability we have with respect to sitting fees paid to director, and 20,000 into 9% and 9%. Okay, so then thereafter even we can take ITC with respect to this sitting fees paid to the whole-time director. These are the two treatments related to this. So all the transactions are completed. So first if you see, the gross liability here is 55.107, 55.107 and 72.72. Then ITC you go. ITC first already they have given ball bearings is reduced, mobile phones. They purchase mobile phones na. As they purchase the mobile phones, they are not giving it as gift. So they are supplying. So they can definitely take ITC with respect to the mobile phones purchase. So within the state that, so that is actually hidden point. And this is the total ITC. And this ITC can be set off with the liability. If you see the IGST credit, we have more. So that is set off with IGST liability, then with CGST, SGST, and then with CGST. Because we have credits of CGST, SGST same. So therefore any manner, any proportion we can do. So accordingly it is done. And after exhausting IGST credit, CGST and SGST credit is to be utilized. Okay. So then the GST payable will be, GST payable by cash will be 18.123. Here there is a slight change. If you see the gross liability, what is the gross liability? 55.107 plus 55.107 plus 72.72. So that will come to 182.934. 182.934 minus ITCs if you reduce 20.261 minus 20.261 minus 144.55. So that will be minus. So which means that we have more credit. We have more credit than the liability. Okay. Then why the net GST payable in cash will be positive? It should not be positive. One more aspect. Why can't we take Rule 86B? So Rule 86B, you check here. What is there? A taxable turnover. So taxable turnover, if you see the liability itself is 54 lakhs for this month. So definitely the taxable turnover of this particular period will be more than 50 lakhs. When it is more than 50 lakhs, definitely we need to apply that 1% point in this case. So that rule 86B point is also missed. So that needs to be added. Okay. So see here. First, gross liability 55.107, 55.107, 72.72. How much liability can be utilized? 99% only can be utilized. Okay. Again, I am repeating. If you see the gross liability itself is in 55 lakhs. So definitely the turnover will be, taxable turnover will be more than 50 lakhs. So no doubt rule 86B will be applicable. So 1% definitely we have to pay in the electronic cash ledger. Okay. So carefully listen how the computation of net GST liability will be in this case. So first we need to take CGST, SGST, IGST. What is our gross liability? What is our gross liability? The gross liability will be 55.107 lakhs and 55.107 lakhs and 72.72 lakhs. Okay. Then we need to pay 1% definitely through cash ledger. Okay. So which means, so balance 99% only we can utilize out of the credit ledger. So we are first reducing minus 1% payable through cash ledger, minus 1% payable through electronic cash ledger. How much is that 1%? 55.107 into 1%, that is 0.55107, 0.55107 and 0.7272. So what is the remaining 99%? So minus 55.107 into 99%, that will be 54.55593, 54.55593, and here 72.72 into 99% will be 71.9928. Now if you observe carefully, IGST credit can be utilized because the CGST SGST liability will be same. So when the IGST credit is utilized, first we will utilize fully for 71.9928. Anyhow we are paying this now 1%. So the remaining, so what is the total IGST credit that we are having? The total IGST credit is 145 we have. Okay, 145, sorry, 145 minus 0.45, 144.55. So 144.55 minus 71.9928. So that will be 72.5572 will come. Okay, that I am dividing by 2. So therefore here 36.2786 and 36.2786. Then we can use CGST and SGST credits. Happily we can use, because what is the CGST and SGST credit that we have? So 20.261, 20.6261. If you see here 54.55593 minus 36.2786, it is just 18.2773. We have 20.261, from that we can use this. 18.2773 can be reduced. So what will happen to the balance amount? So this will become 0. This will become 0. Okay. Now you see that how much should be paid through cash ledger. So GST through electronic cash ledger. So how much is the GST through electronic cash ledger? So if you observe here, the GST that is payable through electronic cash ledger, GST through electronic cash ledger will be, so already that 1%, 0.55107, 0.55107 and 0.7272 plus RCM liability. RCM liability should definitely be paid through cash ledger. Okay, So this is that 1% plus RCM liability 0.153 and 0.153. Now this will be the net GST payable. Net GST payable. So the net GST payable will be 0.55107 plus 0.153, so that will come to 0.70407, 0.70407, 0.7272. This is the final answer with respect to net GST payable. Okay, just keep that in mind. So because see, gross liability will be same, no change. Okay, so here this ITC computation is actually wrong because it is without applying rule 86b. We have to apply rule 86b. When rule 86b is applied, automatically the computation will be like this. Okay, so that's how we need to do this calculation. And 1%, so whenever 1%, first take out that 1%, remaining fully you set off, then RCM liability and GST payable, that 1%, so that is the net GST payable. So remaining and all is correct, only this final computation is wrong. Okay, so that is because this question was old question. At the time this 86b was not there. Now when you apply this 86b, so this is how the computation, just the fourth computation alone, so will be different, but otherwise everything will be same. So you can incorporate this into your learning process. Then next, we are moving on to question number 36. Briefly answer the following questions with reference to the provisions of rectification of mistakes or errors apparent on the face of the record by any authority under section 161. So related to 161, 161 deals with rectification of mistakes apparent on the face of the record, and this is actually in miscellaneous provisions, an untapped area. Maybe they can frame a question on this. Which documents are covered under section 161? So any notice or order either given by the adjudication authority or given by the appellate authority, or any document, okay, decision here means order by either adjudication authority or appellate authority, but mostly decision means it is by the appellate authority or revisional authority, then we call it as decision. Then order by the adjudication authority, or any notice or any certificate or any other document which is given by the officer, so can be rectified. Okay, and who can rectify the errors apparent on the face of the record? Any authority who has passed or issued the decision or order or notice or certificate may rectify any error, but important, which should be apparent on the, means visible on the face of the record in such document. Then what type of mistakes or errors can be rectified? So which are available on the face. For example, so value is 20 lakhs, 20 lakhs into 18%, so multiplication error. So 20 lakhs into 18% is not coming, so but that is 3,60,000 is not mentioned, but 4,50,000 is mentioned, like that. Okay, some errors. Or by mistake they have taken 18%, but the applicable rate is only 12%, so that is also mistake, error apparent on the face of the record. And while discussing, the value is given as 10 lakhs, but in the computation it is taken as 1 crore. There is also rectification of error apparent on the face of the record. So it is a settled law that decision on a debatable point of law is not a mistake apparent on the face of the record. That is, so actually there is a rate related confusion, the debate is there, that is not rectification of mistake apparent on the face of the record. Okay, for example, so the assessee is telling 12%, but the officer is telling 18%, this debatable point and all will not be coming. Assessee also tells 12, officer also tells 12, but somewhere in the computation it has been taken as 18%, like that. Okay, then next one, what is the time limit for rectification? Within 6 months. So no rectification can be made after a period of 6 months from the date of issue of such decision or order or notice. However, if it is arithmetical errors or clerical errors, okay, if it is clerical or arithmetical errors arising from any accidental slip or omission, then the time limit does not apply. So it can be rectified even after 6 months. Generally the time limit is 6 months, but that is not applicable for clerical errors or arithmetical errors. Let's move on to the next question, that is question number 37. In an order dated 20th August issued to GH Private Limited, the Joint Commission of CGST has confirmed an IGST demand of 280 crores. So 280 crores is the IGST demand. The company is disputing the entire demand of IGST and wants to know the amount of pre-deposit it has to make under IGST Act for filing an appeal before the appellate authority against the order of the Joint Commissioner. So against the order of the Joint Commissioner, first appeal. So the first appeal, the pre-deposit entire amount is in dispute. So therefore 10% of the disputed tax, that is 10% of disputed tax, that is 280 crores into 10%, 28 crores, and subject to maximum of 25 crores under CGST, 25 crores under SGST. As it is IGST, it will be 50 crores. Suppose if it is second appeal, then it will be 100 crores. So subject to maximum 50 crores. So therefore whichever is less, 28 crores will be taken as a pre-deposit. That's the answer for this. Assuming that appellate authority also confirms the order of the Joint Commissioner and the company wants to file an appeal before the appellate tribunal against the order of the appellate authority. So, and is there any admitted due? No. So therefore again there is an additional 20%. So already they paid 20%, 10%. Does it mean extra 10% need to pay? No, additional 20%. Additional 20% means again 280 crores into 20%, that is 56 crores, subject to maximum 50 under CGST, 50 under SGST. So therefore 100 crores. So there whichever is less, so 56 crores will be taken. And suppose out of the first appeal, if entire 280 crores is dispute, but in the second appeal only 200 crores is in dispute, then the 200 into 20% will be taken, plus whatever is admitted, that is that 80 crores admitted should be paid. Okay, so many students will get confused here that suppose if it is like additional 20% point, they will think that okay, we have already paid 10, so extra 10 only we need to pay. No, additional 20% we need to pay. So that's the answer for this question 37. Then question 38, Subharti Enterprises collected GST on the goods supplied by it from its customers on the belief that the said supply is taxable. However, later it discovered that goods supplied by it are exempt from GST. Okay, so basically Subharti Enterprise collected GST on goods supplied by it from the customers on the belief that it is taxable, but it is exempted. Means it is what? Collected an amount representing as tax. The accountant of Subharti Enterprise advised that the amount mistakenly collected by Subharti Enterprise is representing as tax. So collected an amount as tax. Remember, so whenever there is collected an amount as tax, definitely section 73 or 74 is not applicable, because 73, 74 is for tax collected. But in this case, we have section 76 that will be made applicable here. Okay. So representing as tax was not required to be deposited with the government. Wrong. They have to deposit. Subharti has approached you for seeking the advice on the same. You are required to advise it elaborating the relevant provisions. So what is the section that we need to give reference? Section 76. So remember the key points. The first key point is no time limit for notice. No time limit for notice. There is no time limit. Usually there is a time limit to give the notice, but in this case there is no time limit to give the notice. And the order within 1 year from notice. Order within 1 year from notice. And the penalty also will be payable in this case, and the penalty will be 100% of amount collected as tax. Amount collected as tax, or 10,000, whichever is higher. That is that 122 subsection 1 penalty. Okay, and interest at the rate of 18%. From which date to which date? From the date of collection. From the date of collection. It's not due date, because it is not tax now. So it is not tax. So therefore from the date of collection till the date of payment. Till the date of payment. So that is about this 76. Notwithstanding anything contained the contrary in any order or direction of any appellate authority or appellate tribunal or court, or any other provisions of the act or rules made thereunder, or any law for the time being in force, every person who has collected from any other person any amount as representing the tax under this act and has not paid shall forthwith means what? Usually forthwith means immediately pay the said amount to the government, irrespective of whether the supplies in respect of which such amount is taxable, that is in respect of which such amount was collected or taxable or not. Where any amount is required to be paid to government as mentioned above, which has not been paid, the proper officer shall serve upon the person a notice requiring him, but there is no time limit that has been specified. Okay, and the proper officer shall, after considering if any made by the person to whom notice is served, determine the amount. And what is the time period? The proper officer shall issue an order within 1 year from the date of issue of notice. no time limit, and he need to pay interest. Interest is payable at the rate specified under section 50 from the date on which such amount was collected by him till the date such amount is paid to him. So covering these key points, you need to develop a paragraph and you need to write that. Okay, so that's what the rocket revision should be so useful to you. So rocket revision, we discuss everything in crisp format, and that you need to elaborate and you need to write. If you know the task, no one will stop you. Definitely you will get very good marks. Then question number 39. So this question number 39 is related to penalty. Radha Swami owns and supplies certain goods costing 30 lakhs in a conveyance hired from money current transporters. Market value of the said goods is 40 lakhs and the tax chargeable thereon is 4,80,000. The goods supplied by Radha Swami and the conveyance owned by Manikaran used for carriage are confiscated. Confiscated. So the moment when you see confiscated, you need to apply section 130. Okay, section 130 should be applied in this case. Since Radha Swami liable for confiscation means the penalty 129 will come. That is a seizure during the transit. But the moment it is confiscated, section 130 means ownership is transferred to the department. Since Radhaswamy has supplied the goods in contraventions of provisions of CGST Act with an intent to evade payment of tax, however, proper officer intends to give an option to Radhaswamy. What is that option called as? Redemption fine. Okay, so redemption fine. In lieu of confiscation, a fine leviable under section 130. Determine the maximum amount of fine in lieu of confiscation. So they're asking us to compute. They're asking us to compute redemption fine. So what is that redemption fine that will be payable in this case? Okay, so simple. Redemption fine payable for goods will be market value of goods minus GST payable thereon. GST payable thereon. So this is the maximum redemption fine. Maximum redemption fine. For what? For release of goods. Okay, what is the market value of the goods? Market value of the goods is 40 lakhs minus GST payable thereon. What is the GST payable thereon? 4,80,000. So here we are taking assumption that this 4,80,000 is the total, okay, total tax. So market value minus GST payable thereon, total GST payable thereon. So that will be 35,20,000. So this is the maximum redemption fine payable for release of goods. And generally whenever we have a penalty, whenever they are asking about CGST Act, you compute as per CGST Act only. Okay, so this is how you need to do. And this 4,80,000 will be taken as CGST only. So market value of the goods minus GST payable thereon. Generally here GST payable thereon will be the total GST. Total GST payable thereon. So this will be the redemption fine. So 35,20,000 will be payable as the redemption fine. So because they did not say minus, like tax payable thereon, that is GST payable thereon. So therefore they are taking this 4,80,000 as the total GST. So 35,20,000, like this you compute, that is sufficient. Okay, and sir, here are we taking this 4,80,000 as CGST or SGST? They have not given the breakup. So we are taking this as the total GST. So 35,20,000. Then the same amount will be payable even under SGST also. So usually what will happen is that the same section is there even under SGST Act. But what will happen is that once a penalty is levied under this section by GST officer, CGST officer only will collect entire 35,20,000. If it is initiated by SGST officer only will collect entire 35,20,000. Even if the question is as per IGST Act also, the answer will be same. 35,20,000 will be taken as the answer. Okay, don't multiply here. So, but other penalties and all we need to multiply with 2. Whatever penalty you need to determine under CGST, you determine, multiply with 2, that will be taken. But this is not a penalty, this is the maximum redemption fine. So therefore this is total, in total it is. Okay, in total. Then next one, what is the maximum redemption fine payable for release of the conveyance? GST payable on the goods. So this is for goods, and for conveyance it is GST payable on the goods. That much we need to pay as maximum redemption fine for release of conveyance, that is 4,80,000. Okay, again I am repeating. So this you don't have to multiply into 2 if it is IGST Act. If it is any other penalty or late fee, we need to multiply with 2, because penalty and late fee we separately determine for CGST, SGST, but maximum redemption fine is only 1. Okay, so we don't have another part in this. Then next one, question number 40. Avatar Industries, a registered person under GST, has sold whole of its business to Rolex manufacturers. Determine the person liable to pay GST. Whole of its business to Rolex, liable to pay GST, interest or penalty under GST law. So before sale, which is determined before sale, means it is pre-transfer dues but still unpaid, due from Avatar Industries up to the date of such transfer. So we have one section 85 which says about whenever there is a transfer of business, so with respect to the dues arising after the date of transfer, the transferee is liable to pay the dues. Whereas if there is a due which is arising before the date of transfer, due here is tax, interest, penalty, etc. Any dues arising to the period before the date of transfer, so both transferor and transferee jointly and severally liable for the dues. Okay, so in this case what will happen, so both Avatar Industries as well as Rolex manufacturers jointly and severally, okay, jointly and severally means what? If one person is not paying, the other person has to pay, so liable to pay the whole of such amount before the date of transfer. Actually it is like, so for the sake of transfer of business, even the transferee is held liable for the pre-transfer dues before the date of transfer. Okay, that is how the provision has been made. This is section 85. So again, long time due, they can make a question on this in the forthcoming exam. Then question number 41. Kulbhushan and Sons has entered into contract to supply 2 consignments of certain taxable goods. However, since it is unable to determine the value of the goods to be supplied by it, it applies for payment of tax on such goods on a provisional basis along with the required documents in support of its request. On 12/1, the Assistant Commissioner of Central Tax issued an order allowing payment of tax on provisional basis, indicating the value on the basis of which assessment is allowed on provisional basis and the amount for which the bond is to be executed and security to be furnished. So what is the date on which provisional assessment is resorted? So that is provisional assessment order has been passed 12/1. Okay, Kulbhushan and Sons complies with the same and supplies both consignment of goods on 25/1 and thereafter paying the tax on provisional basis on 19/2/2000. Usually, so what is the due date of payment? So this is for which month? This is for the month of January. When the supply is made, supply is made in Jan. So for Jan 2021, what is the due date? Due date is 20th February 2021. So by 20th February 2021, so they are making the payment. Okay, so which means that there is no interest on, there is no interest on what amount? Provisional tax. There is no interest on provisional tax. So this is a hidden adjustment, so that we need to check as per section 50. Okay, suppose if this is instead of 19/2, if it is given as 25/2, definitely there will be interest for 5 days. Okay, that is under section 50. No interest on provisional tax under section 50. Whereas differential amount consequent to final assessment order passed by the Assistant Commissioner on 21st March, a tax of 1,80,000 becomes due on first consignment. So with respect to first consignment, so the tax is due. So therefore interest will be payable under section 60. So on what amount? That will be on 1,80,000. So 1,80,000 into what is the rate of interest? This is GST 18%. If it is customs, 15%. Into what is the period for which interest is computed? This will pertain to which period? Jan. For Jan, what is the due date? 20th February. So 21st February to what is the date? 21st March by 365 days. So therefore 1,80,000 into 18% into, so 21st February means we have 8 days in February and March will be 21 days, that is 29 days. 29 divided by 21st March to 21st 21st February to 21st March only, na? No, they are not paying on 21st March. See here carefully. So 1,80,000, Kulbhushan Sons pays the tax on first consignment on 9th April. So they are not paying immediately. The final assessment is completed, but when are they actually making payment? So 9th April. So then for February it is 8 days, March it will be 31 days, and April it will be 9 days. So 48 days. For 48 days the interest will be computed. So 1,80,000 into 18% into 48 divided by 365. So that will come to 44,260.8. So 261 rounded off. Be careful with respect to the rounded off things, because tax, interest, penalty, everything should be rounded off to nearest 1 rupee. Because of not properly doing rounded off, so marks will be deducted. Okay, that is this. Then with respect to second consignment, what happened with respect to second consignment? So see there, they are telling something for second consignment. With respect to second consignment, 4,20,000 become refundable. And what is the time limit within which we need to make application? Within 2 years. So but they are making application for second consignment on the same day, that is 21st March. Tax was actually refunded to it on 5/6/2000. So therefore, what is the period from 21st March to 5th June? Okay, 5th June, what is the period we need to count? So March, 21st March, na? So 25th of January, what is the date? 21st of March. So take out 31 minus 21, that is 10 days in March, and 30 days in April, and 31 days in May, and 5 days in June. 76 days. 76 days. But usually what is the interest free period? 60 days. So from the date of application, within 60 days they need to grant. If they are not granting for 16 days, the interest will be payable in this case. Okay, so if you see here, interest will be payable, but actually what is the time period within which it should be? So if you see here, it's not 21st March they are making application. Carefully you read. Kulbhushan and Sons pays the tax due on first consignment on 9th April and applies for the refund of tax on the second consignment the same day. So it is not on 21st March. If it is on 21st March, we need to count like this. But it is on 9th April. So then we need to count from 9th April to 5th of June. 9th April to 5th of June. So now how many days? Don't count 9th April. So remaining 30 minus 9, that will be 21 days in April and 31 days in May and 5 days in June. So therefore 57 days will be taken. So therefore it is within 60 days. As it is within 60 days, whether interest will be given on refund? No, there won't be any interest on refund. Okay, so therefore from the date of receipt of application till the date of refund of tax, so interest is not payable on the tax refunded with respect to second consignment. Then next one, question number 42. Decide with reason whether e-way bill is required to be issued under CGST Act in the following independent cases. Square Limited, registered in Andhra Pradesh, sends goods to its job worker Cuban company in Karnataka, which is also registered under GST. Value of consignment was 45,000. When the goods are sent on job work, even though the value does not exceed 50,000, so definitely they need to generate the e-way bill. Okay, usually what will be taken as a value for e-way bill purpose? 45,000 plus GST, including GST only. But even though it does not exceed 50,000, job work e-way bill is always required. What are the two cases? Job work, goods sent on job work, and handicraft goods. Then Mr. Bhishma of Telangana started doing business in notified handicraft products as a casual taxable person. He got his first order of 30,000 from Tamil Nadu, which he transports. He is not registered under GST since he has a threshold limit of 20 lakhs. Yes, for a person, interstate supply of goods, they are compulsorily required to get registered. But if they are engaged in handicrafts, they are not compulsorily required to get registered. Consequently, here they are not required to get registered. But even then, e-way bill is required. Yes, e-way bill is required. Okay, so whether the supplier is registered or not registered, once the goods are taxable, definitely e-way bill is required in case of interstate transfer of handicrafts, that too mandatorily, whatever may be the value, whether the supplier is registered or not is also irrelevant. Okay, e-way bill is mandatorily required to be issued. Then who will give, sir? So recipient can generate, or the transporter can generate, or even supplier by enrolling a citizen of India also can generate e-way bill. Then next one, this is a question which is in RTP number 24. See, RTP I have not separately uploaded, but there are some important questions in RTP of May 24 and November 24 that I have incorporated into this MIGHTY50 itself. Okay, so Agora Limited exported certain goods to its customer located in Germany, against which a refund of IGST amounting to 50 lakhs was claimed and received by Agora Limited. The sale proceeds covering 50% of the value of exports were immediately received by Agora Limited. Okay, so total what is the export of goods? So export of goods IGST is 50 lakhs and refund is claimed at the time of export. And in case of export of goods, there is a condition that they have to realize the proceeds within the time limit under FEMA. That time limit under FEMA is 9 months from the date of export. So in this case, this whatever export proceeds, not 50 lakhs, export proceeds should be realized within the time limit under FEMA, then no issue. Otherwise, whatever refund that they have claimed, but at the time of claiming refund, no need to prove. This is in case of export of goods, no need to prove. So 50 lakhs they are claiming refund, and 50% of the proceeds were immediately received, which means 50% of the proceeds is realized within the time limit. So therefore 25 lakhs, no disturbance to the refund, but remaining 25 lakhs they have to return. What is the time limit? Within 30 days after expiry of the time limit under FEMA, they need to pay that. However, due to financial constraints, the customer failed to pay the balance of sale proceeds within the permissible time limit under regulatory provisions prevailing in India. In view of the aforesaid scenario, determine the amount of refund, if any, which Agora Limited is required to deposit back. What is that? 50 lakhs into 25%, 50 lakhs into 50%, that is 25 lakhs they have to pay, along with applicable interest within 30 days after the expiry of time limit under FEMA. Okay. And also discuss the time limit within which the permissible time limit and within which the sale proceeds have to be realized by Agora Limited. So that time limit is as per FEMA, but actually the time limit is 9 months from the date of export. That you can write. Okay, 9 months from the date of export, which you can write in exam. Even if you are not writing also, it is okay, because that is not actually as per GST, it is as per FEMA. Okay, then anyhow you have IBS, so there it will be useful. Will your answer to subpart A differ if RBI writes off the requirement of realization of sale proceeds on merits? Yes. So because if the RBI writes off the requirement to realize the sale proceeds, we don't have to realize the sale proceeds, and the refund is not required to be paid. What will happen within 30 days if the refund is not paid? It will be recovered under erroneous refund. Okay. So as per Provisional Rule 96B, where the sale proceeds are not realized, but RBI writes off the requirement, the refund paid to the applicant will not be recovered. Okay. Then whether Agora Limited can claim the refund back in case sale proceeds are realized at a later date? Yes. So if they are not able to realize the proceeds within the time limit under FEMA, they have to make the payment within 30 days along with interest, and again within the time limit permitted by RBI. If they are able to realize the proceeds, then how much ever refund that they have paid off will be able to be claimed, but they need to intimate within 3 months from the date of realization of the proceeds. So where the sale proceeds are realized, okay, after the amount has been recovered from him, and the applicant produce evidence about realization within a period of 3 months from the date of realization of sale proceeds, the amount so recovered from him will be refunded, but interest and all will not be paid. But that proceed should be realized within the time limit permitted by RBI. What is that? 6 months. 6 months after 9 months. 6 months after 9 months is the time limit permitted by RBI, and within that time they have to do. What if they are not realizing even within the 6 months? So like even then if they realize in future also, they will not be able to get that refund back. Okay. So therefore in the present case, they have to intimate within 3 months from the date of realization. However, in order to claim the refund, sale proceeds should be realized within the extended period as permitted by RBI. So this is actually a theory question. So related to section 16. Section 16, because it was a Finance Act 2023 amendment not tested in May 24 exam. So definitely there is a possibility of asking this question. It's a very good question which can be tested. Of course, all 50 questions are important only, but out of that, this is possible, very much possible. Question number 44 is also RTP November 24 question. A notice for audit under section 65 is served by the proper officer on the basis of risk assessment to Gumogam Private Limited. Section 65 means which notice for audit? It is departmental audit. So it is departmental audit, and the departmental audit will be conducted under section 65, is served by the proper officer on the basis of risk assessment to Gumogam Private Limited on 2/12/2023 for audit of financial years 21-22 and 22-23. The tax authorities visited its place of business on 20/12/2023 and requested for certain records, documents and books of accounts from the company. So when they visited 2012, the required records, documents and books of accounts are provided by Gumogam Private Limited on 30/12/2023. After in-depth checking of the records, documents and books made available, the audit was completed on 25/3/2023. Okay. And usually, what is the time limit by which audit should be completed under section 65? So 3 months, and it can be extended for a further period of 3 months. Okay, so 3 months, and it can be 3 months, and it can be extended for a further period of 6 months. 3 months, and it can be extended for a further period of 6 months, totally like 9 months. And in class also you will be saying like 9 months they will do audit, and thereafter 3 months they go for summer holidays, and again next year also they can come for audit. Okay, so 3 months, and it can be extended for a further period of 6 months. But what is the date of commencement for audit? Say they are coming to the premises, but we have not given the documents. So what they will do? They will not be able to do audit. They will sit and watch reels in Instagram, correct? How they will be able to commence audit? So when the audit will be commenced? Only when we made available the records. Okay, so therefore here if you see, the date of commencement of audit is the date on which we have made available the records. Sometimes we will make the records available, but they have to decide to conduct the audit based on the records. So the actual initiation of the audit. Okay, so date on which, see this, what is the date on which commencement of audit has taken place? So the date on which records and other details, okay, date of commencement of audit, the date on which records and other documents called by the taxable authorities are made, tax authorities are made available, or the actual institution of the audit, whichever is later. So in the given case, what is the date on which records are made available? 30/12. And what is the date on which they have visited the place? 2012. Whichever is later is 30/12. And from 30/12 they completed by 25/3/2024. Okay, so 30/12/2023 plus 3 months. So plus 3 months means 30. So Jan, Feb, March, 30th March 2024, it is 25th March. So within the time, extension is also not required. So accordingly, the audit has to be completed within 3 months, that is by 30 March. But in this case, it is completed before 30 March. Resultantly, the view of the account that audit was completed after the maximum period is not correct. Okay. And next, one more part is there in this. Gumogum Private Limited has approached you to advise on the said issue. So there is another issue. What is another issue? So, however, the accountant is of the view that tax authorities have completed the audit. For that, we replied, the tax authorities cannot conduct audit of 2 financial years at a time. No. So, audit can be conducted for part of the year, or for the full year, or for multiple financial years. Okay. So, the period of audit to be conducted under said section shall be for a financial year, or part thereof, or multiples thereof. Thus, the view of the accountant that audit cannot be conducted for 2 years is also not correct. Okay, again this is a very good question, like untapped area. So on audit and all, quite a long time they have not asked the questions, so they can ask this question. So in actually November 24 is like that only. May 24 is usually on amendments, November 24 is on neglected areas. That is what the pattern that ICI is usually following. Okay, so the same way May 24 I requested many students to focus on amendments, so accordingly the amendments question came. November 24 is like untapped areas. Whichever are untapped areas like this, that only will be asked in exam. Okay, only a student who knows this provision will be able to write the answer, otherwise they will not be able to write. Okay, now we are moving on to question number 45. Mr. Jignesh of Delhi books accommodation through an e-commerce operator, Plan My Trip, PMTL, registered under GST in Uttarakhand, in a newly established budget hotel, Paras Resorts Limited. So in this case, there is a supplier, and that supplier is PRL, and there is an e-commerce operator. That e-commerce operator is PMTL, and there is a recipient. Who is that recipient? So recipient is Mr. Jignesh. Okay, now what will happen is that here accommodation services is being provided. Is accommodation service a notified service for the purpose of, like 9 subsection 5? Yes, accommodation service is a notified service on which liability to pay GST is on e-commerce operator. So when the supplier provides accommodation services, these accommodation services will be coming under 9(5) provided the supplier is not registered. If you see here, the turnover of PRL in the current financial year is 18 lakhs, means aggregate turnover is 18 lakhs, and which does not exceed the threshold limit, which does not exceed threshold limit. So in this case, whether PRL is required to get registered? No. So they are not liable to get registered. Okay, so in this case, so PRL is not required to get registered because their aggregate turnover does not exceed the threshold limit. Okay, and when their aggregate turnover does not exceed threshold limit, then this accommodation service is provided. It is coming under 9 subsection 5. So the liability to pay GST is on e-commerce operator PMTL. Okay. So PRL raise invoice of 1 lakh to Mr. Jignesh. PMTL collects the payment from Mr. Jignesh and after deducting its fees and other charges from the same, remits the balance amount to PRL. Advise PRL as to whether it is required to obtain GST registration. No, they are not required to obtain GST registration because supplier of services through e-commerce operator is not compulsorily required to get registered. They are required to get registered only when their aggregate turnover exceed threshold limit. Also, whether a tax is required to be collected at source by PMTL under section 52 on the services provided by PRL. So 9 subsection 5 and TCS under section 52 are mutually exclusive. As 9 subsection 5 is applicable, TCS under section 52 is not applicable in this case on PMTL. Okay. And if yes, determine the amount of tax to be collected at source, that is not applicable. So that is the first part of the answer. Suppose in the above case, other facts remaining the same, if PRL supplies accommodation services, is also an e-commerce operator. So now there are two e-commerce operators. So who are the two e-commerce operators? So PRL, this is like e-commerce operator 1, e-commerce operator 1 and e-commerce operator 2. So e-commerce operator PRL and PMTL is e-commerce operator 2 and PRL is registered. Why PRL is registered? Because their turnover exceeds the threshold limit. Now in that case, whether 9 subsection 5 is applicable? No. 9 subsection 5 is not applicable. Why 9 subsection 5 is not applicable? In case of accommodation services, if the supplier is unregistered, then only it will come under 9.5. If the supplier is registered, it will not come under 9.5. Okay. So 9.5 will not be applicable and liability to pay GST is on supplier only. Now the question is, so in the above case, other facts remain the same. If PRL supplies accommodation service is also an e-commerce operator and their turnover exceeds the threshold limit, and PMTL has an agreement with PRL for booking the accommodation at the time when Jignesh booked the accommodation, ascertain whether a tax is required to be collected at source under section 52. Definitely TCS will be applicable. So TCS under section 52. Why? Because the payment is collected by e-commerce operator and the supplier is registered. So 9.5 not applicable. So and the supply is taxable. So TCS is applicable. What is the value? 1 lakh. 1 lakh into 1%. So that will be like 1000. But if you see here, it's an intrastate supply because supplier is located. Where is the supplier located? That is, who is the supplier? PRL. Where is that PRL located? PRL is located in Uttarakhand and the property is also in Uttarakhand. Therefore, it is intra and CGST, SGST will be applicable. So 500 towards CGST and 500 towards SGST. Okay. So they are asking us to compute the amount of tax collected source. And since two e-commerce operators are involved, who is required to collect TCS? Generally, the supplier side e-commerce operator is required to deduct TCS. Okay, generally. But here, basically, if you see, so supplier and e-commerce operator is one and the same. As supplier and e-commerce operator is one and the same, even though theoretically there are two e-commerce operator, but practically there is only one e-commerce operator. Who is that one e-commerce operator? E-commerce operator 2, that is PMTL. So PMTL is only required to deduct TCS under section 52. Okay. So generally, when multiple e-commerce operators are involved, the supplier side e-commerce operator is required to deduct TCS. But when supplier side e-commerce operator and the supplier are one and the same, you can check the amendments in that we have discussed. So quick revision of amendments I have posted. You please see that. So therefore, the buyer side, this is only literally one e-commerce operator. So the buyer side e-commerce operator will deduct the TCS. That is the answer for this. So the first paragraph is about the registration requirement. Then about notified service 9 subsection 5. Then they are required to get registered or not. So application. And finally, TCS is applicable or not applicable. Then another question is about second part. So when multiple e-commerce operators are involved, so which e-commerce operator will deduct? So in this case, the e-commerce operator 2, that is buyer side e-commerce operator PMTL will be deducting TCS, and as it is intrastate supply, 500 each under CGST SGST. So that will be taken as the answer for this. Okay, now we are moving on to question number 46. In this question, so this is a RTP question for November 24 and they have given almost like same details like outward supplies and inward supplies, and based on that we need to compute the net GST payable. And here we have clear-cut clarification about what are outward supplies and what are inward supplies, but sometimes in questions that will not be there. So there will be like few details, like everything will be mixed. In that we need to identify which is outward supply and inward supply. So that is one relief in this question. Mr. Dinkar is the owner of Dinkar Associates, which is registered in Ahmedabad, Gujarat. So where is the supplier located? Gujarat. And he is engaged in supply of various goods and services in the domestic market and exporting the same outside India. During the month of February, he has undertaken the following transactions. So all these transactions pertains to February. Outward supply, transfer tenancy rights to commercial complex taken on rent located in Vadodara for tenancy premium of 8 lakhs to DB Morgan Limited. So transfer of tenancy premium will always be taxable in the hands of the tenant, and in the hands of the property owner it will be depending upon the rent. But here he is transferring the tenancy right, means this person is a tenant. So as this person is a tenant, so therefore it will be coming under taxable. So first it will become supply, and then it will be taxable supply, and it is FCM. So for tenancy premium we don't have any RCM, and we need to check whether it is intra or inter. Location of supplier will be Gujarat, and place of supply will be location of immovable property, because tenancy right means it is in relation to immovable property. Where is the complex located? Vadodara is in Gujarat, therefore it will be coming under intrastate supply chargeable to CGST SGST. So this 8 lakhs, so this will come in statement 1. So all these outward supplies na, so it will be coming in statement 1 only. And you can see this below, what is the rates. So rates, if you see, the rates of CGST, SGST, IGST for hiring out of excavators and dumpers are 6%, 6% and 12% as regards the supply received as merchant exporter. Mr. Dinkar paid GST at the concessional rate by fulfilling all requisite conditions thereof. Rate of CGST, SGST and IGST for all other supply of goods or service including supply of manpower is 18%. So therefore we need to take 18%. So on these 8 lakhs, CGST 9% and SGST 9%, 72,000, that will be the first one. Then the second transaction, if you see, hired out excavators and dumpers along with operators. So there are two supplies, hiring of excavators and dumpers and supply of operators to mining leaseholders of Kutch district. And in below we have already seen both are taxable. Hiring of excavators will be taxable at 12% and manpower is taxable at 18%. So both are taxable. Now we need to check, is it naturally bundled or not. So wherein it is clearly mentioned that the excavators or dumpers are invariably hired out along with the operators. Similarly, operators are supplied only when the excavators or dumpers are hired out, which means it will be naturally bundled. So it will come under composite supply. As it is composite supply, we need to take the principal supply. What is the principal supply? Hiring of excavators. So therefore the rate of GST will be 12% and it will be FCM, whether it is intra or inter. So here hiring of excavators, for hiring we don't have any specific provision, so we need to go by the general provision. So location of recipient will be taken. So recipient is in Gujarat, therefore it will be coming under again intra, but remember the rate is 12%. So what is the value? The value will be 10 lakhs plus 2 lakhs. So whichever is taxable, you please put it in the value column. So first one value 8 lakhs should be taken, next one value will be 12 lakhs. So you can see below 12 lakhs value and 6% CGST SGST on 12 lakhs. And the third transaction, supply goods of value of rupees 35 lakhs to Choksi Limited, Jamnagar, Gujarat, including goods worth 10 lakhs supplied to SEZ unit of Choksi Limited in Gujarat. Now if you see here, so 10 lakhs supplied to SEZ unit of Choksi Limited in Gujarat, okay, and with respect to this 10 lakhs, it is zero rated supply. Supply to SEZ unit is a zero rated supply. Whenever they are supplying to SEZ unit, which is a zero rated supply, there are two options, that is pay IGST or don't pay IGST. So supply it under bond or LUT. If you observe here, Mr. Dinkar always makes zero rated supplies under a bond or letter of undertaking. So due to that reason, we will just take it in the value column, but we will not compute any GST, because it is supply of goods under bond or LUT. So that is the answer for this third transaction. So therefore you can see here just 10 lakhs is taken, but the value column will be nil. Then the next one, if you see in the same point, 25 lakhs. So after you take out this 25 lakhs to Choksi Limited, Jamnagar, Gujarat, so it is intrastate, because goods ending point will be taken as the place of supply, so Gujarat, and again it will be taxable under FCM, and as it is taxable under FCM, it is intra. So therefore the 25 lakhs into 9% and 9% will be taken. So in amount column 25 lakhs, value column CGST SGST 25 lakhs into 9% and 25 lakhs into 9%. Then next one, what we have, agreed to provide consultancy services to Mr. Krishna of Surat, Gujarat, who is an unregistered person, in relation to his newly commenced business for a consideration of 6,80,000 services. But out of the 6,80,000, advance of 1,50,000 has been received in the month of February. So they have agreed to provide the service. So they have not provided the service in February. But in February, they received 1,50,000 as consideration. So that is advance. So therefore, in case of services, only advance will be taxable. So therefore, it will be taxable under FCM, and consultancy services we don't have RCM. Moreover, it is inter services. Location of recipient will be taken as place of supply, so Surat, Gujarat. Therefore, it is intra. But remember, only value will be 1,50,000 because of advances. GST is payable. So 1,50,000, CGST 9%, SGST 9%. Then the next one, if you see, exported the goods to George Incorporation of USA, FOB value 8,40,000. Again, it is zero rated. So as it is zero rated, they are exporting it under bond or LUT. You just take it in the value column, because if at all in the question there is reversal of ITC, it will help you there. So 8,40,000, but there is no GST on this because it is exported under bond or LUT. Then the next transaction, sold a heavy printing machinery purchased from Japan for 5,10,000 on high seas basis. So sale on high seas basis is not a supply. So they are making sale to Dhumaketu Printers, Mumbai, Maharashtra on 10th February. Now, who will be called as importer in this case? Whether Mr. Dinkar is importer or Dhumaketu Printers is importer. So this Dhumaketu Printers will be taken as the importer. So due to that reason, they will be paying customs duty along with IGST. So it will not come in statement 1 because it is not a supply, and it will not come in statement 2 RCM liability. Why? Because Mr. Dinakar is not going to pay the customs duty, and consequently it will not come statement 3 also. So reason being, so ITC, first of all we need to pay GST, then only we will take ITC. So ITC also will not be coming here. Okay, so because first of all Dinkar is not having the customs duty liability including IGST. Then next, supplied goods to Timahi Corporation, China for rupees 12 lakhs on 15 February. These goods were purchased for 10 lakhs from Gemsam Corporation, Japan on 5th February, were supplied in China without bringing them into India. Again, it is not a supply. Why? Outside the country movement of goods. Outside the country movement of goods will not be coming under supply. Okay, will it come under their purchases? Again, no, because first of all, there is no import. As there is no import, the question of customs duty will not arise because the goods are starting outside India and going outside India. So therefore, it will not come in. Again, same statement 1, anyhow it will not come because it is not a supply. 2 and 3 also it will not be coming because it is not an import. Okay. So now after this, and even amount column, value column also don't take this. Now you will get the total output tax. The total output tax is 3,82,500 and 3,82,500, and IGST liability will be nil. The next is inward supplies. So in these inward supplies, the first point, the goods exported to George Incorporation. Here if you see, the goods exported to George Incorporation was purchased by Mr. Dinkar as a merchant exporter. So from Shravan Limited, a manufacturer registered in Bengaluru, Karnataka. So have a look into this. So Shravan Limited is a supplier who is located in Karnataka. And this supplier is making sale to Mr. Dinkar. So Mr. Dinkar is a merchant exporter. Okay, so merchant exporter, and thereafter this person is actually making the export. Okay, so here what they are telling is that whenever the supply is made to a merchant exporter, it will not come under deemed export benefit. So therefore, this will be chargeable to GST at the rate of 0.1%. And Mr. Dinkar, so and for Shravan Limited, as this is chargeable to GST at 0.1%, he will get the benefit of refund of ITC, refund of ITC on account of inverted tax structure, on account of inverted tax structure. Okay, who will get the benefit? Shravan Limited will get the benefit, refund of ITC on account of inverted tax structure. Whereas Mr. Dinkar is making the export. it should be under bond or LUT, under bond or LUT, and this 0.1% can be taken as ITC by Mr. Dinkar, and thereafter they will get refund of ITC, on account of zero rated supplies. Okay, but important condition is that they should be making under bond or LUT. Here if you observe, yes, they are making goods to George Incorporation of USA under bond or LUT, and therefore their procurement will be at the rate of 0.1%. And where is Shravan Limited located? Karnataka. Where is Dinkar located? Gujarat. So therefore it will be coming under interstate, so IGST. Suppose if it is intrastate, then 0.05% CGST and 0.05% is GST. How we know that 0.1% is only collected by Shravan Limited? That is given in the notes here. As regards supplied received as merchant exporter, Dinkar paid GST at the concessional rate. What is the concessional rate? 0.1% by fulfilling all requisite condition thereof. So that's why we are taking 0.1%. So therefore, this 7 lakhs into 0.1%, that is 700. So that is the first inward supply you can see here. So goods purchased as merchant exporter, 700 is taken. And thereafter, we have another inward supply. Second, the heavy printing machinery sold in High Sea to Dhumaketu printers was originally imported by Mr. Dinkar from Japan on 2nd February with CAF value of 5 lakhs and FOB value 4 lakh 50. First of all, Mr. Dinkar is not making the clearance. Already I discussed that point here with you. So therefore, there is no inward supply in this case. Okay. Then Mr. Dinkar paid a sales commission of rupees 5 lakhs to Mr. Kenzo of Japan, his agent in connection with all imports from Japan. Agent means intermediary services. For intermediary services, the place of supply will be location of supplier. If you see here, location of supplier is Japan and place of supply is also Japan, and there is no GST in this case, as both location of supplier and place of supply is outside India. Again, there is no GST on this inward supply first of all. Then imported raw material from Italy under a CIF contract. CIF value of the goods for the purpose of customs included 2 lakhs as ocean freight paid by the exporter on transport of goods through vessel from port of shipment to port of import. So there is a Supreme Court decision. So this Supreme Court decision in one case, in Mohit Minerals case, so whenever we are paying customs duty on the freight, ocean freight, we are not required to again pay GST on the ocean freight separately. So no GST on ocean freight. No GST on ocean freight paid by the exporter to the transporter outside India. So previously it was covered under RCM and now they have removed it. So consequently there is no GST on this 2 lakhs. So just we need to pay now the customs duty. And this ocean freight will be included in the value for payment of customs duty, yes, and even customs duties also will be included. So we need to know the value for the purpose of levy of IGST should be 9 lakhs, yes. So in this case it will come in statement 2, that is RCM liability. Also it will come in statement 3 under ITC. So two effects are there. First, on 9 lakhs we need to pay GST under RCM. So 9 lakhs into 18%, so 1,62,000. The same way it will come under input tax credit also. So 1,62,000 in, that is 9 lakhs into 18%. Then next one. So point number 5, purchased raw cotton for manufacture of garment for rupees 12 lakhs from Mr. Poonawala, an agriculturist of Kutch district. So here usually there are a few goods covered under notification 4 of 2017 in that cashew nuts, so not shelled or peeled, and then raw cotton, then tendu leaves, that is BD leaves, and tobacco leaves supplied by agriculturist to a registered person is covered under RC. Therefore, again it will come in statement 2 RCM liability. Also it will come in statement 3, that is availment of ITC, and it is what intrastate, because supplier is located in Gujarat. Place of supply will be ending point because it is goods, so that is also Gujarat. Therefore, it is intrastate supply chargeable to CGST SGST. So 12 lakhs into first RCM liability, 12 lakhs into 9%, 12 lakhs into 9%, and the same will come even under ITC also. Okay, 12 lakhs into 9%, 12 lakhs into 9%. Then there is one more inward supply, point number 5, that is monthly rent of 35 lakhs payable to THARUN'S Limited Gujarat for the retail outlet, a commercial property. Commercial property means definitely it will be FCM in Ahmedabad, Gujarat, 1/3 of the total space available is used by Mr. Dinkar for personal residential purposes. So personal residential purposes means in this case, so definitely ITC is not available to the extent of 1/3. And where is the supplier located? Gujarat, and that is even place of supply will also be Gujarat. So it's a intrastate supply. It will be taxable under FCM. It will be taxable under FCM, and it is intrastate supply. It will come only in statement 3. That too only 2/3, because 1/3 is used for personal purpose. Na? So 35 lakhs into 9%, 9%. After that, into 2/3, 2/3. Okay, because it is partly used for business, partly used for personal purpose, and we know that how much is used for personal purpose. So at the T1 stage itself, we don't have to bring it in common credit and then do the reversal of 5%. As we know exactly, in the beginning stage itself, we can eliminate 1/3 and 2/3 only can be taken here. Okay, so that is about the inward supply details. Anything else? That's it. And next, compute the net GST payable. Here they have given the opening balance of CGST 35,000, SGST 35,000 for the relevant period. In respect of all the inward suppliers have uploaded their invoices in GSTR1 and it is reflected in 2B, which means it's a match credit. So no issue, they can take ITC. And all figures are exclusive of GST. The amounts given in respect of import and export transaction in rupees have been arrived after conversion thereof. So therefore, as it is export of goods here, we don't have the problem. So we can claim the refund, etc. and all, but there is no question related to the refund here. And now we need to see whether Rule 86B is applicable or not. For that, first we need to see the taxable turnover. If you see the taxable turnover, tenancy rates is a taxable turnover 8 lakhs. And thereafter, hiring of excavators is also taxable turnover 12 lakhs. So total 20 lakhs. But this zero rated will not come in taxable turnover computation for 86B. That is 1% of liability we have to pay through cash ledger. And then 25 lakhs definitely will be coming, so 45 lakhs. Then advance only will be taken, that is 1,50,000, so 46,50,000, and we don't have anything else. So as it does not exceed 50 lakhs, so Rule 86B will not be applicable. And credit wise, if you see 1,62,000 IGST credit, 1,62,700 IGST credit is there. That can be divided equally. 1,62,700 divided by 2, that will be 81,350. 81,350 we can utilize. And then CGST SGST credit, if you see, we have ample 3,53,000, 3,53,000, but we don't have to pay that much amount. So therefore 3,01,150 we have utilized. So therefore it will become nil. If Rule 86B is applicable, here we should have paid 1% through cash ledger. And thereafter we need to add the RCM liability. RCM liability, so 1,08,000, 1,08,000, 1,62,000, that itself is the GST payable through cash ledger. And here, whenever you are computing the headwise itself, you compute 1%. Okay, the headwise you take 1%, separate it. Already we did in the previous question. You separate it headwise and then you do the set off of ITC. Okay, so that is the answer for this. This is actually how usually the 14 marks questions will be. Okay, so don't worry. First, you need to be clear with respect to the template. What you need to do, already I have uploaded one video related to the template, and you can just go through that video and you follow that model. That is sufficient. And just outward supplies, inward supplies, you need to have the knowledge of the provisions. That too, what are the provisions that is being tested here? Exemptions, place of supply, time of supply, and even valuation, little bit, RCM, these areas only. Okay, so just like your 14 marks question in income tax DT, the same way here also it will be like covering multiple chapters it will be. Then we are moving on to question number 47. So this is a May 24 RTP question for 14 marks, and they have not tested this also, and maybe they could literally take it copy paste in the exam also. Who knows, many times it has happened like that. Okay, so Sitaram Industries Limited, a registered entity under GST in the state of Karnataka, is engaged in manufacture and supply of both taxable and exempted goods and services. Following information for the month of October 2023 is provided by it. Outward supplies, inward supplies, again they have given separately. And from the information given above, you are required to compute the eligible ITC available for set off and minimum net GST payable in cash for the month of October 2023. So first we will take the outward supply. So outward supplies means definitely it should be coming in statement 1. And see the first one, sold an old warehouse building in the state of Karnataka to a retail giant in the same state. So actually it is not a supply. Sale of building is not a supply. But for ITC purpose, it will be treated as exempted supply. Remember, it is exempted for ITC. Okay, it will be treated as exempted for ITC purpose, and that too, what should be taken as a value? The value should be stamp duty value. Don't take 30 lakhs. If 30 lakhs itself is stamp duty value, we will take. And let's see, is there any information given here? In respect of sale of old warehouse building, stamp duty paid on 32 lakhs, which means what we need to do is that in the first statement, so gross GST under FCM, gross GST under FCM. In this gross GST under FCM, so we need to take, so particulars, value, CGST, SGST, IGST. So definitely the value column is required. Okay, so because there could be some ITC reversal, value column is definitely required. Then CGST and SGST, IGST. So first one, sale of warehouse. For that sale of warehouse, what will be taken as a value? See here, in respect of sale of warehouse building, stamp duty payable was 32 lakhs. Even though it is not a supply, but we need to take 32 lakhs as the value, and GST liability will not arise because it is not a supply. The next B part, supplied 30 laptops over the counter to Mr. Sudhakar, an unregistered buyer who took it to his residence in Haryana. Over the counter. Over the counter means supply does not involve movement of goods. When supply does not involve movement of goods, location of goods will be taken as a place of supply. But if it is to unregistered person, then it will be location of recipient in the records of the supplier. Invoice issued to him mentions only his name and state. State is there, na, that is enough. So if just the state is mentioned, then location of recipient is available in the records of the supplier. However, his complete address of Haryana is missing in the invoice. That is not issue, no issue. So location of recipient available in the records of supplier. Therefore, it will be Haryana will be taken as a place of supply, and the person is located in Karnataka. Therefore, it will be taxable under FCM, and it is interstate. Okay, interstate. And there is one more thing. Supplied 30 laptops. Supplied boxes for packing the laptops. So boxes, there are two supplies, and we need to know the rates related to this. So you can see here rates of GST 18% generally for both inward and outward, except for special packing of boxes, for which the applicable rate of GST will be 12%. Basically, these laptops and boxes will be coming under composite supply. Both are taxable, composite supply, and the principal supply is laptop, and laptop will be taxable at 18%. So therefore, this 12 lakh second transaction value will be 12 lakhs plus 1 lakh 30,000, that is 13 lakh 30,000, and we need to put it under IGST liability. So what is that IGST liability? 13 lakh 30,000 into 18%. Why IGST? Because location of recipient in the records of supplier is Haryana and supplier is in Karnataka. So 2 lakh 39,400 will be taken as the liability in this case. Then see, provided direct selling agent services. Direct selling agent service is covered under RCM, provided the supplier is other than body corporate or firm. But here the supplier is body corporate, so therefore it will be taxable under FCM only. It will not come under RCM. And supplier is Karnataka, and direct selling agent services, we don't have any specific provision. So general provision, location of recipient, that is also Karnataka. Therefore it will be coming under intrastate. Okay. So with respect to the third transaction, the value will be 4 lakhs taxable, and it is intrastate. So CGST, SGST. So 4 lakhs into 9%, that will be 36,000 CGST and 36,000 SGST. Okay. Next one, provided pure labor service pertaining to a single residential unit in Mumbai, Maharashtra. Generally, construction service in relation to single residential unit is exempted. But please see this. Otherwise, as a part of complex. But what service is it? Is it construction service or repair service? If it is repair service, it will be taxable for erection and installation of renovation works. As it is renovation works, only original works is covered under exemption, that is construction. Renovation work will not come, so it will be like repairs. So repairs means it will be taxable. We don't have the exemption, so it will be taxable. Moreover, so construction service is not covered under RCM, so therefore it will be FCM. And what will be taken as the place of supply? Location of supplier is Karnataka. Place of supply will be location of immovable property. So what is the location of immovable property? So Maharashtra, and therefore it will be coming under inter. Okay. So transaction number 4, that is value 6,20,000, and it will be coming under interstate. So 6,20,000 into 18%, that will be 1,11,600. Then next, number 5, transaction number 5, provided free of cost training in a resort in Puducherry to its agents. based in the state of Karnataka on effective use of the products of the company. Open market value of the said service is 1 lakh. Value of supply of service of like kind and quality. First of all, it is not a supply. Why it is not a supply? Principal agent transaction will come under supply only if it is. There is no consideration na, as there is no consideration, free of cost. So definitely 7(1)(c). But 7(1)(c) principal agent transaction is only with respect to goods, not with respect to services. So due to that reason, so it is not a supply, and we don't have to take even in the amount column also anything. Interest received on fixed deposits from Selection Bank registered in Karnataka. So this interest is again exempted. So there is no GST with respect to this interest on loans, advances and deposits, but it will be treated as taxable for the purpose of ITC purpose. Okay, so 2 lakhs you take, but it will be treated as taxable for ITC purpose, and there is no GST liability in this case. And these are the outward supplies. And next we have inward supplies. So let's see additional information. We have any information there? So sale of old warehouse building that we completed. The company provided a corporate guarantee of 2 crores to Lakshmi Logistics Limited. Is related company. Related company. So definitely it is supply under 7(1)(c), having registered office in the state of Karnataka for loan availed by the latter from Jandan Bank Limited, Karnataka. So usually what will be taken as the value? So value under Rule 28. So in case of corporate guarantee, 1% of the guaranteed amount, 1% of the guaranteed amount. So 2 crores means 200 lakhs. So 1% will be 2 lakhs, and 2 lakhs or actual consideration, whichever is higher. So therefore we need to take 2 lakhs in this case. Simple here, 2 crores means 200 lakhs. 200 lakhs, 10% is 20 lakhs, 10% of that is 2 lakhs, and this 2 lakhs will be taxable. Corporate guarantee, we don't have any specific provision for giving corporate guarantee. So therefore it will be general provision. Location of recipient. Where is the supplier located? Karnataka. Supplier is in Karnataka, and place of supply is also Karnataka. Therefore it will be intrastate supply chargeable to CGST SGST. So 2 lakhs into 9%, that is 18,000 and 18,000. Okay. About the corporate guarantee point, the accountant of the company did not claim ITC, so that's it. So this is the total gross liability. So if you see the gross liability, 36,000 plus 18,000, that will be 54,000 CGST and 54,000 SGST. Then 2,39,400 plus 1,11,600, that will be 3,51,000 will be IGST. Usually now whenever you do the computation like this, when you get round numbers, psychologically you will think that the answer is correct. Not necessary. Okay, not necessary. So sometimes numbers may not be exactly round, so don't get worried when you are not getting the round number in the exam. Okay, till the time you are perfect with respect to your computation, there is no issue. Okay, so here 3,51,000, 54 and 54, that is the gross liability that we have got as per statement number 1. Now we need to proceed to inward supplies. So therefore whenever we are seeing the inward supplies, it may come in statement 2, that is RCM liability, statement 2 RCM liability, and we don't have to take the amount columns and all in this. And statement 3 also parallelly we need to prepare. So what is that statement 3? So statement 3 will be ITC availed and reversed. ITC availed and reversed. Okay. So statement 3 also should be taken. And if it is like, and we don't have value column here, just the particulars, CGST, SGST and IGST. And here also particulars. Opening balance don't take now. Opening balance you take after reversal if there is any. So first you need to take ITC avail minus ITC reversed, and thereafter you need to add the opening balance, because opening balance we don't have to reverse the ITC. Only whatever ITC that is availed during the period only we need to do the reversal. Okay. So particulars, CGST, SGST and IGST. Now in this, if you see, first received debit note in respect of inward intrastate taxable supplies received in the financial year 2021 for the quantity difference. So date of debit note is 2023, this month. Right now we are doing the computation for October 2023. This month debit note is received. For availment of ITC, we should not see the invoice for which the debit note is given for the time limit. We need to see the debit note time limit. Same month, definitely we can take ITC, and it is not RCM, so it will come only in statement 3. So related to G, transaction G. And what is it? It is intrastate. Intrastate means CGST, SGST, these inward supplies, and debit note will be 4 lakhs. So 4 lakhs. This is for the payment, received a debit note, and value will be 4 lakhs. So 4 lakhs into 9%, that is 36,000 CGST, and 36,000 will be SGST. Okay. So that is with respect to this inward supply. You can see here 36, and there is one note also related to this. The accountant of the company did not claim ITC in respect of debit note received for the reason that original purchase related to earlier years. That is irrelevant actually. Okay. It's a trap. So mainly for us to get confused in the exam, they have given this. Then solar panels installed in the factory for providing electricity to be used in the factory intrastate. First of all, solar panels installed in the factory, definitely it will be coming under, so any goods purchased for construction of an immovable property will be coming. Okay, but will it come under exceptions? Exception number 1, if it is not for the own purpose, it is for providing the outward supply to others, then it is available. It is not that. Number 2, so if the expenditure is charged to P&L, is it given that they are charging it to P&L? No. So don't take that assumption. So all exceptions they should clearly mention in the question. Otherwise, the exception is not satisfied. That is the meaning. Number 3, is it plant and machinery? No, it is not plant and machinery, because even if it is plant and machinery, that should be for supplying the goods or services. Okay. So therefore, here they are generating electricity. In turn, that electricity is to be used in the factory, but it is not directly for supply of goods or services. Due to that reason, so this particular 5 lakhs ITC not available. Okay, there is no ITC. First of all, it is FCM liability, and there is no ITC with respect to this. You can see the answer for this. So here, solar panels purchase ITC cannot be claimed in respect of solar panels, since ITC on goods and services both received by a taxable person for construction of an immovable property is block credit, other than plant and machinery on his own account, including when such goods or services are used in the course or furtherance of business. Okay, so here, why are we not taking it, sir? So because it is not, related to supply of goods, it is for generation of electricity, and due to that reason, so it is not covered under the exceptions. But it is a debatable point. Actually, it is a debatable point, and ITC can be even availed. Okay, and therefore it may not be possible under this point, like specifically there is no block credit related to solar panels, and it is, so how can you say that it is construction of immovable property? Because solar panels, once it is done, it can be dismantled and taken to the other place also. So first of all, it should not be kept under immovable property, but as it is a debatable point, there is another argument also prevailing in practice. But for exam purpose, they are telling that it is a immovable property, due to which it is not available. Okay, so but in exam, when we are getting these things and all, what should we do? So sitting in the exam hall, pray God, and realize, like, whatever thought that you are getting, you write that, because these are all some areas which is usually disputed, and mostly it will not be tested, but already they gave this in the question. This question was not tested in exam. Maybe if it is coming for exam, you take that ITC not available. Okay, you mention it as, so construction of immovable property, goods purchased for construction of immovable property. Then next, I purchased employee uniform for 1,000 employees interstate. Uniforms worth 3 lakhs were necessary to ensure the safety of the workers were carrying out the manufacturing activity. So therefore, with respect to this we can take ITC for 3 lakhs, and this is interstate, means IGST. So 3 lakhs into 18%, that will be 54,000. It will come under IGST liability. Remaining uniforms worth 4 lakhs were sometimes worn by the employees outside the factory for personal purpose, which means that it is like gift. It is not actually uniform which is necessary, which is not necessary. So it will be coming under gift. So it will be classified as gift to the employees. So gift to the employees. So any goods purchased and distributed as gifts or free samples, ITC not available. Accordingly, on this 4 lakhs, ITC is not taken. So we have only two inward supplies. So what are those two inward supplies that we are having here? That is this debit note and this employee uniform. So these are the two inward supplies that we have. Okay, and anything else, that's it. So if you see the ITC total, so ITC total is 36,000, 36,000 and 54,000. Okay, 36,000, 36,000 and 54,000 is the ITC that is there, and this ITC can be utilized. So there is nothing in statement 2. Now we are moving on to computation of net GST liability. So net GST liability, should we do any reversal? Are we required to do any reversal? Of course we need to do the reversal, because first inward supply, if you see, that is for debit note in respect of inward intrastate taxable supplies, and these are used for all goods manufactured in the factory. Common, so it's a common, and again uniform is also common. And what is the exempted turnover that they are having for ITC purpose? What is the exempted turnover? If you see here, so where and all we don't have GST, so the sale of old warehouse building 32 lakhs will be exempted turnover for ITC purpose. And next one, so this fifth one, not a supply taxable, so only 32 lakhs. And what is the total turnover? Total turnover, if you see, 32 lakhs plus 13 lakh 30,000 plus 4 lakhs plus 6 lakh 20,000 plus 2 lakhs, because it will be treated as taxable for ITC, plus 2 lakhs, that will come to 59 lakh 50,000. So how much will be the ITC reversed? So here we got ITC availed na, so this is ITC availed. Then ITC reversed minus ITC reversed. What is that ITC reversed? So ITC reversed is simple, that is ITC availed into exempted turnover divided by total turnover. Exempted turnover is 32 lakhs. So into 32 divided by 59 lakh 50,000. So 59.5 that will be taken. Okay. So 32 lakhs and 59.5 lakhs. So if you see that 36,000 into 32 divided by 59.5, that will be 19,361. Exactly, this is a place where you will get a doubt. Is my answer correct? Because I am not getting a round number. So is my answer correct? Okay. So you see here, yes, your answer is correct, because the net eligible ITC for set off will be 36,000 minus this, that will be 16,000. 1 second. 32 divided by 59.5, so 19,361, correct, and remaining 16,639. Okay, your answer is correct, don't worry. So that's what, round numbers you may not get every time. Here also same. Okay, 19,361, so 16,639, and last case 54,000 into 32 divided by 59.5, that will be 29,042. So 29,042, if you take out from 54,000, that will be 24,958. Okay, this will be the net eligible ITC. And now we need to do the set off, but again we need to check whether there is any like rule 86B implication in this case. So if you observe carefully, so taxable turnover alone we need to take. What is the taxable turnover? So this 13 lakh 30,000 is taxable turnover, and 4 lakhs is also taxable turnover, and next this 6 lakh 20,000 is also taxable turnover, and last 2 lakhs, this is taxable turnover only for ITC. So 25 lakh 50, it does not exceed 50 lakhs. So rule 86B will not be applicable. Moreover, liability, if you see, is more than the ITC. So we can set off. Okay, we can set off the ITC 24,958 with 3 lakh 51 and this. So this is the net GST payable in cash. So this is a May 24 RTP question. Again, a very good question. So this November 24 RTP or May 24 RTP. So maybe they can merge these two and also can ask a different question. So possible. Okay. Now we are moving on to question number 48. Bindusara commences the business of supplying taxable goods locally within the state of Rajasthan in April. He is not yet registered under GST. As his aggregate turnover reaches rupees 8 lakhs by the end of the month of June, Bindusara starts exploring the option to sell the goods by him, supplied by him within Rajasthan on a popular e-commerce platform. So their aggregate turnover exceeds or does not exceed threshold limit, does not exceed threshold limit. Aggregate turnover does not exceed threshold limit, and they want to supply through e-commerce operator by listing the goods in a said platform. He approaches you for advice on the following issues in this regard. Bindusara wishes to continue his business without registering under GST. Generally, a supplier of goods through e-commerce operator is compulsorily required to get registered. However, if they are making only intrastate supplies, they are not compulsorily required to get registered. So, are they making only supplies through intrastate? As not given. since it will enhance the compliance burden, can he supply the goods through e-Vastu store without obtaining GST registration? Yes. So we need to write the points. He should not make interstate supplies. He should not make supplies through e-commerce operator in more than one state, and he need to get a permanent account number, and he need to inform the permanent account number, address and state in the portal and obtain a enrollment number, and that enrollment number will be one across the country, and only through that enrollment number they will be making supply of goods through e-commerce platform, and as and when their aggregate turnover exceed threshold limit, they will get registered and this enrollment number cease to exist. Okay, these points we need to write. Discuss the GST implications in case Bindusara supplies goods through e-commerce platform and e-Vastu store. So whenever they are making supplies, they are unregistered. So first of all, it is not covered under 9.5. 9.5 is only notified services. So therefore, there is no GST liability. There is no GST liability on Bindusara. But as and when they register, at that time the GST liability will arise. But for e-commerce operator, just the commission. Whatever commission they get, on that they need to pay GST. Okay. And what are the complaints burden on e-commerce operator? E-commerce operator should not allow unregistered person to make interstate supplies. Number 2, TCS not applicable because the supplier is unregistered, and they have to report all these details in GSTR 8. Now we are proceeding to question number 49. So question number 49 is also a very interesting question. A Limited is registered under GST in Rajasthan, Delhi, Haryana and Punjab. Due to the closure of business activities in Rajasthan with effect from May 31, 2023, A Limited filed an application for cancellation of registration before the jurisdictional tax authorities of Rajasthan. The application for cancellation of registration was filed on June 30, and the registration was suspended with immediate effect from June 30, 2023. So what is the date of cancellation? So date of cancellation of registration, if you see, is 30 June 2023 by the jurisdictional tax authorities. The final order for cancellation was on July 31st. So what is the order of cancellation? The order of cancellation is on 31st July 2023. You are required to advise A Limited regarding the last date of filing the final return by it in Rajasthan. What is the last date by which the final return will be made in Rajasthan? So there was like GSTR 10 final return due date. So there was a confusion whether it is 3 months from the date of cancellation. There are two views here. So view 1, if you see, date of cancellation, okay, so 3 months from the date of cancellation, that is 36 2023 plus 3 months. So that will be coming to what, 30. So June, July, August, September 2023, or order of cancellation. Order of cancellation is 31st July 2023. So whichever is later, that is 39 2023. So but this view is not accepted. This is not accepted for CA exam. But practically there are two different views because of the provision that is drafted in that way. So but this view is not being taken for exam. So they are taking view 2 for exam. What is that? 3 months from the date of cancellation. That is 3 months from this will be 39 2023, and 3 months from the date of order of cancellation. So that will be like 31 7 na, so 8 9 10 2023, whichever is later, that will be 31 10 2023. But I will not agree to this actually, because definitely whichever is later will be the date of order plus 3 months only. So then why they have given that 3 months point? So that is not the intention of the government. So the lawmaker intention is the date of cancellation will be earlier date. Usually earlier date only they will be giving the cancellation, because they will suspend the registration, and at a later point of time they will give the order for cancellation. But who require my opinion or general prevalence? So whatever ICAI says, that only we need to follow. So therefore this only you need to follow for exam, and here that question also they have given the same thing. So 31st October 2023 will be taken as the time limit by which the final return needs to be filed. Okay, then another part is there in this. Further, A Limited was also registered as an input service distributor. Said registration was cancelled with effect from June 30 with an order dated July 31st. Advise whether the final return is required to be filed upon cancellation of ISD registration. Remember, only those who are required to file the returns under rule section 39 subsection 1. So means the regular returns. for them only this will be applicable. But for others, so who are not required to file returns under section 39 subsection 1, this final return is not applicable. You can read this paragraph. So since ISD is not required to furnish return under 39 subsection 1, but under 39 subsection 4, final return is not required to be filed upon cancellation of ISD registration. Therefore, A Limited is not required to file final return for ISD registration being cancelled. Okay, so it's a very good question. Maybe for a 5 marks question, definitely they will be asking this, because there is a pretty much confusion related to this to the students. So that's why they created this question in the RTP. Then the last question that we have on composition scheme. So these are solve workbook question only. And here Subbalakshmi Foods is engaged in supplying restaurant or catering service in Maharashtra. In the preceding financial year, it had a turnover of 90 lakhs from the restaurant or catering service and 30 lakhs from the supply of farm labor in the said state. Further, it has also earned a bank interest of 30 lakhs from the fixed deposit. Subbalakshmi Foods wishes to opt for composition scheme. So you are required to advise Subbalakshmi Foods on the same. So yes, they can opt, because what should be taken as aggregate turnover? So 90 lakhs plus 30 lakhs, and this interest will not come. So 90 plus 30 will be 120 lakhs. So their aggregate turnover during the previous year does not exceed 120 lakhs. And in Maharashtra, 75 lakhs limit will not be applicable. So they can opt for composition scheme under 10(1). And during the current year, they should provide services up to 10% of turnover or 5 lakhs, whichever is higher. So 10% of turnover means 12 lakhs. So they can provide service only to the extent of 12 lakhs. Okay. So beyond that, they should not provide the service if they provide services during the current year beyond 12 lakhs, other than interest. Okay. So then they are disqualified from the composition scheme. Would your answer be different if Subbalakshmi Foods is engaged in milling of paddy into rice on job work basis instead of supply of farm labor, and the turnover of the said activity is 30 lakhs? No, there is no change in the answer. The same will be applicable. Okay. And because see, previous year the problem is about the aggregate turnover. Aggregate turnover, so can be exempted turnover or taxable turnover. The answer will remain the same. Still, they are eligible to opt for composition scheme. Now, current year, if they have this turnover after opting for composition scheme, what will happen? So because this is more than 12 lakhs, they are disqualified from the composition scheme. Okay. So simple here, the maximum turnover during previous year is what? 150 lakhs. 150 into 10% is what? 15 lakhs. So current year, if they are having services more than 15 lakhs, definitely they are disqualified from the composition scheme in the current year, the moment they cross the services value of 15 lakhs. Okay. So that is the answer. This is a simple question related to application of composition scheme. And composition scheme, as it is important for intermediate exam, that's why of late not many questions are being asked at CA final level. Previously they used to ask, because at that time intermediate was beginning, and now in inter itself they are asking questions on composition scheme. So that much will not be coming at final level. Maybe somewhere in MCQs here and there it could be coming. Okay. And these are some important theory questions or concepts, and this you can go through. So this is like, either it can be asked as a theory question in question number 6, or they can create a case study question based on this. So these are some areas which could be tested in exam. So for that purpose, so this MIGHTY50 plus this time I have given some 30 concepts, important theory questions or concepts. These 30 will be sufficient. So now what you need to do for your preparation is that simple. So this MIGHTY50, this theory questions plus rocket revision, those 4 days will be sufficient. So this will definitely give you a good clarity over the subject, and you can go for the exam. Okay. So at this moment, this much time only you have. So kindly do this. Thank you, and signing off. And if you have anything, you please let me know. I'll always be there to support you.